How in the hell? Yep. Hello? Everything's acting so weird today. Ah! Oh, shit. I'm erasing too much stuff. What did I just erase? My chart. Do. Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy. I think this is probably the first video I've done in a month. But we got a new president, President Trump. The swamp is kind of upset right now. They got really destroyed, trying to shove an agenda down on us that we didn't want, or at least a lot of us didn't want. And the rich got richer and the poor got poorer in the past 4 years. And especially us in the stock market can realize how high inflation's got. So the next 4 years, I'm very optimistic. I think we're going to be able to work with the communists, stop all these wars. We'll bring down inflation a little bit. I probably won't affect much. I'm a business owner. I can't trust the government no matter who's sitting up there right now. But maybe Trump can bring us back to some kind of respectability. I've been in business for over 25, 30 years. 30 years, approximately. So I've been through Clinton. I was in a business when I had Clinton years, and it was it was tough until they did Wall Street reform, until they did welfare reform. I'm going to start this over. That makes sense. Okay, let's try it one more time. Hello, this is Washboardjim with a sneaky snake trading strategy. Today I'm going to give you a little preview of a watch list. We definitely have us a new president right now. I tried to do a video a little bit ago and I got a little off course. But I think businesses are going to appreciate the next 4 years. Small businesses, especially, not the big corporates. The big corporates have made a killing in the past 4 years with all that free money that's been printed. We printed more money than we did during the 8 years of Obama, and it caused a huge, not a recession, but a huge inflation that will never be corrected. Now, the core of the rise of inflation might slow down a bit until we get another Democrat back in office, and then we'll see another 10, 15, 20% increase in inflation. But for right now, we've got a new president, and they're going to try to clean house, clean the swamp. And politicians shouldn't be getting so filthy rich up there, for one thing, when they're out there serving the people. So let's see what we can do about that. But I'm expecting a pretty good 2024. I'm going to be buying the dips. The Wall Street, I don't think, in my recollection, that I don't think that they're too happy about having Trump in office because they like all that free money. That free money, bring it in. They don't have to spend their money. They just use the government's money, your tax money. So that's might set off a few of them, but too bad. You got to spend your own money if you're in a business, not keep trying to, get benefits from the government. So Wall Street's definitely changed in the 20 years that I've been watching it. It's got a lot more greedier, a lot worse, and a lot more. You can see now. I mean, it's not hidden anymore. They used to get behind closed doors and move the market, but now you got the internet. You got these politicians that are getting filthy rich off Wall Street. So you just follow their stuff. That's what I've been doing. I like being in the now. So let's get over the watch list. And the SPY right now, I think we're going to pull back. We got a 1, 2, 3 down here, somewhere a little bit around 594. So we're going to magnify this up. I'm going to get rid of this alert so I can see what I'm doing here. And we got a little right about there. Man, I'm having a hard time today. Extend to the left. Oh, I didn't want that. There we go. Create an alert right above that trend line. 594.73, somewhere in that area. As we come down, we could have a 1, 2, 3 bounce back up. We do have lower lows, so I like to see it come back down and try to find the support levels off these three right here. The first one being at 594.73, 592, and then 590 for the long haul. Now, if we look at the weekly, we had one heck of a Trump candle right here. So this thing could easily pull back to this support level right here, right around the 584, and be a strong buy. Right there at 584. So that's that. SPY. Let's see what that looked like on the daily again. Yeah. That's a pretty good drop. Create an alert right there too. Maybe we'll get a double bottom at open. We come in here at open and then bounce off the double bottom and then retrace on down by the end of the day and do a double bottom on yesterday's low down here somewhere in this area down in here. Coin took a little spanking yesterday. And we got Disney broke the 200 on the weekly. I was on the daily. So we got Disney here breaking the 200. So now the 200 becomes support right around 101, 101.31 for it to stay bullish. If not, she'll drop down below it and hit the 9 EMA. It's on the daily. But yeah, I definitely keep Disney on watch now. Yesterday traded the IWM. A little put. Got into calls, traded the calls. And then we got the Donald. Nile was down yesterday. China's down. China's down again pre-market today. So you could get a little cat bounce on up and then pull back down. But definitely keep a good eye on China today and see if we can get another little morning bounce. We had a pullback yesterday too. So we've had a 5-day pullback here on PDD. Resistance will be back to the 200 on all these here 1 minute time frames. So if you take the trade, run it up to the 200 EMA on the 1 minute. And that's going to be BABA, PDD, K-Web, and JD are my China plays. And then I look at Nile also. So where did I put that at? There we go. And the next one, I was looking at ELF yesterday, or was it, let me see which one this was. I forgot what one it was. /ES. Got a bull flag right here. It could bounce back up. Low support on it. Definitely a double bottom. Somewhere right around in here. I'm going to go ahead and put an alert at $6,009.75. See if we hit that. See support, resistance. Kind of like a pivot point area. And what else? SPX. I love trading this SPX. This is how I do the SPX, just in case you're curious. I use the VWAP on the SPY. And I see where we are here on the SPY, see if it's bullish or not. And that's my leading indicator to take the SPX. Now, if we gap up, I'm looking for a pullback. If we gap down, I'm looking for a breakout. And that's SPX. So I got them charted here, SPX, and then over here I have the SPY VWAP. And I take both them trades at the same time. I come in here in the morning. And I look at these. I got the IWM, the QQQ, the SPY, and the SPX. And I see which ones are up and which ones are down. And that gives me the idea which one I want to trade. Yesterday, we had the IWM was up and the SPY, the SPX, and the QQQ were down. So I called out a put on the IWM, and then in the same sentence, moments later, I was calling out calls on the SPY and the SPX and the QQQ. So I just kind of look at them. If there's one that just looks a little bit odd, I'm going to look at it real close and see if I can take a trade on it. That means if it doesn't follow the trend of the others. And yesterday, it was the IWM that had that big breakout. And we took it back to the 200 right at open. And then we had a 1, 2, 3 triple top, lower highs, and it did a double bottom at the end of the day. Oh, that's it. It's kind of rough. Cisco was on my watch list. Oh, there you go. Cisco did not like earnings. $30. So I'm going to go to the 1 hour. The 200 breaks, we move on up to the EMA. Definitely didn't hold my support. I called this support yesterday. I said we're going to pull back. And that's exactly what we did right into close. We pulled back and hit that bottom support. And it bounced off that 200 EMA on the 1 hour. So definitely keep Cisco on watch today. You could probably get a scalp out of it. Now, I don't know if I talked about Disney. Disney broke the 200 on the daily. So we're definitely starting to be bullish on Disney. You got a resistance right up in here to break. And that resistance to bring it up higher will be right around 104.19 for today's resistance, with support being off the 200 on the daily. If that doesn't hold, then we're due to drop down and hit the 63. Or I mean the 200 EMA, or maybe even the 9. But to stay bullish, you got to be above that 101.31 to the penny. To the penny. Mara, Bitcoin took a big, huge run yesterday. So we got a flag here on Mara. And I called 2124 support yesterday, the gap. You got a gap right here. So if you don't know anything about how to trade gaps, you got two support levels on a gap. You got your top of your gap right here where the body of that candle is at 2124. And then the bottom of that gap is right down here, right around 1966. Now, there's probably something else that I'm missing here because I drew that trend line right there. So let's see if we go to the 4 hour or the 90-day 1 hour. 4 hour. Yeah, I mean, that's pretty much a support level, but the low support's definitely right down here at 1966 to get into that trade. But we had a big breakout yesterday, huge breakout here on Bitcoin. Why? Well, news out today, Trump wants to stop all capital gains on Bitcoins. You got Elon Musk and Doge. I mean, it's a perfect recipe to hit that 100 grand plus, maybe even more on Bitcoin. And I'll show you something here on Bitcoin. So here's a 5-year chart. 5-year chart. And this is what you call overhead resistance. And you got 1, 2, 3 tops. And that's on Bitcoin. So this thing could fall back to 80,000 and be a very strong buy and hold that bottom of that candle. So that's where I'd be probably looking for the 80,000. But definitely you could, things could get nasty and then start to build support above the old resistance. The old resistance is 71,230. Right around 71,238, somewhere in there. And that, if that holds, but your first support's going to be right here. At that 80,362 area, that 80,000 spot. And then resistance is definitely the 100 grand. But this is a huge Trump breakout. So Bitcoin, definitely coins are going to be in play for next year. Big time. Big time. Big time. Big time. Tesla. Fat cats just can't keep. I mean, they're tongue tied right now. They're tongue tied right now. Here on Tesla, I mean, you got so many people out there that are against Tesla, against Elon in general, because he's against the establishment, and that's why I like him so much with Trump. I mean, Trump will be his co-president. If that makes any sense to you at all, it does to me, because he's a genius. And the government doesn't respect Elon as much as they should. So, I had a big old sell-off yesterday. I don't remember if I called this out yesterday or not. Let's pull this up on the 90-day 1 hour and clean this up. Oh, I had a Fibonacci on here. So I did chart it up yesterday. So we're landing off the 63. As long as we hold that 63 EMA, we're going to be good. Now, that is a gap. That is a gap fill. You see how we dipped down to the gap? I talked about the gap earlier, right? Why are you being so difficult? So you got a confirmation of the 63 right here. Now, if that doesn't hold, it's a pretty good drop down to fill this gap down here at 300. We got 3 white soldiers right here, so that could be another support level right there. I might raise one of my alerts up to that spot. Three white soldiers right there at 317.93. So that could be the spot. But right now you're forming a flag. So we could break out again and find some resistance right up in here today. And that number's right at 337.61 with a strong support to hold at 323.94. And if that doesn't hold, then we're going to drop on down and hit these other support levels. But we got 3 white soldiers right here, and that could be your solid support at 317.93. So I'm going to raise up this lower support just above that 317. Be able sure I can get that, and we'll worry about that when it comes. Definitely we're bullish on Tesla into 2025. Bullish. This thing could go to 500. I got a 375 price target. Called that out last week, and we're at we hit 362 on Monday. I'm very bullish on Tesla now. People that have been trading with me for the last 12, 14 years know how that I watch Tesla every day, and that I've not been that bullish on this stock until a couple, 3 or 4 months ago, and then once the rhetoric started stopping, Wall Street's going to have to learn how to love Elon. And screw Bob Iger. AMC, the AMC pump, we had to pull back to 427. We've been down to 402. We had a nice little pullback yesterday, right at open. So I'm not very bullish on this stock. Resistance is, going to be right around the 520 area. Support still stays right around 427 for a scalping trade, for day trade, swing trade, or whatever you want to do. Within that 80 cent. I probably swing trade it, but I don't trade it much. I don't like how it was pumped through roaring shitty. He's a bad promoter. I don't see how many people like that guy, but we got a right flag. Wonder why that right extension's not staying on there. It's on there now. So we got a symmetrical flag. This thing can come back down and retouch that 25, 26 area and then bounce up for a 1, 2, 3 breakout or continue on. Right now it looks a little bullish, GME, but resistance will be definitely at 27.44. And support right here at 26 for today. Let's see if that holds. GME. We called this out under 20, so I think that's about it for today. Did I do NVIDIA? I like NVIDIA a lot. Strong buy at 143.50. Just a little bit above it. No, actually, you could probably put it right there at 144.93. Inverse head and shoulders. Two-headed snake. Right here, see that shoulder line? It can come back and connect to the right shoulder and then bounce back up and do a 1, 2, 3. And that's it. I'm going to get on out of here. Wish everybody a great day. Washboard Jim talks about moving averages, chart patterns, and being in the now. What's that for? Where did it? Oh, it's on the other one. Duh. Today I'm going to give you a little.
Coming up, the NBA is coming back to NBC, but will the famous theme song from the 90s return? More on the round ball rock battle.
Can we even play it? We can't, can we?
I don't know. We'll see if we get to it in the next segment. And a reminder, you can get...
Well.
We are going to play. We'll get the best of Squawk Box you can in our daily podcast. It's like 16 seconds long most days. Follow Squawk... No, not really. There's a lot.
It's like 6 hours.
It's a lot of really good stuff. The best is not just that. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back.
Now, what's going on here? Oh, obviously I have to go through that.
Remember that? let the nostalgia flood in, folks. During the 1990s, it was open. It was the open to the NBA on NBC. It featured the beloved Round Ball Rock theme. It was composed by John Tesh.
No way.
But with the NBA coming back to NBC, will we once again hear that song blaring from our TVs? I hope so. The guy who knows the answer is CNBC's Alex Sherman at the table this morning.
Whoop-de-doo. I'm not in sports anymore. $584. Up there for one thing, when they're out there serving the people. So let's see what we can do about that. But I'm expecting a pretty good 2024. I'm going to be buying the dips. 25,
Wall
dummy.
Street, I don't think in my recollection that I don't think that they're too happy about having Trump in office because they like all that free money. That free money, bring it in. They don't have to spend their money. They just use the government's money, your tax money. So that's, might set off a few of them, but too bad. You got to spend your own money if you're in a business, not keep trying to, get benefits from the government. So Wall Street's definitely changed in the 20 years that I've been watching it. It's got a lot more greedier, a lot worse, and a lot more. You can see now. I mean, it's not hidden anymore. They used to get behind closed doors and move the market, but now you got the internet. You got these politicians that are getting filthy rich off Wall Street. So you just follow their stuff.
We're not going to pay that. So Tesh now has at least held a preliminary discussion with Amazon to say, hey, do you guys want it? But there's language in the NBA's deal with Amazon, which is also going to get games next year, assuming the Warner Brothers Discovery lawsuit, which is pending, they're trying to get at it. But we think Amazon's going to get games. Amazon needs to create their own theme music. The NBA mandated that, so they can't use
Oh, so
Round Ball
Tesh
Rock.
has no competition here.
So Tesh, apparently, from what I've been told, actually sent Amazon 2 other songs to be like, hey, if you can't use Round Ball Rock, here's 2 other songs I
Well,
have
that's
in the
fine,
garage.
but they can use that song, and then NBC should be able to buy the other song.
So from
Tesh
what
is
I
getting
hear,
either something or nothing.
NBC
Right.
fully expects to reach a deal still for the song, and we're still in negotiations. Another thing I was told is that Tesh has actually held a conversation with a VC firm where he could sell the song to the VC firm, and the VC firm could negotiate with NBC.
So how in the heck did it get private?
Risk off the table. Remember, there was like a big SNL sketch about this song. This song is wildly
This
popular.
is like the theme song to Top Gun, though. It brings, you hear it, and it brings back a whole
But you
sort
also
of
think
nostalgia.
of NBC, honestly.
The other
Basketball on
but
NBC.
the other piece of it that I just don't know is the younger generation may not care.
They
They
might
don't
not.
know it. They've never heard it in their whole life.
And in fact, I suppose if NBC Sports said we want to reach the younger generation, maybe they feel like the song is old and they want to bring in a new song. So there's a lot of different things that, look, 90s nostalgia is big. Like, you just think about all of the different reboots on the streaming services.
I
of
took it
90s
private.
TV. So there's absolutely a huge fan base there that I think NBC wants to reach. And it would be weird to hear this song on, like, ESPN.
It does sound a little dated, though.
But actually, Fox Sports has used the song for years. Tesh licensed it to Fox to use for their Big East games.
Wow.
So it's not like the song has totally disappeared. But obviously people associate it
But
with NBC.
That synthesizer sound is definitely a little dated. Like, it reminds me of broadcast news when they were trying to come up with the new.
So I think NBC probably is thinking we can either tap into the nostalgia base, or maybe we can create a new song that is a little bit more modern sounding here.
What is that? Caddyshack.
Famous theme songs.
Famous theme songs, yeah. I wonder how much
He's
this
a
one
gopher?
costs to license. Exactly.
Some of them really are, that's the only thing you think of. Top Gun, that's the only thing you think about.
Except that I do think, if you're under 30 years old, you've never
have no
heard this in
idea,
your whole
right.
life, and you
Right.
don't even know
True.
it's going to be
By the
matter to
way,
you.
the reason
If
you're
I
coming
was
is
if
for
I was
the
NBC negotiating with Tesh, that's what I'd say.
You have to get it.
Absolutely. And I would imagine Tesh is saying, well, you know what? There's going to be major blowback from the over 30 crowd that's watching your game if the song doesn't come back.
But you know what?
You
You're
really
still
think
gonna watch. We're
they're
not
still going to
watching
watch? I'm sorry, John. I'm a big fan. I don't think you have too much negotiating.
You started this saying you wanted the song to come back.
I do.
Okay, yeah.
I do. I think I would selfishly love for it to come back.
Right.
But we
I
also
think
selfishly
you're
think, how
over
many
30.
people do we have
If
to
you're
fire to
getting
get that
right,
song?
you're either getting something or nothing. That's John Tesh's option.
Time
Something
passes.
or nothing.
Both sides meet in the middle and come to a deal, and we hear the song.
Time passes so fast. I thought I heard that song when I watched the NBA last week. Are
Yeah.
you sure it's not?
The NBA is.
I swear to God.
NBC's
Is that
paying,
not used anymore?
NBC's paying $2.5 billion a year now for the NBA. So yeah, they're probably looking to cut some costs around the edges here. And that goes through the whole
Mostly
company.
on
But,
weekends,
You know,
though,
the song. You know, I don't know. I want the song to come back.
Okay.
Not at the expense of firing people.
No, it's not at the expense of firing people. Exactly.
you.
Look, that's why they haven't had a deal. It's a
Your fault,
negotiation.
Thank you.
Thank you.
All right, news just out from Tapestry. Parent company coach Kate Spade and Stuart Weitzman is terminating its merger with Capri. Those two companies mutually agreeing that terminating the merger agreement at this time is in the best interest of both companies, as the outcome of the legal process is uncertain and unlikely to be resolved by the February 10th, 2025 outside date. You can see shares of Capri down pretty sharply on that, off by about 7.5%, but Tapestry shares are up by over 5%.
Okay, it is now just about 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. A lot going
Look at
on
'em.
this morning. I'm Andrew Ross Sorkin. Joe Kernan's here. Becky Quick is at the table. The futures at this hour. We got some green on the screen. 118 points on the Dow.
Got it.
Looking at the S&P 500 up about
We're
30
ahead.
points. The Nasdaq up
Disney's
about
up $7.
40 points.
$7.
Disney is on the
That's
move.
why the Dow's up.
Wow.
In large part on the back of guidance for double-digit EPS growth in 26 and 27. We're going to dig into all of those numbers.
Disney.
CFO
Yeah.
Johnson's going to be at this table in just a little bit to go over the company's numbers, as well as succession, strategy, and so much else that's taking place at Disney. But you're absolutely right, Joe. It is on the move. And let's also take a quick check at something else that's on the move this morning. Crypto in a big way. You're looking at Bitcoin now, $91,490 right there. You've got a couple of the others, Ether up as well. So a lot going on.
Fed Governor Adriana Kugler speaking about the economy and Fed independence this morning. We want to get right over to our senior economics reporter, Steve Leisman, with some of the headlines on this. Hey, Steve.
Good morning, Becky. Fed Governor Adriana Kugler is delivering a pretty long and comprehensive speech about Fed independence at a conference in Uruguay this morning at a potentially fraught time for the Fed and its relationship with the incoming administration. But first, she made some comments about policy and the economy. Let's go through those. She said the Fed needs to pay attention to both sides of its mandate, the employment side and the inflation side. If inflation risks rise, it could be appropriate to pause rate cuts.
Yep,
But if
I'm
the
gonna
market
go.
slows suddenly, would it be appropriate to continue to gradually reduce rates? The U.S. has been seeing considerable disinflation and cooling in labor markets. She estimates headline PCE, I think she's talking about this month, at 2.3 and core at 2.8, which would both be a little bit hotter than it has been. She notes, quote, stubborn housing inflation and high inflation in certain goods and services may stall inflation progress.
No, shut
Most
up.
of the speech, however, is about the benefits of central bank independence in the U.S. and around the world, citing a lot
So
of research.
sick of this
She
station.
says independent central banks yield better economic outcomes. Research shows advanced economies with independent central banks have lower inflation. And finally, the central bank independent boosts credibility to fight inflation. She notes the central bank credibility keeps inflation expectations under control and that they remained low despite the burst of inflation during and after the pandemic. Monetary policy, she says, controlled by elected governments.
You're not looking too good,
Stabilize
Steve.
prices. Why? Because of short-run focus on certain goals by the elected governments, and governments could have incentive to monetize debt. The Fed's independence, she says, to develop policy tools like different things they did, like QE, helped it respond to the great financial crisis. Finally, President-elect has been notably silent about the Fed since the election. He previously had suggested he might fire the chair, but then rescinded that and said he should have more influence in setting policy. Chair Powell said at a recent press conference that the law did not permit a president to fire him in response to a reporter's question. Now, Kugler's speech and topic apparently advertised and decided before the election results. So guys, it's not a maybe direct battle yet, but perhaps there is some positioning going on for when or if one does develop, Becky.
Steve, that was what I was going to ask you. Is this a coordinated effort by the Fed to go send someone out there to talk about these things? How long ago was this topic decided? Because that's very interesting.
I believe during the summer it was decided. By the way, these speeches take months to actually create, I think it's fair to say. So it's worth thinking about the idea that I don't think this is in direct response, and it's probably useful, and it is done from time to time for the Fed to come forward and say, hey, remember that independence you gave us? Well, here's why it's a good thing. And of course, now it has a certain meaning that it may not have had before. This will be an interesting test, by the way. I think there's one going on with some of these appointments between the executive and Congress, and obviously the Fed is a creation of Congress, so this test between the executive and the Fed may yet be coming. We'll see.
Okay, I think that's an important distinction to make. I'm glad you pointed that out with the timing. Thank you, Steve.
Sure.
Andrew, what was the Top Gun song? What's that?
Dun, 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 dun. Kenny Loggins.
That's Kenny Loggins. They're both Kenny Loggins.
Dun, dun,
The
dun.
Caddyshack.
The Caddyshack was Kenny Loggins.
Yeah. Oh, that's weird. So Danger Zone. You're talking
Danger
about.
Zone.
That's Kenny Loggins.
Yeah.
I did not know that.
I'm All Right. It's Kenny Loggins. What a star.
Okay, when we
And
come,
Footloose. That's right.
that's right. That's pretty amazing.
It is amazing.
All right, when we come back, the price of Bitcoin up more than 30% since Donald Trump won the election. We will check out what's next for the crypto market. And tomorrow is the 31st annual Ron Barron Investing Conference. Ron Barron himself is going to join us to talk Tesla, Elon Musk's government role, and much more. We'll be right back.
CNBC.
The price of Bitcoin briefly hitting the $93,000 level before pulling back. It's up more than 150% this year. Let's talk about the crypto market and bring in Matthew Siegel, head of digital assets research at Van Eck. I thought, Matt, that it was definitely long in the tooth, this sort of mania. You say there's, at least for your work, that you don't necessarily see that yet in terms of whether it's totally overdone?
Joe, we think it's just getting started. As we expected, Bitcoin saw this high volatility pump after the election. We're now in blue sky territory, no technical resistance, and we think we're likely to make repeated all-time highs over the next 2 quarters. The same pattern played out 4 years ago. Between the election and the end of the year in 2020, Bitcoin doubled. There were about 10% corrections, so it's not going to be a straight line, but we're up 30% so far, and a number of indicators that we track are still flashing green for this rally to continue. This is a state change in terms of government support. Look at this cabinet: the VP, Attorney General, Director of Defense, National Security Advisor, possibly even the Secretary of Treasury being pro-Bitcoin. That's not including Elon and Vivek. So the number of calls that I'm getting inbound from investment advisors who are at 0 and looking to get to 1%, or at 1% and looking to get to 3%, these calls are starting to accelerate, and we think the flows are going to follow. So our price target for this cycle is 180K. We think we can reach that next year. That would be 1,000% return from the bottom to the peak this cycle. That's still the smallest Bitcoin cycle by far.
And double from here, basically. You look at weird things, Matthew, like, so you Google search for Bitcoin is one of the things. So you would expect, if we were getting toppy, you would expect that was off the charts, and it's not yet?
Google searches are nowhere near where they were 4 years ago. Coinbase's rank in the Apple and Android app stores, nowhere near where it was 4 years ago. Look at the internals of the derivative markets, what it costs for funding to put on Bitcoin futures trades. You know, it's up, but once we get into this price discovery mode, it tends to stay elevated for quite some time.
What if Gensler's gone, as Trump said on day one, or someone said on day one? I mean, I can imagine that. I don't know when, though, it actually becomes a sell on the news, because I don't know. Maybe I'm just think that it's more of a mania move now than it actually is. But it just seems like it's been a heck of a move. Think it'll move when Gensler's gone, if he's gone?
Yeah, I think, you know, maybe the disappointment phase will set in 1 to 2 quarters after the inauguration. There's really 4 major impacts here. Okay. You know, one is just the positive impact on dynamism when you stop suing people for breaking rules that have never been written down. That's a long way of saying that regulation by enforcement is going to end. We're already seeing the economic impact of that. There are crypto projects that are announcing that they're going to hold conferences in the U.S. for the first time ever, open offices in the U.S. and New York. It's just great for U.S. jobs and GDP, right? We've got the Bitcoin reserve that would legitimize this asset as a reserve asset, pave the way for it to be used as a global settlement currency, as the BRICS countries have been doing. You know, President Trump recognizes the synergies between Bitcoin and AI. They are 2 sides of the same coin. If you want to have cheap AI, you're going to want to combine it with Bitcoin mining to take advantage of that cheap power.
They're telling me we got, I don't know, Disney, Bitcoin. They're both important, obviously. We got to get moving, and we got the CFO. But we appreciate your time today, Matt. Thank you.
When we come back, we are going to talk about Disney. Stock is up on the back of its earnings. Hugh Johnston, company's CFO, is going to sit with us at this table. We're going to go through all the numbers, talk succession, and so much more in just a little bit. Don't go anywhere. And then former SEC Chair Jay Clayton is going to join us to discuss President-elect Trump's cabinet picks. Also talk about Poly Market and so much more. You do not want to go anywhere. Back after this.
World.
Welcome back to Squawk Box. Disney beating on the top and bottom lines this morning. The stock moving on the back of that news. Julia Borson joins us this morning. She's at the table to talk about what drove the quarter. Good morning.
Good morning, Andrew. Well, Disney's top and bottom line beat was driven in part by $253 million in direct-to-consumer profits. That's nearly double what the street expected, showing that Disney Plus cost controls are paying off, though the segment's revenues were a little bit lighter than analysts' expectations. Now, Disney Plus core subscribers added 3 million more than expected, while revenue per user did fall a hair short of Wall Street estimates. Now, that strength in streaming helping overcome a far bigger than expected 38% drop in linear network profits on lower affiliate and lower ad revenue, thanks in part to cord cutting and also some viewership declines. Now, profitability at domestic parks also benefited from cost controls and higher overall guest spending. However, attendance was only comparable to last year's levels. Guidance for high single-digit earnings growth in its new fiscal year looks stronger than street expectations, driven by continued improvement in the D2C business. The company is saying it'll see an approximately $875 million improvement in D2C operating income in its next fiscal year. Disney also projecting earnings growth to accelerate to a double-digit rate in each of the next 2 years. Andrew?
Thank you. Do not go anywhere. Guess who's at the table with us? Hugh Johnston, Disney's CFO and a member of our CNBC CFO Council. Julia's here as well, and we get to actually sit with you now and walk through the numbers. You know, it was fascinating to me watching the futures this morning as that announcement got made. I think there were people, in fairness, that were disappointed early on with maybe some of the results because they were looking through some of these numbers, that DTC number coming in a little bit light on the revenue side. And then as they continued down and saw the guidance, not just for this year, but I think more importantly for 26 and 27 double-digit EPS numbers, they said, oh, maybe this is looking better than we thought. So let's talk about that. What are the challenges that you're confronting right now? And what does that actually look like? And then what gives you the confidence that the numbers are going to look so meaningfully better when you get into 26 and 27?
Well, I think the fact that we've had such a strong 24 overall has been an important part of the guidance that we're giving, right? So if you think of the big initiatives that we've invested in, putting creativity back at the center of the company, and the couple of billion-dollar movies and all the Emmys have actually driven terrific creativity results out of the company. Then on top of that, we said we wanted to improve streaming profitability, and we're clearly doing that in a substantive way. And then we're investing in the parks because we have such great returns in that business, whether it's theme parks or cruises or even consumer products. So if you put all of those pieces together, I think 24 in many ways was the pivot point for the Walt Disney Company, and we have enough confidence now in the results that we're seeing to say we really can guide for the next couple of years.
Now, this is incredibly unusual. I've covered the Walt Disney Company for years. You almost never have given guidance this far out. What made you decide now, not just to guide for next year, but over the next 3 years? And are you concerned about things like hiccups in consumer spending or even a potential pullback in the economy to impact that very long-term guidance?
Well, we always are going to worry about that. But that said, you have to make a set of assumptions around what the consumer is going to do. And we see a consumer that's slowly but steadily likely to get better. And that's certainly embedded in the guidance. Beyond that, with the significant investments that we've made to build a DTC business, and we need to remember, it's only been 5 years since we started that business, so it's relatively new. We took some operating losses to stand it up, but now it's a business with 175 million subscribers. It's turned profitable over the course of the last year, and we see lots of profitability in the future. So the investments we've made there, and then on top of that, the investments that we're making and are going to continue to make in cruise ships and parks, we felt like we needed to give investors not just the current business results, but set an expectation of what the return is on those.
You got streaming and ESPN all figured out. I mean, at this point, what I think this means is, if you can say double digits, that's like the base case for you.
You're trying to drag me up already, Joe?
I'm trying to get you to even say, it's pretty good, but if you're confident in saying that, I think if you're confident in saying the low end of things, I think you think it could even be better. But I'm amazed that you. Plus, you got whether movies succeed and studio stuff. Although the visibility is very hard in that business.
It is, but if you look at what we did in terms of creativity, particularly in the movie business, right? We were generating too much content 3 or 4 years ago in order to feed the streaming service, and frankly, quality suffered to some degree. When Bob came back, he made it clear we're going to prioritize by virtue of less quantity and better quality. And that's kind of what you've seen, whether it's all the TV shows that have generated the Emmys, or whether it's Inside Out 2, or whether it's Deadpool, and now we obviously have, we've got Mufasa as well as Moana 2 coming out. We have a lot of confidence that the creative process now is really tightly wound. We do maybe 5 movies, big movies a year. I think you'll probably see 2 great ones, 2 good ones, and then maybe one that's just okay.
Hugh, and this is a topic that maybe is close to home here at Comcast, because there's a question mark about the linear channels or the cable channels and whether they should be spun off at Comcast, including this network. I asked because the linear piece of your business down meaningfully this quarter. Right. And the question is, there was a period of time where Bob and you and others were considering spinning that business off. You chose to keep it. What happens now with that business? Do you think that you should have kept it, or you should continue to keep it? Would you consider ever spinning it off? And sort of, how do you see this?
Yeah, I like the portfolio the way it sits right now. I wouldn't change anything. One of the first things I did when I became CFO of Disney, and Bob asked me, he said, look, fresh eyes, take a look at this. And I came back with, look, you can do spreadsheet math to justify just about anything. But when you look at operationally what it takes to do that, we came to the conclusion pretty quickly, this is actually a good integrated portfolio, and the cost of doing that is probably more than the benefit. So,
meaning what? Spinning it off would
spinning
require
it off
too much?
It's just too much operational complexity in terms of trying to separate the assets. relative to the benefit of running an integrated entity between linear and streaming. In many ways, if you think about it, it's just a natural hedge anyway, right? So as people leave one distribution channel and move to another, it's the same eyeballs watching the same content.
Well, part of the argument, and I'm curious what you think of Comcast's even contemplation of this, is that it's a drag effectively on the multiple of the company, and whether you can capture some kind of multiple as a spun company that you can't in the public markets.
I think right now, for Disney, given the size of linear, in the context of the overall size, the amount of multiple we'd have to pull in to make that worth it, it just isn't a deal that's worth doing. So,
Do you think you were late on that, by the way? Meaning, if you had done that 5 years ago, it would be a different conversation?
I wasn't here 5 years ago. That's a tough one for me to say. What I would say right now is I like where the portfolio sits because I like the integration of the two. And linear, by the way, does have a very separate demographic, as you guys well know. It tends to be a little bit older, and we want to make sure we don't lose that demographic. So I'd rather keep it as a part of the portfolio.
Just going back to the guidance, did the election play a result in you being able to issue this guidance? In other words, looking at corporate tax rates, let's say.
None whatsoever.
None. Okay.
Yeah.
Well,
I don't know what's going to happen with corporate tax rates, candidly.
since the election, there's been so much speculation about the media M&A market opening up. You said you're not interested in spinning off those linear assets, but are there other deals you'd be interested in doing right now?
Really the same answer. I like our portfolio as it exists right now. Look, we have an obligation to look at things when they come along, and we'll certainly do that. And if something makes sense for us, we're not by any means afraid to do it, but our portfolio is really good right now, so I'm happy with what we have.
In terms of the streaming business and the big boost in profitability you saw this quarter, how much of that was due to the bundle that you offered consumers with Max? And do you expect to do more bundles, not all outright deals, but bundles, especially in the streaming space?
We're not assuming we're going to do any more. We're always open to good ideas. So bundling clearly helps with churn. And Max, we think is going to be good and additive, but it's not critical to what we're doing. Really, what's critical to what we're doing is the IP that we're generating.
What's your base case now for the sports bundle that is now on pause?
You're talking about Venue?
Yeah.
Venue right now is in the course, so I'm just going to sort of
But does that get calculated into any, when you start to think about what the business looks like 2 or 3 years out, it's not even in your calculation?
Right now, I'm assuming that court case is going to play out. If Venue doesn't happen, Flagship will probably do more, the ESPN Flagship products, so I think we're basically hedged on that either way.
Can we talk Succession? Obviously, that's something everybody is fascinated by. We've heard new reports about James Gorman now looking outside of the company for CEO. We've also heard about other permutations where maybe Bob becomes the chairman and Dana becomes the CEO, and you get an even bigger role.
I've got plenty of work to do right now. I don't need a bigger role. Listen, what I would say on Succession is just very simply this. I think this board is really being very, very transparent with investors in terms of its process. I think they're taking their time and they're appropriately trying to make a good decision. And my expectation is they'll make a great decision in early 26 as they've indicated. Beyond that, I think people like me need to focus on running the business. Let the board worry about Succession.
Before you head off to your earnings call, want to make sure to get your insight into the state of the consumer, because you have such great visibility through the direct-to-consumer business and also through the parks. Spending at the parks was up, but attendance was flat. Typically, you're growing attendance. What are you seeing in terms of the state of the consumer, and are you concerned that attendance did not increase?
No, I wouldn't say we're concerned at it, because we saw that coming in advance with the bookings and things like that. I think the consumer is gradually strengthening. So I think there was a period in the first half of this year where the consumer was really locking down because inflation hit them so hard, and people were struggling, particularly the lower income deciles. I think you're seeing a very gradual strengthening, which is part of what we see in the streaming results right now. And our expectation is the parks will continue to gradually strengthen as well. As we noted, we'll probably do better in the second half of the year than we did in the first half.
Can I just circle back for 1 second to sort of the regulatory environment and I was mentioning the Venue sports issue, but the reason I'm raising it is there's now a renewed or newfound enthusiasm or view that, you know, the floodgates are going to open, there's going to be all sorts of M&A activity, and there's going to be strategic partnerships that might not have been allowed to take place before. You talked about the success with Max partnering. What do you see happening here? How does the chessboard change, and where do you fit into that chessboard, do you think, over the next year or two?
I think right now we have a portfolio that is just right the way it is. So I don't think that we necessarily need to make any changes.
But would you see
in the portfolio.
deeper partnership integrations? Are there things that you think you can't do today that you'll be able to do after January 20th?
It's so early to speculate on that. I mean, we're literally 9 days out after the election, so and
I'm sure you've had that conversations with somebody.
We're certainly thinking about things, but candidly, I think we need to sort of let this play out for a little bit longer before we take a guess on what the regulatory environment is likely to be under a new administration. It's just too early.
Do you serve Pepsi at any of the Disney
We
parks?
do in Shanghai.
In Shanghai, but Coke everywhere else.
Coke
right?
everywhere else.
Are the
you
seven
have an
are
allergic
the seven
reaction?
dwarfs back or not?
The Seven Dwarfs never left, as far as I'm concerned.
You sure?
I'm sure.
That's a bigger question I'm asking you. So
I
you bet.
understand.
Okay, all right.
Hugh Johnston, thank you for being here. Julia, thank you for coming in.
Thank you. Great to be with you all.
I love those guys.
This is fun.
I love them, especially Grumpy.
I know. Gee, we know why.
Still to come,
Late?
former SEC Chair Jay Clayton. His name's been thrown in the ring for a possible role in the Trump administration squawk box. Coming right back.
Time now for today's Aflac trivia question. What are the 3 biggest IPOs of all time? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What are the 3 biggest IPOs of all time? The answer, Saudi Aramco, Alibaba, and SoftBank.
Betting on contests of all kinds is becoming a part of the mainstream American culture, with courts newly allowing the practice from politics to sports. Meanwhile, states are raking in revenue. Sports wagers are now the most popular form of legalized online gambling. Is it a good thing? John Ford is here to weigh in. I want to see what you do first.
Well, Joe, the rise of online sports betting is a good thing on balance. That's because we don't want a nanny state, but we still need people to give them help to avoid destructive behavior. Digital platforms can give things trackable and regulated framing. So this modern gambling boom was born exactly 6 years and 6 months ago today, when the Supreme Court struck down the Professional and Amateur Sports Protection Act in the 7-2 decision. This shift created a flood of new revenue. According to legal sports reports, states have pulled in more than $6.5 billion in tax revenue in the past 7 years on more than $400 billion worth of bets. And naturally, that raises a yellow flag. Is this bad for people? Well, let's look at an extreme example. Brazil. Sports betting also went legal there in 2018, and according to ComScore, Brazil became the world's #3 sports betting market last year, behind the US and the UK. But unlike our market, theirs grew unregulated until recently. Brazil's combination of impoverished consumers, high interest rate credit offers, and lax safeguards over hundreds of digital bookies has that country reeling from a gambling epidemic. Now here, 7 companies command 85% of the legal betting market, and they've already formed a coalition to keep the problem gamblers from spiraling, Joe.
Well, that sounds fine, John, right? What's the problem?
Well, Joe, there's always another side. On the other hand, online sports betting in the U.S. is already out of control. Now, 2 separate research papers released in August show families in the 30 states with legalized sports gambling are saving less, investing less, and going bankrupt more often. And there's a detail that should raise alarm bells. In Brazil, the government found that households on public assistance were spending 20% of their benefit on gambling sites. Well, similarly, in the U.S., poorer households are more likely to gamble, and the study found better households, that's better with an OR, are more likely to have gotten child tax credits, meaning they have kids. I know we're in an anti-woke period right now. We don't want the government telling us what we should and shouldn't do. It's a free country. We also know that in this digital economy, some big companies are making every effort to keep us scrolling, swiping, and now betting. Now, thanks to lower interest rates and a strong job market, the worst of these effects haven't hit the economy yet, but it's coming. This year, gambling addiction hotlines in states with legal sports betting are getting more calls from younger clients. Rates are now higher, jobs are more scarce. Let's put firm sports betting guardrails in place now before more vulnerable families get hurt, Joe.
Wow. I mean, I have a lot of thoughts on this. Do most people know that maybe in the history of the world, no one who gambles is actually up? Do they realize that? Are there professional gamblers that are actually up? Maybe there's like 3 or something.
I mean, the poker players, the really good ones can do very well. The game's a skill versus chance, and sports feels like one of those things where, oh, I know these teams, I know these players, I can figure this out.
But most of the time, you don't stay up. It's just the way. Can it be looked at as the cost of entertainment? I like doing it. I'm willing to expend a little per month so that I'm more interested in sporting events?
I think that's a good argument. At the same time, we got to pay attention to these papers which show that people are not taking just from their entertainment budget and shifting it over there. It's actually coming out of things that, you know, the government and the economy is trying to incentivize people. Hey, 401k, you know, IRA, save.
If you're using it, if you're like, wow, I got this bill coming up, I think I can make it, or whatever, like uncut gems. If you see that, you'll never gamble.
Well, on the other hand, newsletter, I know we might, there we go, QR code, you can scan that, you can see both arguments, share it, or you can type in cnbc.com/OTOH to sign up for the newsletter.
Or the gambler, Jimmy Kahn, late great.
Coming up, former SEC Chair Jay Clayton is going to be with us in just a moment. Do not go anywhere. We're going to talk about all of the big
to Squawk Box, everyone. Joining us right now is former SEC Chairman Jay Clayton. Of course, he's Apollo Independent Chair, also a CNBC contributor and a Squawk Box regular. And Jay, it is great to have you here this morning. A lot of directions to go down this morning. We're going to talk about regulatory oversight, but we were already talking this morning about who's been placed where in the cabinet and what to think of some of these things. The Attorney General, Matt Gaetz, is raising a lot of brows in Washington at this point. People wondering whether he would be able to be confirmed by the Senate. What do you think of the choice?
Well, actually, let's talk about the choices collectively.
Okay.
And I think they tie back to the key promises that were made in the Trump campaign, and that I think the Trump campaign believes that they won on. The border. Look at Homan. I mean, you know where he stands. He's like, and you're gonna have Mayorkas on. No one in America thinks that the border is working. Everybody in America knows we have the resources to fix it. He's gonna fix it. So that's, pretty clear. You look at efficiency. Musk did an incredible job in the last month of the campaign explaining that government is not working well for the people, that we're spending. He's full on. He's in, he's appointed. The economy, there are still appointments to come, so we'll take a look at that.
Yeah, we'll be watching that pretty closely. That's the market's going to be watching.
The market's going to be
Treasury,
watching
Commerce.
that. And then the Justice Department, the American people, when they look at the last 10 years and things like the raid on Mar-a-Lago, that's a thing that I think you talk to anybody, it bothers them. Because what was so essential that you had to have a nighttime raid to get documents? We've never had an answer to that question. And this wonderful country, we rightfully have a healthy distrust for government. And we need to think about whether, law enforcement has been used in a way that really is politically inappropriate. That's a question that we're allowed to ask, and we should ask. Now, I know lots of people at the Justice Department, and I know lots of people at the U.S. Attorney's offices. Almost everyone I've ever met is a fundamentally good person, dedicated to the country. But we should be asking those questions in light of the cases that have been brought over the last, 8 years.
Do you think
But does the nomination of Matt Gaetz de-weaponize?
Oh, well, look, Matt. It's not necessarily. Matt Gaetz was willing to ask. This was it. He was willing to ask when others weren't. What the heck is going on here? Very loudly, and that I think that is something that
People are asking the same thing about some of the things in his life, though, too, like what they.
I'm not going to get into that, but for the
like it's front and
I
center,
think the
though.
question, this is a different point, maybe. I absolutely accept the idea that there's a whole bunch of Americans that distrust government, they distrust the legal system, they think it's been weaponized. All of those things, I think, I will stipulate to you are true.
But isn't that amazing?
100%. And needs to be fixed and resolved. Okay. The question is whether resolving it with somebody who on its face creates a whole other level of distrust about government and whether they're the right person. I mean, there are members of Congress who have literally said that he showed them pictures of, naked women on his phone and on the floor of Congress. And I just think, on its face, a sensible person who may have had that distrust says, well, do I trust this? And there's got to be people in the world that can be both loyal to the president and that would instill a level of trust for the whole country.
But besides the prurient stuff, it almost looks like he was less interested in governing. I mean, look at what happened with the Speaker McCarthy, et cetera, and more interested in being in front of cameras and self-aggrandizement and sort of his own, ambition to. It apparently looks like it's paid off, but there was no governing involved in that. That's sort of the thrust of the Journal piece today. They don't bring up any of the more tawdry aspects of this. Do you think that in 2 days, I guess they're not going to do it, do you think that the House Ethics Report should come out as part of the vetting for him to get to?
I'm going to leave that all to the Senate.
Would you
House
agree to be deputy AG and under Matt Gaetz?
Look, I'm not going to. I have told the transition team and the president that for a job that I think I could be effective and that would satisfy my skill sets or be consistent with my skill sets, that I would serve. I think it is so important for people to step up and serve in government that if asked to do something that fit my skill set, I would do it.
All right, let's talk regulatory changes that are coming, because we've had several people who've been on the show trying to figure out what the Trump agenda is going to mean from an economic perspective. You can try and figure out inflation, but the regulatory overhang is a huge one in how it holds back the economy.
The regulatory overhang is, I think, even greater than we all imagined. And one of the issues that we're going to see is whether, we talked about antitrust earlier, you guys were talking about antitrust, but again, in light of the Justice Department, whether we're going to see an antitrust policy that is actually coordinated with overall economic policy. So if what we're going to do is drive growth through the flywheel of energy, tech, capital, human capital, and the like, are we going to have a antitrust policy at the FTC, the DOJ, that fits with that, or that is, quote unquote, independent of that? There are times when independence, meaning isolation, is really silly in the regulatory state.
Okay, so Eamon was on earlier today and pointed out that Matt Gaetz is what they call some of the conservatives who like Lena Khan. And that brings some questions into what's going to be able to be done from an M&A perspective.
I expect, and look, it's not up to me, I expect that we will have a very liberal M&A market, because markets are moving faster than ever. Who would have thought that Perplexity would be this, I'd say very significant competitor to Google search? Markets are moving so fast that allowing market forces to determine future direction, rather than somebody sitting at the FTC thinking this is the way the market should look, is something we should give much more deference to.
I would take that at face value, but what we saw in the last Trump administration was that was the case unless you were someone or a company that ticked off President Trump. And then he singled you out, and then you felt like you couldn't get things done, a la AT&T.
Look, I think that oftentimes people will say that there's a personal motivation in connection with an enforcement matter in order to deflect and game. Look, when I was a regulator, I can stipulate that I had no personal motivation in cases that we brought. Many times people were like, oh, he's bringing this case for this reason, he's bringing the case for that reason. That happens a lot. We should be somewhat skeptical. And when people say it about anybody in the Biden administration now, I'm highly skeptical.
Although it's harder to deflect when you have a president who's very vocal on social media, on X or Truth Social or someone, saying things about the companies that are trying to get things done, and then somehow, lo and behold, they are blocked by government offices from being able to do those very things.
Yeah, looking forward, I don't expect a lot of frictions in the M&A market unless if I was going to go somewhere, it would be using your market power to dominate another market. That's the kind of thing where I can see.
But otherwise, maybe game on.
Game on.
Because it's been shut down for 4 years.
Because it's been shut down, and the markets have moved on, and markets move faster.
Do you know anything about the economic appointments? You know, you're hearing it when we're going to hear Treasury comment. You know nothing.
I know no more than you do.
You know no more.
John Paulson's out. That we know.
John Paulson's out. Yeah.
We know Howard Lutnick wants to be in, supposedly, by way of reports. I don't know. Besant.
I think these are extremely important appointments. We have an economy. Mark Andreessen made a comment that I thought was absolutely terrific. He said it's a coiled spring ready to explode. He's right, and the economic team should recognize that and know how to release that spring in the way that's best for the country.
So can I ask one thing? We keep talking about a coiled spring, and we also talk about sort of the everybody being very excited, and then at the same time, you've talked about it. Even Nelson Peltz talked about it yesterday. This idea that we might actually be headed into a recession, that things don't, trees don't grow to the sky, that it's just impossible.
It's a crappy time.
I saw that. Was he talking about the markets, or was he talking about the general economy? Because
I think he was talking about the markets.
I think he was talking about the markets.
Because we're at 20. No one wants to be president at 23 times earnings. You know what I mean? When you come in, it'd be better. I'd love it at 10 times earnings.
You love coming in at the bottom, right?
Right. Or if you're going to create jobs after a pandemic, bring it on.
Buy low, sell high. Oddly enough,
but if it demonstrably is a coiled spring,
Right.
then actually the market should hold.
I mean, I think the market is anticipating
It's already
the
reacting to
uncoiling.
it.
The market's way ahead, but we have to uncoil that spring and continue to drive the economy forward. Energy is so important. Tech is so important, and
All right.
efficiencies.
This is an easy question for you. Will you still be a CNBC contributor in a month?
Hope so. Are you firing me?
No, I'm just wondering whether you have bigger fish to fry or not. You have no idea? Yeah.
We do love you coming on here.
We do.
Thank you.
You still come on, but it just might not be as a...
Why not? This is
From the lawn.
It's like
From the lawn.
Exactly.
it's like an argument at Thanksgiving dinner.
Tell that guy cutting the grass, do you know who I am? Just tell him. When he's cutting the grass and you're trying to do an interview. Because we constantly have the edgers going and stuff.
Yeah, we got some great landscapers at the White House.
They do.
Jay Clayton, thank you.
Thanks, guys.
All of them illegal. Coming up, more on the markets this morning ahead of key inflation data. The futures, we're going to have Mayorkas on, in fact, a little bit later. Futures right now up 97. We're coming right back.
Download the app.
Tomorrow on Squawk Box, Ron Barron will join us to talk Tesla, Elon Musk's government role, and much more. That's starting at 7 a.m. Eastern Time. Make sure you don't miss it. Tesla, of course, is Ron Barron's largest holding. That stock is up 33% year to date. Squawk Box will be right back. is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Disney topping analyst profit and revenue expectations in its fiscal fourth quarter results. Those beats were driven by about $250 million in direct-to-consumer profits. The Street also seeming to cheer Disney's earnings growth guidance this morning. In fact, that was probably the most important part of all of this. The company's CFO, Hugh Johnston, joined us in the last hour.
I think 24 in many ways was the pivot point for the Walt Disney Company, and we have enough confidence now in the results that we're seeing to say we really can guide for the next couple of years.
Disney shares, by the way, up by 10% this morning. That is a huge move. In other corporate news, U.S. luxury houses Capri and Tapestry calling off their $8.5 billion plans to merge. That follows a successful lawsuit from the Federal Trade Commission aimed at blocking that deal. And ex-rival Blue Sky gaining more than 1 million users over the last week and surging to the top of the free apps section in Apple's App Store. That move indicates some social media users may be looking for different outlets following Elon Musk's takeover of X in last week's election.
Meantime, take a look at the futures right now. We got the Dow up about 103 points, the S&P 500 up about 9 points there, and the NASDAQ up about 21 points. Also want to show you the 10-year note. Right now you're looking at, well, I'm looking around 4.447 on the 10-year, the 2-year at 4.284. I want to get straight over to Dom Chu, who's got a look at this morning's pre-market movers. Dom?
Good morning, Andrew, Becky, and Joe. We'll start off with an analyst upgrade of Campbell's Soup this morning. Those shares are higher by roughly 1.33% after Piper Sandler raised its rating on the food processor to an overweight rating from neutral. They also raised the target price up to $56. It was $44 prior. They're citing improving retail and volume trends in the U.S. and also as well as growth expectations for its newly acquired Rao's pasta sauce brand. So those shares up by 1.33%. Next up, you got Cisco shares falling after the computer networking equipment giant and Dow component reported better than expected profits and revenues, but gave a full year forecast that was raised from its prior view, but still seen as somewhat disappointing compared to consensus estimates. So those shares down about 2.5%. And we'll end on a gain in shares of CNH Industrial. They're up just about 5%. This is the European farm equipment maker. It's catching the eye of hedge fund manager David Einhorn over at Greenlight Capital. He told the CNBC Delivering Alpha audience just yesterday that he's taken a stake in the company and says there are multiple reasons why.
It pays a 3 or 4% dividend. They're buying back 5 or 6% of the stock. There's very little financial leverage. And sometime next year, or maybe even in early 2026, we'll come around to a more of an up part of the cycle, and people will begin envisioning a couple dollars of earnings on the next up cycle, and maybe you get 10 or 11 times that, in which case the stock could double over the next couple of years.
So Andrew, CNH shares up about 3.5% over the 12-month period, but down 17% so far this year. I'll send things back over to you.
Okay, let's talk more about the markets. The CBC's Delivering Alpha Summit yesterday. Billionaire investor Nelson Peltz sounding a note of caution about the rally that's taken place since President-elect Trump's victory last week. Take a look.
Trees don't grow to the sky. Definitely not uninterrupted. There will be something that will upset it. I think you've got euphoria from the election. On the other hand, you look at the international stocks have got slayed over the last week or so.
Who's right now with her take on the rally? Lisa Ossenberg is the head of investment strategy, JP Morgan Wealth Management. Trees don't go to the sky usually, though they seem to be going to the sky right now. The question is if there's somebody on the other end of the tree that's like with their axe or cutting it, and when that's going to happen, if it's going to.
Look, we think that 2025 is going to be a year to build on the strength of 2024's gains. While there has been some euphoria and kind of this optimistic knee-jerk reaction to the outcome of the election, what we're really basing our expectation for about 10% S&P 500 upside on is an improving fundamental backdrop. You've got broadening earnings growth, you have prospects for deregulation and lower taxes, and we see a lot of opportunity within the index.
What do you think of Warren Buffett building a $300 billion ark? Noah's Ark of cash. What does that say to you?
look, he is known to be a value investor, and like if there is one thing to be mindful of in this market, it's that valuations are high. I think, like Warren Buffett, we would encourage investors to get a little more opportunistic if we were to see a pullback and have some value opportunities emerge. But what we're really kind of basing that outlook on is the reality that earnings growth is going to continue. That's going to do the heavy lifting, even as valuations come down over the course of the next year.
You say even as valuations come down. Why do you say valuations come down?
I think, at 22 and a half times, they do look a little bit toppish. And so the good news is from 2025 to 2026, we think that you can get about 10% index level earnings growth. Every sector in the S&P 500 is expected to grow earnings for the first time in a few years. And so that's what's going to do the heavy lifting versus 2024's composition of returns, which has been a pretty even split between the two.
I don't know if you saw David Einhorn's comments, but he basically said, look, if we look back 10 years from now, and not to be a market timer, but if you said this was the time you were putting a lot of cash to work, he said it'd be very unlikely that you would look at that and go, that was like the greatest time in the world to do this. Sure. So for those folks who've been sitting on the sidelines, they might have missed the train earlier, or maybe they just came into some money or something's happened here. What are they supposed to do?
Well, talking first...
Besides call you.
Well, yeah, of course, call us, but thinking first about equity markets, we do think that new opportunities have emerged. Kind of related to the outcome of the election, the financial sector would be one example of that.
And you don't think that that's already baked in?
No, we would be buyers into the strength. We think between the deregulatory environment, prospects for increased M&A activity, there are going to be further headwinds, but we're also encouraging investors to really look across the entire investment opportunity set. Fixed income might be a little tricky and require investors to be on their toes in terms of navigating it into 2025, but within the alternative investment space, looking at opportunities in real estate, infrastructure, look really compelling to us.
Okay, Elise, thank you for coming in this morning. Appreciate it. We'll see.
Thank you.
Advanced Micro Devices announced it will lay off 4% of its staff globally. Boeing also plans to cut 10% of its global workforce. Joining us now to talk layoffs, also combined with the return to the office, Yale University lecturer Joanne Lippman. She's also a CNBC contributor. I guess one of the things, one of the points you're making, Joanne, is maybe, let's see, there's buyer's markets, seller's markets. What do you call it when a boss versus employees starts to get the upper hand again? What kind of market is that? But you think maybe we're starting to see a little shift that way?
So thanks, Joe. Yeah, I mean, we're starting to see a bit of a shift in terms of where the power resides from the employees to the employers. But I wouldn't get too excited about that right now because, look, the economy is still very strong. Consumer demand is still strong. And while we're hearing an awful lot about these very, very high-profile companies that are doing layoffs, for the most part, they are in the tech sector, in our business, in the media sector. And overall, you're not seeing, they represent a very small percentage of the companies that are out there and the employment that's out there, right? Unemployment is low. But the other thing, Joe, that we're seeing is they are trying to get people back into the office, particularly some of these very high profile companies like Amazon want them 5 days a week in the office. But again, they're a really small minority. The latest figures show that 80% of companies are still offering some version of remote hybrid work. And that does not seem to be shifting all that much.
I'm not going to say it's a conspiracy theory, but you actually, since layoffs might be coming, you think that some CEOs are demanding coming back so that they can get people to say, okay, forget it, I don't want to take this job and shove it, I don't work here anymore. Do you think that's actually happening? Go ahead.
Every time a company announces this 5 day a week, we're got to come back, that's the theory that surrounds it, is that they want to some people, and potentially there's some truth to that. But the fact is that bosses like to have people on the premises. I've spent most of my career as an editor-in-chief, and I liked to have people in the office. And there's something to be said. I totally am very empathetic to the idea of culture and mentorship and creativity and all of those things. But that said, there is a reason why hybrid remote work remains so prevalent, and the reason is that it works, right? We are now far enough along that we have seen tons of research that's already come out on this. So we know 98% of employees want it. We know from Nick Bloom, who you guys know well at Stanford, who has studied this, who has found that when you have hybrid work, not fully remote, hybrid work, productivity remains the same, and employees are happier. The employee retention is better. You lose fewer people. So it's all on the upside. Whereas when you force people to come back to work 5 days a week, there's been research on that out of the University of Pittsburgh, and they've found it actually doesn't even help your financial results. So it doesn't help your earnings per share. It doesn't help your quarterly earnings. And so all of the evidence is stacking up on the side of retaining some version of remote hybrid work.
I guess I'm just jealous, I guess. I can't believe that it, because we have, obviously, there's no such thing. But I just can't believe, it just seems like a way to work less and sort of just, just screw around, not do as much. And you keep saying that the research shows that it's just as productive. I don't know, I guess I'm old school, but there will never be fully remote, maybe. Maybe hybrid is something that we'll have forever, Joanna. Can we leave it at, we can agree on that?
I would agree. I would agree with you, Joe, on that fully remote is going away. Fully remote has not been very successful. But when you're talking about having people in the office 3 or 4 days a week and then having a day a week
Slackers. Slackers. All right, Joe.
Slackers. I would totally disagree with you.
I'm jealous. I know.
Look, Joe, I would rather be in person with you today rather than on my
Where are you? Then you're not.
Why
This
am I
hybrid
not?
stuff is crap. It would be much better if you were here. Thank you, Joanne. I'm just kidding. Thank you.
Joe.
All right, good to have you. Coming up, Colony Capital founder Tom Barrack is going to join us for a wide-ranging interview on President-elect Trump's White House win. We're going to talk about the transition, some of the controversial picks for the Trump administration that we've seen in the last couple of days, making headlines also this morning. Stay tuned. Squawk Box will be right back.
Yesterday I called myself.
President-elect Trump at the White House yesterday, meeting with President Biden, our next guest, longtime ally of President-elect Trump, and chaired the 2016 inaugural committee. Years ago, joining us now in an exclusive interview is investor Tom Barrack, Colony Capital founder. It's good to have you on.
And good to be
see
back.
you.
And Becky's timeless. Nothing changes.
Good.
Hi, love you, Tom.
What am I?
I didn't leave you out. I just moved you in.
Love it.
Tom, I think one of the things we talked about off camera, were you more involved in the last Trump run and presidency than you have been this time? You've always been longtime friends, obviously, with the president-elect, but I don't think you got involved this time till just a couple months ago. Is that a fact? Or, yeah,
no, absolutely. Sure. In the 2016 process, none of us knew exactly what we were doing, right? I mean, the president-elect was marching down a road. I mean, think of it. People say he's a great political athlete. He's just a great athlete. To wander from business into politics with no background, no governing experience was tough. And he did a great job, but I was very involved then and kind of just chipping away at the system. I thought it was great to have a new warrior in the middle of it, just stirring things up. And he did the best job he possibly could that first term. Then we started this process of what people are calling corruption of the justice system. I don't think it's not corrupt. These people are not corrupt. Merrick Garland is not corrupt. He's accomplished, he's educated, he's pedigreed, he's trying to do the right thing, but the system is corroded. So underneath, if you have 94 political appointees who are U.S. attorneys, and by the way, these people are sensational, right? They're 30 to 40 years old, men and women come out of the elite law schools, pedigreed. Right. It's like a rugby game. So you have a political appointed attorney general who says, I have 10,000 felony laws. I'm going to enforce them in accordance with my political belief from the president that I have. So it's like a rugby game. It's horrible. It's rugged, but they're not corrupt. The system, the FBI reports to the DOJ. Everybody cooperates with everybody, and this is what President Trump found himself in. And I got frustrated watching it after my experience, and we talked about it before, at the end of the day, the system works for all of us. But in moments, it doesn't. So you have to allow it to play out. In my case, after 2 years of serious litigation, a Brooklyn jury, who's not a fan of President Trump, a brilliant judge, who at every motion tonight for 2 years, I said, I'm going to go to Sing Sing for 40 years. This judge hates me. After 2 months of trial, one day comes back, complete adjudication. President Trump attacked. Everybody tried to kill him. Financially attacked, personally attacked, spiritually attacked. And the nation comes up with this incredible moment. So I came back to him because honestly, what I learned is his instincts are so good. They really are. And all of us get frustrated because we have points of view around the edge that it seems a little bit harsh, or it seems, for instance, on some of his appointments.
Right. So give us the take on Matt Gaetz. You said his instincts you think are great. A lot of people raising their eyebrows on the Matt Gaetz piece of this, right?
Right. Well, I mean, you take the whole scene. Who he's put in place up until now. Tulsi, by the way, who I know really well, is absolutely sensational. And you have a lot of people, and you have Rick Grinnell and Kash Patel and Bill Hagerty, all these great athletes still on the side. To shake up the Department of Justice, I mean, just think about it. That is an unbelievable undertaking, because the civil servants, so you have thousands of attorneys, thousands of FBI agents, who also are not corrupt, but they see politicians come and go. So it's turn left, turn right, turn left, turn right.
But in terms of the trust or the distrust, right? I mean, part of this whole thing is about instilling trust in the system. Let's stipulate there's a lot of people who don't trust the system, in part because there was a worry about it was being weaponized by politicians, right? And so if we don't want that, and then there's a Matt Gaetz put in this place, the question is the perception, right? If half the country or more distrust this. By the way, I think more because there's other people even in the Republican Party who raise their eyebrows and say,
But does
is
this
this
make
really
the
the
entire
right person? Are there other people who could be loyal to the president, if you will, who might be more sensible and instill that semblance of trust and still be able to do the things you're talking about in terms of rooting out the corrosion?
Absolutely, and your analysis is exactly right. And you have to trust the president-elect's instincts. And I had this conversation with so many, living on either coast. At Halloween, I didn't have to put on a costume, right? I walk into a room, they freak out, right? There's nobody, Hollywood. I was not well received in those circles. And people used to say, why can't you just draw him back to the middle? Why can't he be reasonable? I said, he can absolutely be reasonable. He can absolutely go to the middle, but his instincts are saying that's not where America wants to be at the moment. He can draw him back to that. It's the same with Matt. He has a plan, he has a reason, he has an overwhelming vote from the people to do what it is that he thinks is right. And all I'm saying is let him be him. Just let's all get behind him for a moment. He's not going to be, retribution is not what he's interested in. He's interested in vindication. And I think. But
so you don't think that if Matt Gaetz is in that role, it's a super powerful role. By the way, you lived through litigation of your own. I don't even know what that cost you. But, it was funny. I was having a conversation with my son last night. We were talking about this. And my son said, well, if the justice system works, we shouldn't have to worry. You shouldn't worry about this kind of thing. And I said, true, but you also don't want prosecutors unfairly prosecuting people because the cost is real. It is. You probably spent hundreds of thousands, not millions of dollars.
You speaking about what's already happened, or what you're worried about happening now?
Both.
Okay.
Let's stipulate that.
I think that's Trump's whole reason for picking.
Right. But the question is, we're trying to root that out. Right.
You don't double down.
You don't double down, and that's the question I think about this piece.
But and you're so right. And by the way, it's millions. This is the saddest thing, right? As I say, the system works. It works for people who have resources. By God's grace, by the way, we can say God, that's another fantastic thing at the moment, right? But by God's grace, my family had the resources to allow me to get through this. But normal people who are facing a felony, a federal felony, the conviction rate is 99.7%. They have to flip, right? Which is this whole system. All they want, you think they wanted me? What do they care about some Lebanese financial lawyer that was in private equity, right? It's not interesting to them. So you're exactly right. But I think sending a shockwave through that system, and I don't know, I can't speak for the president. Right. What I can say is he's not using that as political capital.
You think it's going to be a recess appointment? You think
yes.
Gaetz is going to be, all right, yeah, he's going to be Attorney General.
Well, and I don't know. Again, I'm not speaking to the president.
Deputy AG important, Tom? Who do you think should
super? And the third in place is even more important because you need somebody who understands the plumbing. Mm-hmm. Right? When you go through all of the processes of how the FBI, special investigators, and classified information works, prosecutors have the grand jury. The grand jury can indict a ham sandwich, as they've always said. The defendants have no rights. But the process of what you do with a civil servant, it's the civil servants.
I mean, I think about it. If you really wanted to de-weaponize things and make sure that people weren't worried about such things, you almost think President Trump saying, okay, we're going to pardon Hunter Biden, right? Shut things down and end the process. And it's not that there aren't things that you could definitely go after him for that he's probably guilty of. The question's always been, which cases do you pick and which do you not?
Absolutely, 1,000, and we're all ready to have it over, right? And President Biden, by the way, President Biden, I know him personally, I adore him.
Biden's not going to do it.
I'm sad for everything that happened, and the greatest event besides President Trump being elected was seeing President-elect Trump and President Biden shaking hands with real smiles on their faces. Wow.
That was a lot of people talking about how real President Biden's smile was. I've never seen him
right.
Really. So it was beautiful. It was kind of surreal.
I think those things are not out of the question.
He just didn't seem unhappy.
It's not out of the question. I would anticipate. Right.
I am. I'm not sure who he voted for. I'm not completely sure he voted for.
Yeah, because it was what
Oh, I don't know about that. Let me ask you.
I'm not kidding.
Let me talk about Elon Musk.
Yes.
I'm so curious, as a business leader yourself, and somebody who's been watching all of this, sort of what role you think he's ultimately going to have, what role he's had thus far in terms of maybe even being bigger than we know. There was a line in the story yesterday that said he was almost the quote-unquote co-president. How much influence he's going to be able to have in this sort of blue ribbon committee through either executive orders and the like, but then on the flip side, obviously there's going to be a lot of, I imagine, bigger issues that will have to get dealt with by Congress and the Senate and the like.
Yeah, absolutely. Look, I look at it as a champion lion and a champion cheetah coming together, right? Elon Musk is, outside of the political arena, probably the most important innovator, creator, manufacturer, product creator. Think if you take Tesla, batteries, satellites, links in your brain, right? I mean, he single-handedly did more than NASA could do in 20 years. So he's thinking in a generation in a way that has to take us from bricks to bits. That's not the president-elect's main area. So in saying we have to move everybody's cheese, which he's done, right? How did these guys build? They built a data center that takes 4 years and 18 days. So I think that focus, and it's not co-presidency. Nobody co-presidents with this president. We've learned that, right? I mean, it's his road, it's his path.
Do you think they will be pals at the end of the 4 years?
Yes, I do. I think they respect each other in their own way.
Okay. Who do you want for treasury?
Pardon me?
Who do you want for treasury? Although we got to go.
Whoever the president picks.
Whoever the president picks.
I mean, you have great candidates. You have Howard Lutnick, you have Scott Bessant, you have you have Bill Hagerty that could do it himself.
Yeah. All right. Tom, thank you very much.
No,
we got
great being with you.
Good day.
Thanks.
Thank you.
When we come back, we do have breaking producer inflation data. Also, Homeland Security Secretary will be joining us as well. All of this coming up. Secretary Mayorkas. Squawk Box will be right back.
Apply.
Welcome back to Squawk Box. Rick Santelli here, live on CME HQ with the breaking news of the morning. The cousin to CPI, we have the wholesale version, PPI, for October. Headline number expected up 0.2. Once again, delivers up 0.2. In the rear view mirror, it was 0 unchanged. 0 unchanged would have been, we had 4 of those in 2024 thus far. Popping up 0.2 equals where we were in August. Find a higher number, you go to June when it was up 0.3. If you strip out food and energy, up 0.3, hotter than expected, hotter than the rear view mirror, up 0.3. That's the warmest since it was up 0.5 in June, equals where we were in August. Now, if we strip out food, energy, and trade, also hotter than expected, up 0.3, in the rear view mirror up 0.1, hottest since July when it was up 0.4. Now, let's take a step back and do a year over year, a bigger view. 2.4 expected, 2.3 expected, 2.4 warmer than expected. In the rear view mirror, 1.9, which was 1.8. 2.4 is the third highest reading of the year. To find a higher, you go to June, 2.9. Now, if we strip out food and energy on a year-over-year basis, expected 3%, rear view mirror 2.8, comes in at 3.5. 3.5, that is, 3.1. 3.1, and that is hotter than expected. Strip out food, energy, and trade, that's 3.5. 3.5 is the warmest, going all the way back to March of last year. Now, these numbers are definitely warmer. If you look at initial claims, 217,000, that is 4,000 less than 221, which was last week, unrevised. 217 would be the lightest going back to May of 24. And finally, on continuing claims, they remain above 1.8 million, coming in darn close to expectations, 1,873,000, following a slightly revised 1,884,000. We see that yields have picked up a bit. I'm a little surprised, actually, that they haven't picked up more, considering, let's see, 1, 2, 3, 4, 5. Pretty much every single number is hotter than the rear view mirror, and every single number outside of the headline up 0.2 is higher than expected. We've seen 2-year note yields move from 4.26 to 4.29, basically unchanged-ish. And we see 10-year note yields went from 4.43 to 4.45. 4.45 is also unchanged-ish. We're hovering very near the lowest closing yield since the first couple of days in July in a 10-year. And maybe the biggest story of late, outside of the big run in equities post-election, is the re-steepening of the yield curve and how the market seems to keep short rates like 2-year notes more in line with Fed expectations, which was evident yesterday in CPI, versus the long end, which seems to be paying attention to a variety of other issues. Becky, back to you.
Okay, Rick, thank you. For more on the data, we want to bring in Jerome Schneider. He's head of short-term portfolio management at PIMCO. Also, our very own Steve Leisman. And Steve, you go first. Tell us what else you're seeing in those numbers. Steve?
Yeah, something going on in demand for transportation and warehousing services. Not exactly sure what's going on there, whether or not, I don't know if that was strike related or something going on there. But that was a pretty big bump right there. Not sure if that was the reason. I had, according to my estimate, the ex-food energy in line with expectations. Didn't change the number, which was 0.3, but the Dow Jones forecast was for 0.3% on the ex-food energy. Look, this is definitely a bump hotter than expected in terms of the overall direction of things. Maybe you make it, it's in line or a little bit hotter on the month, but I think we're going through a bump here, not really sure. Most folks that I've read in terms of yesterday's CPI expect November to do better because of certain one-off things they think, like, for example, airline passengers yesterday. And Rick is exactly right. Guys, if you could put up, I don't even put them up together, but, sorry?
Better meaning lower inflation, right?
Better meaning lower, yes, in terms of next month. If you could put up charts of the 2-year yesterday and the 10-year, I want to visually show you what Rick was talking about. So you see the 2-year yield, I guess it's up this morning. Yesterday it fell and stayed down, while the 10-year went down and came back up, and that's why you did get that 8 basis point increase. Very interesting. I think Rick's got it exactly right. The 2 follows the Fed. The 10 has a lot of other things on its mind.
Very quickly, a little hotter than maybe anticipated in some ways of looking at it, Steve, but you don't think this is something that would call the Fed off from the expected cut in December?
Well, no, because they get another round of inflation reports in November before the next meeting. Before the November meeting. So there's reasons to think that the airline passenger thing, some other things in there, we'll see if they all net out. There were a few things that were down. The used car thing was a big issue. The 2.7% increase in used cars was a reason. People were like, well, that's not exactly what's going on. Also, the rent number is expected to come down. I don't know. I don't want to make it like I'm looking at only the things that were higher than normal and saying, well, let's get rid of those things. But most of the economists I've read say they think things are going to improve in November before the next meeting. And it is also the way the market is betting. Now, I will say, Kugler this morning, maybe a little on the hawkish side. You had Barkin earlier this week said, hey, equal outcomes. Inflation could be stuck or it could improve. So we are getting a little bit of hawkish commentary from the Federal Reserve. The market continues to bet, and I will just check this number here. I had an 80% number before this number, and it's still up to 77%, down a little bit. Anyway, still a pretty big bet in the market the Fed cuts in December.
All right, Jerome, you are in charge of short-term portfolio management at PIMCO. How much more complicated has your job gotten in the last couple of months?
Well, it's gotten complicated over the past 20 years as we've gone through a whole bevy of funding crisis. It's been the past couple of months, admittedly, central bank policy around the world has become more complicated, divergent in fact. And what we're really preparing for as investors for not only a higher rate environment, which we've seen over the past couple of years, but really more volatility to come. And there's a lot of question marks. As noted in the previous commentary, the front end of the market is really sort of encountering a bipolar world. One where you basically are reconciling the exact of data with potential policies in the government, which haven't necessarily come to fruition yet. And then the longer end of the market's really contending with a longer term view. Where is growth going to come? What is the impact of government, the G in growth and GDP? And more importantly, where do we think inflation is going to settle in the longer term? And these are things that both the public and the private sector have implications on a go-forward basis.
Why do you think we've seen this constant push on the longer end of the curve? What's your explanation? Because we have a bunch of explanations.
Well, the basic explanation is that you have more supply that's coming in nominal treasuries which need to be issued. And you have an evolving landscape of where that demand to buy those treasuries is going to come from. That isn't necessarily clear in the short term or longer term. So the rhetoric right now is that you'll have a steepening yield curve where the longer end demands more term premium, more compensation for owning those longer maturities. That's to be determined, and quite honestly, where we need to focus on is in the medium term, where we have risk assets that are priced pretty dearly at this point in time. Recognize the fact that the go-forward process, a second derivative as we get into 2025, of the policy implications, and more importantly, once again, inflation and growth, which the Federal Reserve has been focused on, becomes the dominating factor. So December isn't necessarily a big deal because cash rates will continue to go lower. But as we get into 2025, the volatility or the recalibration of risk appetite will be driven based upon where factors of the consumer and the government see inflation in the medium term.
You think we're headed into a bear market, a long-term bear market for bonds?
Not necessarily a long-term bear market, but you may not necessarily have the inverted yield curves or the flat yield curves that we've been used to for so long. And the real question is what is the appropriate compensation for inflation? And for an investor, a fixed income investor, as you think about it, you want to be paid on a real basis, on an inflation-adjusted basis, which simply means if inflation simply moves from 2% to perhaps 2.5% over the longer term, there has to be more compensation. And what we're witnessing is a real-time calibration. Investors should take a step back and just survey the landscape for what it is. It's simply a higher rate environment where volatility because of risk asset pricing may come in the medium term, and think about diversification as that simple approach to reduce that volatility. So think in terms of price adjusted terms and what price changes can do over that medium term. And investors will be rewarded on the longer term by looking at lower volatility total returns, which puts you into the income generation category.
Steve?
Hey, Joe, I don't know if you want to play this game, but you know the president probably better than, well, a lot of people, pretty better than anybody in this panel. Do you think at some point, Joe, he can step forward and offer some principles about what he thinks about debts and deficits and tax cuts and offset, and that would calm the market? I don't know at 447 if there's a need for him to do that, but I would imagine the market would react very favorably to some kind of sort of fiscal prudent commentary from the president-elect.
Yeah, no, I don't see that. I think you're going to hear mostly, and maybe not directly from him, but you're going to hear mostly about how deregulation is going to provide the impetus for a strong economy. I don't think suddenly he's going to say, he's suddenly going to say, no tax on tips. I don't know about that. I'm not sure about those taxes.
What if he? I'm just using here, Joe. What if he said that we're going to have an overall principle here, and our principle will be we're going to not blast the deficit, or we're going to try to be neutral on the deficit. We're going to do all these things.
I don't think I've ever heard him mention the deficit
neutral way.
I don't think I've ever heard him mention
the
deficit.
No.
The wild card that I would say is, in this whole discussion, is growth. And if you have a nominal growth increase, then clearly the fiscal side has a recalibration to go. That is to be determined, and what you're seeing in the longer end of the market is not necessarily a question mark, but a natural recalibration in yield terms of trying to assess that risk, if you will. And that makes it more attractive. The Federal Reserve ultimately has a heavy hand if growth diminishes.
Steve, I tell you what, if I don't make any outgoing calls because I'm waiting for the Treasury Secretary appointment to come my way. I haven't really talked about it yet, but I will. If that does happen, I will talk to you. I will talk to the country about the debt. Anything's possible at this point, isn't it?
Oh, wait a minute. I think so, but I think there's a lot of uncertainty, Joe, right? And we don't know how the president-elect feels about these issues. So I know we got to go, but maybe some discussion for another time. But I think he could have a pretty profound effect on markets.
Are you up for Fed chair? I put in a good word for you. That's what I'm talking about.
No, definitely not. It would reduce my ability to fish and play music if I was Fed chair. I wouldn't like that.
Exactly. It would reduce your ability to play music more than what I've already seen. No, I'm kidding.
You're remembering. All right, Steve, Rick, Jerome, thank you guys.
Coming up in just a moment, the Secretary of Homeland Security is going to join us for his first TV interview following last week's election. He's got some big news on AI and talk about some other news as well. Check out shares of Meta, though, right now. The EU just announcing it will fine the company nearly 800 million euros over what it calls abusive practices benefiting Facebook Marketplace. Meta says it will appeal that decision. Stay tuned. You're watching Squawk, and this is CNBC.
night's sleep.
All right, when we come back, responsible AI usage inside the nation's critical infrastructure, the government weighing in with new guidance this morning. We'll talk about it with the Secretary of Homeland Security. Squawk Box, we'll be right back.
Welcome back to Squawk Box. The Department of Homeland Security unveiling a set of recommendations for the safe development and deployment of artificial intelligence in America's infrastructure. The framework was developed with the help from the newly established Artificial Intelligence Safety and Security Board. It was chaired by the Secretary of Homeland Security and populated with some of the top CEOs in business, including OpenAI's Sam Altman, Microsoft's Satya Nadella, NVIDIA's Jensen Huang. Joining us right now, first on CNBC, is Secretary of Homeland Security, Alexandria Mayorkas. Good morning to you, Mr. Secretary. Thank you for joining us. It's a fascinating effort to try to regulate or at least put some guidelines around where AI is going. At the same time, of course, this is the end of this administration, and so I sort of have a double-barreled question, which is to say, what is the significance of this and where you see this going, but also what is the significance of this in the context that a new administration is coming into office in January?
Andrew, thanks so much for having me. So let me be clear that these are voluntary guidelines. They are not regulations. In fact, if companies throughout the AI ecosystem adopt and implement these voluntary guidelines, we can ward off precipitous regulation or legislation that can stifle America's leadership and innovation. The guidelines are groundbreaking in two different regards. Number one, and one you referenced at the outset, is the breadth of membership of the AI Safety and Security Board. We have brought in not only cloud and compute infrastructure providers, AI model developers, the companies that own and operate critical infrastructure, but we've also brought in civil society and the public sector. It's a remarkable expanse of participants on this board, number one. And number two, it sets forth a model of shared and separate responsibilities. Everyone in the AI ecosystem has a role to play and has responsibilities to assume and execute to ensure the safe and secure deployment of AI in critical infrastructure, which is our water, our energy.
The big details, though, of what these guidelines look like. There's been lots of questions about sort of these various roles, you know, a large language model that's closed, like an OpenAI version, versus you know, an open model that almost anybody can get, but then it appears from the guidelines that some of the cloud providers where these things would sit would also have some of their own guidelines around these things. How would it work?
So this is really an overarching architecture that we hope companies throughout will adopt and implement, and each one has its role to play, and we identify the different responsibilities. If it's a cloud and compute infrastructure provider, making sure that there's the access to that infrastructure is safe and secure, so it's not, in essence, polluted. The model developers in making sure there's data integrity. The critical infrastructure operators making sure that they're testing the systems before deploying these. The consequences can be incredibly advantageous on the one hand, but the risks are real on the other. So those are some simple examples.
What do you think this looks like as there is a transition? I recognize these are only guidelines, but to the extent a new administration comes in, potentially with either new, different, or other alternative priorities, where do you think this lands?
Well, it is our hope, and the members of the board are committed to it, is our hope that companies and organizations throughout the ecosystem adopt and implement these guidelines. It's going to advance the safety and security of the entire enterprise. This is not a regulatory regime. It's not a legislative regime. It is a voluntary framework, and we hope that it's really accepted and adopted throughout. It will also critically drive harmonization. What we can't have, companies suffer so much if there's a patchwork of regulations that control them, and it's so difficult to comply with sometimes regulations that are either in tension with one another or sometimes directly conflict. We're hoping this adoption and implementation is not only domestic, but international as well.
Mr. Secretary, while we have you here, you know, we've seen the results of the election, et cetera, and the border, and it became such a flashpoint and such a front and center issue. And one of the questions to Vice President Harris was, would you have done anything differently? And I don't know whether that affected the outcome, but just in a word, I know that you serve at the, you know, at the, whatever the president asks you to do is the way that you serve. But do you think that there should have been anything done differently over the past 4 years at the border? Do you think things could have, the election outcome could have been different? Anything that you would have done as an individual differently?
Well, Joe, I'm not going to speculate about electoral outcomes, but I can tell you this, that the model that we have in place now have driven the number of encounters at the southern border down below 2019 levels, the last year before the pandemic struck our country and the world. We're facing an unprecedented level of displacement of people around the world. We have actually built an architecture now that is proving tremendously successful.
Right. It was more recent than, I think some of the damage had already been done, Mr. Secretary, just with all due respect. Anything prior to that, like from the inception of the administration, that it could have been done differently? It was something that a lot of people just, I mean, it became a major flashpoint in
no
people's
question.
thinking for the election.
No question, it did, Joe. And remember where we were. Remember where we were up through May of 2023. Everyone across the aisle was really supporting the continuation of Title 42, the public health order, not an immigration measure, but a public health order, because we were still climbing out of the pandemic, more rapidly than any country in the hemisphere, but nevertheless still encountering it. So remember what the push was until May of 2023. And then what the administration did was correctly push for more funding for the Department of Homeland Security, as well as the only enduring solution, which is legislation to fix a broken system.
Mr. Secretary, we're out of time. How do you like Governor Kristi Noem, your potential successor?
I am going to focus on a smooth transition and ensure that she, if she is indeed confirmed, has an understanding of the challenges we face and a good understanding and grip on the tools and capabilities we've built to meet those challenges.
Okay, we're out of time. It's a longer conversation. I hope we get to continue to have it with you. Secretary, thank you for joining us this morning. Appreciate it.
Thank you, Andrew.
You bet. Squawk Box coming right back.
All right, welcome back, everybody. A programming note for you. Tomorrow at 7 a.m. Eastern Time, we will bring you a can't-miss interview with Barron Capital's Ron Barron. Obviously, he's a longtime investor in Tesla, in SpaceX, and in X, too. We'll get his take on Elon Musk's new government role. We'll talk about the markets since President-elect Trump's victory, where he sees things headed. He's always talked to us about inflation, and we'll see what he thinks about that at these points, too. We have lots to talk about with him tomorrow, so make sure you join us. Right now, final check on the markets before we hand things over to Squawk on the Street. And you're still looking at the Dow up by about 87 points. The NASDAQ has reversed course. It's down by 6.66 points. S&P futures up by about 2 points. And Treasury market today posts the PPI numbers that were a little hotter than anticipated. The 10-year is now yielding 4.46. The 2-year is a little lower than when we started the show. It's right now at 4.28. That does it for us today. Make sure you join us right back here tomorrow. Right now it's time for Squawk on the Street.
Good
Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Favors at Liberty Media Investor Day in New York. A lot to come from David this morning. Future's pretty steady, but off the highs as the 10-year pops to close to 4.5, highest since July. Core PPI runs a 10th hot. Jobless claims lowest since mid-May. Powell speaks this afternoon. Our roadmap begins with streaming strength. Disney's streaming business swings to a profit on the quarter, along with a huge gain in subs. Shares are rallying ahead of the open.
Plus, media continues to be in focus. I'm going to be joined in the next couple hours by John Malone, Chris Winfrey, Greg Maffei, and Jerry Bruckheimer, all from Liberty's Investor Day right here in New York this morning. And calling it quits. Capri and Tapestry. No surprise here, although the market is reacting. They are abandoning any plans to merge. Of course, the deal had been blocked by a federal judge. Carl?
Guys, let's get to Disney first. Up sharply in the pre-market after that quarterly beat. The company benefits from profitability in its streaming business, as well as box office successes from films like Inside Out 2 and Deadpool Wolverine. Also, this long-term upbeat guidance, Jim, this is going to be the best reaction to earnings in a couple decades.
Well, I'm used to very short-term guidance. I'm used to hearing that okay numbers when it comes to streaming. I'm not used to hearing good numbers when it comes to movies. I'm used to hearing quantity over quality would be the analyst comments. And I'll just use it. I'm used to a couple of woke movies thrown in there that people just say, well, that ruins things. I don't know. I'm not that woke, so I don't know. I don't go to those. But I will say this. Hugh Johnson's making a difference there. This is the kind of thing that you hear from a PepsiCo review was. I feel really good about it. My Travel Trust owner, we have a meeting at 12. This was going to be one of those where I felt I had to defend my life. I now am up, but I don't have to defend my life. And a lot of people who are in this thing, David, no longer have to defend their life. And you know that was the position when it came back to the 80s after the Peltz, let's just say, defeat.
Yeah, this could be a real turning point in terms of sentiment, Jim. I don't want to put words in your mouth. Obviously, I know you've been more positive on the name recently, and it seems as though that may have been the correct posture. Yes, I do, and I intend to continue to. I will make fun of you every day and whatever I can find to do so for the rest of your life, probably. Even when we're no longer doing this, I'm going to call you every morning just to make fun of you. So you have that to look forward to.
I have to tell you, I heard Andrew Ross Sorkin be you, and he's programmed to say good things about it.
But Jim, in terms of good things, you're talking now about a $6 a share number in earnings for fiscal year 26. And so you tell me what the multiple on that should be, and we get a sense for a stock price that, could be sort of recalibrating, so to speak, for more growth than had been anticipated. And obviously, Carl mentioned direct-to-consumer. That number was a strong one at $253 million in EBIT for the quarter. That was better than anticipated. We all know the studio had a very good summer, of course. We talked about Deadpool and Wolverine and Inside Out 2. But even linear, while weaker, of course, may not have been quite as weak as some had imagined it would be. It continues to suffer, though, no doubt about that. But this is putting it on the right trajectory, and I guess, Jim, when you come back to it, Parks continues to be a key question. Can that regain its mojo?
I think Parks can, and they obviously talk about how the Paris Olympics threw things off there. I think that there's far more to do with the weather that people don't talk about when it comes to Florida. I think that Bob Iger would tell you, lay off the theme parks, they're a gem. And then we've got these big ships coming up. I know people might think that that's not that important, new ship coming in, but if you look at Royal Caribbean, you look at Norwegian Cruise, you say to yourself, you know what? If you have a ship, you can make a long-term projection. Again, if every single beat, every line beats except for perhaps linear, which just comes in okay, then Carl, I say to myself, franchise back, good franchise, multiple. Let's give it a higher one than we thought, and that's where I think David could say, and you have to be with me that maybe give the 22 multiple. Look, this S&P's got a 23 multiple. Isn't this subtly better than the S&P? I think it is.
Interesting. Also interesting to listen to Johnston talk about linear being more trouble than it's worth to spin out.
Whoa.
Helps protect a different kind of demographic if you want to have everybody in. And now we do have some sound from Iger on the call a few moments ago. Take a listen.
We've emerged from a period of considerable challenges and disruption, and we're well positioned for growth. We put in place specific strategies to generate growth across our businesses, and our solid results this quarter are a clear indication they've been successful. Given the momentum we see, we believe we can continue to drive healthy growth beyond this year, including our expectation of high single-digit adjusted EPS growth in fiscal 2025, accelerating to double-digit adjusted EPS growth in fiscal 2026 and 27.
That's the magic line right there. And as Julia pointed out on Squawk, they don't do this kind of long-range guidance very often.
No, and I also think that there's this nice integration of Hulu with Disney Plus. By the way, Hulu's numbers are actually influenced by
Hulu
the Bear.
won 7.
The Bear actually matters. No.
You think this is about Chef? Jim Gaffigan and everybody else?
Yeah, but look, listen, Chef Carl, I think so. We all get Chef Jeff in my office. We got Chef Ben. David, $15 billion in cash provided by operations. Isn't that an interesting number when you think about what they may have to pay Comcast?
Yeah, I mean, we spend this, it's funny, I haven't gotten a lot of new reporting on where things stand in terms of the continued dispute over the value of Hulu. To your point, there may be more coming to Comcast when it's ultimately adjudicated. But to your point, targeting $3 billion in stock repurchases in fiscal year 25, Jim, how does that sound to you?
I thought that was great. Plus, I like to see that dividend growth is now going to be like a lot of other companies. It's no longer going to be episodic. David, at one point, we thought the idea that they could be doing any buybacks, given the fact how much they had to spend on streaming, would be fanciful. This, again, has the appearance of a high-growth consumer packaged goods company, David, except for it's experiential. I like it. I think that there's going to be a lot of analysts who say, you know what, this is better than I thought. And David, one thing that is certain, and when you start talking about an outfit like Paramount, which I know you're going to do, I'm much more comfortable with this one than any. I like Warner Brothers Discovery, but that's on like a takeout. David, this is comfort. I find it comfort versus what you're going to be talking about.
Yeah, well, Paramount, the purchase, most which is underway, but will not close until next year, is a different company. Obviously, they don't have Parks and Experiences, for example, which is a key differentiator here, given how important that's been to Disney overall and continues to be. I did, to your point, speak with Jerry Cardinale, of course, of Redbird, one of the partners with David Ellison and Larry Ellison, who are buying Paramount, and Ben Affleck, whose artist equity company sort of has a new approach in terms of how they're trying to, or at least a somewhat different approach in terms of how they're trying to position video content and bring in all of the people involved in it in terms of compensation and getting them paid. But, Affleck had some thoughts as well on the linear opportunity that I thought were somewhat interesting. Take a listen.
Hollywood needs more robust entities like Paramount. It's bad for the business when competition goes away, when it turns into, oligopolies. It doesn't function as well. And there's a hell of a lot of money to be made in the linear studio space. I'd love to be Jerry and David Ellison. I'd love to go into that ecosystem and say, yeah, there's going to be some difficulties, there's going to be some hard choices, but there's tremendous opportunity.
So, Jim, he sees opportunity at Paramount, even if you don't.
No, he's working for it. I'm just saying that if you're not working for it, if you're trying to analyze what a security worth, look at all these things at Disney. They got theme parks, they got ships, they have tremendous library. That I know Paramount has a library. These guys should be able to monetize it. David, I love that interview, and I'll tell you why. Carl, this is important. You know he spoke English. Ben Affleck spoke English. It kind of reminds me when people finally realize, like Metallica, when they realize, we can go on tour and make all our money. The record companies are screwing us. We're going to be able to make money. I actually felt that he spoke in a plain way that made me feel, maybe there's going to be more accrual to the people who make the content.
It's not often you get creators willing to weigh in on business models, and when they're confident enough, they carry a lot of legitimacy. I do wonder, when you hear Johnston say, I'm happy with the mix, if that puts the brakes on others who are still in the process of changing their own. or if you think Disney's already done that work.
Well, you take Disney out of the equation of who's going to be making these deals, and which I thought they did. Then I say, well, hold it. Maybe Lilliputian's going to make deals because Goliath has said, you know what, we're done, we're fine. Again, it speaks to the idea that I can model Disney. I don't have to say, you know what, once they buy the film library of Warner Brothers, then now I'll get excited about it. No, a real company doesn't have to. Doesn't have to bet its life, David. We can just say, hey, you know what, Disney, I can model that. It's a real company.
I know, but on Disney, I mean, the main cable network is ESPN. And obviously, you know, they already break out sports now. They're going to be launching the direct-to-consumer of ESPN next summer. That's going to be important. There's really, when it comes to the other linear networks or even ABC, yes, I can go back to that Sun Valley interview with Iger I did in the summer 2023, where he said nothing is off the table, but clearly that's a bit of a different approach now you're hearing from Hugh Johnson. But it doesn't necessarily move the needle one way or the other. Whereas for other companies, it's obviously much more vital to their future. At Warner Brothers Discovery, it's the cable networks that still generate almost all the cash flow. Direct-to-consumer starting to actually help contribute. And that pays down, pays the interest and pays down the debt. It's too important. And for us, well, we'll see what the future holds for Comcast and or at least the cable networks of our parent company in terms of our future and whether we are going to be out there and can benefit from some sort of first mover advantage and consolidate even more, guys. Remains to be seen, as does the administration's response to any and all of these deals. I would come back with the, you know, who knows? The Attorney General could be Matt Gaetz. You just don't know what they're going to like and what they're not going to like, Jim, when it comes to particular deals.
Yeah, but I think, David, when you take a look at this Disney now, it's so different from the one that you and I would sit next to each other and say, you know what, ESPN had 100 million subs, then it's got 90 million, then it's got 80 million. That was the discourse, was how many subs they had at ESPN. Nobody's even talking about that anymore. So thank heaven that's off the table.
Yeah, we've moved past it. You're right. You're right.
Well, I think
because
that's
it ended. Yeah, linear's over,
ended.
so we don't have to talk about it anymore.
Yeah, so that's it. I mean, ESPN, wow. But you bring it up now, I think that Bob Iger would say, what? What? I mean, what? Green Bay plays the Eagles on Monday. What do you care? Be like, that would be, he can pivot. Carl, these guys have pivoted. And one thing when they pivot, you start looking at this company as being maybe the premier experiential company rather than a pitiful, helpless giant that used to be great.
So no return to the 80s for Nelson, in other words, as he said yesterday.
No, I mean, look, this is a model company. You can model the company. I wish people at home realize when we say model, what that means is there's these analysts and they're all trying to figure out what to do, and now Hugh Johnson tells them what to do, then they do it and they recommend the stock. It's kind of like what I'm used to with a lot of other stocks. I mean, it's almost Netflix. I mean, Netflix, you have to have someone every single day because I think it's like programmed. But
Tyson Paul tomorrow night. It's going to be interesting. When we come back, David's exclusive with Liberty Media's chair, John Malone, who will soon, as you know, become interim CEO of the company. Take a look at the pre-market here. We'll get to some other big names on a light week for earnings. Cisco, Sonos, nice results out of European companies today. ASML, Deutsche Telekom, Burberry, in just a moment.
Tight. There you go. This time I'll take off my shoes. Good morning, retail traders.
Off at CollersandCo.com. Welcome back to Squawk on the Street. I'm David Faber at the annual.
Goodbye. Goodbye, Mr. Faber. I'm looking for a little pullback today. Oh, we got a pullback. We got a flag there on SPY. We got a flag on the QQQ. No, we might get a little bounce. A buck 50. Just symmetrical flag, so it's getting ready to break here in a second. What time is it? 18 after. Could come down one more time, the IWM, or break the 63. We've got a double bottoms on all of them to look at in case we do start to pull back. Then we have that double bottom low, or that down here. It just keeps going on down, finishes that channel. IWM. Okay, what else was I going to do? There's one other thing I was going to do. Take off my shoes and make my coffee. I did a video this morning, just kind of update, let people know that I'm still out there. I've been sick for the last 3 days. I have to start being a little bit better, more careful with my body, for sure. Edibles from now on.
$80, $90, $100 times earnings is no longer a barrier if it's a great company that's a leader in the
coffee
space.
made.
So there are signs of froth that are definitely creeping in.
Froth?
The one thing that's interesting in this market is that
PLTR.
the move up in bond yields has led to massive selling in staples, real estate investment trusts, utilities. So in some of the big pharma has been absolutely run over. So if you're interested in yield, I would definitely be looking at some of these defensive areas. If bond yields keep going up, people start worrying about growth before long, and there'll be a rotation back into these areas, and you're able to get them at very oversold
Apple's
levels
breaking out.
with really attractive dividends.
I mean, Apple.
the market's
Disney.
frothy on the one hand, but there are big parts of the market on the defensive side that look like really great value. So that may be a place to look heading into 2025.
Really good stuff. Love that analysis. Good breakdown, Alec. The froth subject here, let's mine that a little more because I think that is interesting right now, because when we had these moments of kind of euphoric valuation expansion, there was usually a good bit of money behind it, like fresh stimulus, like COVID mania, or some kind of big kind of macro catalyst. I get we've got the cuts. Do you think that's contributing to it, some of these animal spirits, or are those animal spirits the ones that need to be justified by some Trump 2.0 trade? Because if it's the latter, I mean, that could be, who knows when that type of real policy will start kicking in. But if it's like the Fed and it's more like pure liquidity, then okay, we're a little bit more used to that.
I think it's a combination, obviously, but more it's about the election. That was the big surprise. All the experts told us it was going to be super close.
Good morning, Randy. Good morning, Magnificent. Good morning, R. Disney breaking out today, big time. And I knew it was going to come, but it just took a long time. Very long time. I mean, that's one heck of a sell-off. Target was 107, so I got, right now, we broke resistance, so 109 has to become support for now. The 200. Yeah, that's a good spot. Not enough. I mean, we could drop down more. I gotta get that coffee made. And the same thing will happen to Nike. Its bounce is coming one day. We've got a snake. It's hard to really say. Let's do this. Oh God. Okay. Right there. See what I did there when I charted that up? That's a head and shoulders. You got your left shoulder and your right shoulder. So we're at 1, 2, 3 right now. So it's got to break the 200 here on the 1 hour. Actually, let's see if it breaks the EMA. And then it starts to move up. And right in here is your pivot point. Right about in there. Nike. At 5 minutes. Okay. It's a smelly bush. Water. Oh, water, you drown me, even in a drought. Your love has run out. Oh, water, you burn me. Oh, fire, you burn me.
This record proudly presents the Four Musketeers. This is the song we lovers of war to sing. We can't go wrong, we're happy as a king. We beat the drum as we march along, we clash the cymbal and bang the gong. We sing out strong, the bucket of water song. Stand on one leg and point up at the sun. Red full of his nose, we're sure it must be fun. But no matter who or what you are, we know something you'll enjoy by far to sing out this song, the bucket of water song. This is the song we love the water sing. We can't go wrong, we're happy as a king. We beat the drum as we march along.
I love my water.
We sing out strong, the bucket of water song.
Though life is hard, we do the best we can.
Take a bath, drink orange juice.
Fellow man, we put the baddies in their place. We fight the foes of the human race. But whatever the case, we take it in the face.
Water! And we're off to the races. God, look at that spike. Right it open. We hit the 200. Where's my platform? Oh, I don't even have them up yet. Jimmy. Okay, I got an alert on Dave. I had a pullback alert on Dave. Dave had, what, great earnings? So I got the Fibonacci set up. Keep it on watch and put it over here on this monitor. It had a huge breakout. I mean, $30. It could drop more. Okay, we broke out, well, let me see. Boeing's dropping for a double bottom. Got a head and shoulders. Boeing. Boeing, November 15 would be tomorrow. This would be a day scalp. Ooh, spread's too wide. Wow. Spread's too wide. I don't like that. It's $1.26. The 140 strikes are at let's keep it on watch. Something about that. I just don't like the way it looks. The option chain. You got 138 to 160 spread. Mirror's popping a little bit. Well, it would have bounced up a little bit. Boeing did. 148, 160. Damn it. 180. Oh boy. I missed that. $188. Wow, that sucks. 148 to 188. I mean 189. That'd have been 40 cents. I'd have called it a day. 195. Definitely call it a day now. Oh well, $500. $2. You're disgusting. Mr. Green.
Party had some commentary, but we also had this QYLD. Now, the QYLD, for everybody to understand, this is a NASDAQ 100 covered call ETF. So they own a basket of securities, and then they sell a covered call against it. And they usually...
Darn it. That really sucks. 222 now. $231. I'm gonna cry. Oh well. That was oh, save. With Dave and we got save. I didn't think about looking at it again today first thing, so that's not much of a move. I'd have scalped it. I scalped it for 10 cents. These stocks that have news like Save and Dave and Shop and Spot, the ones that had these big breakouts already. See, we're back to like yesterday. I got a watch list. Shop's on it. So, you know, I missed a trade yesterday. So I want to go back and look at it. And if this thing falls back and hits this support right here, I think we have a real strong buy. You got to get them alerts in there. Spot, another good one. Had that big breakout. So you take and put your Fibby on it. Right here's your pivot point. You look for a pivot point. You got a pivot point right in here. And set your Fibonacci. We'll do it from this breakout point. So let's see at the top of that channel. We pull right back to that 61.8%. So that's where you want to set your alert. Right above it. Okay, my SPY just got alerted. Where are you? Hurry up. Get ready for SPY. December 15, 16, 8, what? 14th, okay, 15. The 599 or the 598s. Call. $5.98 strike. Okay, get ready. $120. Come on, baby. I think I'm going to get her right in here. We got to wait for confirmation now. 118. $118 in. 3 black crows, 4 black crows. It's a little risky. Sure, put a tight stop. Damn it. Okay. I'm pretty positive here. Let's see. I have to add a few more. We can go all the way back down to the double bottom down here. Break it. I dare you. Tesla bouncing off the same support from yesterday. Mannequin says. I'm in SPY. Yep, that is support. It's what I had down here in a way to come pull back to. There we go. Anybody take the SPY with Bobo? This is what I'm thinking. Snake. So you want to draw the snake in. I might have got in a little bit too early on this trade. Let's be real here. We got a tweezer bottom down here at the bottom. $595.91. Hey, little sister, what is going on? White wedding, yeah. So, how many times have you been married? 5. God. I heard that Diddy had naked basketball games. Come on now. You're not doing me any good here. If this doesn't work, I'm stopping right out. Because I got a buck dip, according to my alert here. Dun 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 dun. Me and my drum. Blank out.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Dial 1-888-555-1212 and sponsor Washboardjim's Academy. 10% of collections, please. For free? What the hell? Schwab! That's pretty good. I have to. Any of you laugh on that one? Come on. Someone had to crack a smile. Crack a smile. Somewhere over the rainbow, I'm out at 141. That I love you, all in the day's fun. I wish I was a crocodile, and I would stick around for a while. Munich, Paris, everybody talk about. Pop music, talk about. You don't mess around with Jim. And you don't mess around with Jim. Hey, hey, hey. I got my money and I needed it now. Do you understand the resistance on this? Jim, I'm kind of new to trading, and I heard that you were one of the best scalpers out there, and so I wanted to ask you a personal question. Is it true that you have no hair on your chest? I have very little. When I was 13, I tried to get a transsexual operation and it didn't work out too well. Jim, I hear about this snake. So you jumped in that trade a little soon. You said something about a tweezer? What do you mean by that? A tweezer bottom, Tweezer, tweezer. Tweezer bottom is when you're looking at a bottom and you have two consecutive bodies forming together. So that's where I took the trade. I had I called it risky because I hadn't broke out of the channel yet, just a little bit. So I decided to go ahead and when it's coming down, it broke out, came back and pulled back and created that tweezer bottom. That's when I jumped in because I seen it breaking out of the channel. So I got in a little early. So you got the snake, breakout, pull back. Now you need the boom. So let's look at these calls again. And they're at 123, the 598s. And 10 of them here. Damn it. I waited around too long yakking. Shit. There's a long leg doji right there. We got an inverse head and shoulders right here. He's going to break out. Just got to catch it at the right time here. We could get a little fake out and come down to a double bottom. We had snake breakout, pull back on, let's look at SPX. Huh. Can you check on the work order? Door latch on the door leading into the back offices is missing cover. Water pressure in the sink in the men's bathroom. It's always been the same. I guess I'll look at it. And I'll also go up there here in a second and look at that door you're talking about. I will do. And that one leak that I was telling you close to the fire extinguisher, I told the guy that I was going in there Tuesday and we might be working on that. And he said that it happened during that big rain we had last week. Can't wait till I stop working. I'm so tired of it. I think every job I've had has been something to do with stress management. From being a supervisor to being always having to fire people. People, I mean, get a complaint because the water pressure is too high in a sink. Hello.
Can't do anything right at the moment. JD under pressure, whole China trade under pressure. We do see some interesting activity in today's market. The dollar's cooled off a little bit. Bonds have
Tesla dropping back some.
Come under a tiny bit of pressure here. Bitcoin too, flip down red.
Pressure in the market.
Some risk off early on.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
We'll be right back.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for next-gen investing.
1 p.m. Eastern, only on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. no overdraft fees, and enhanced
I
security
almost went to
features
the
to
hospital
keep your
Monday
money
and
safe.
Tuesday because of
Also,
my
because
lungs.
your investor checking account
My
is
throat.
linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Might have
Moving
had
funds
COVID.
between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Morning Trade Live. We're in hour 2 of our show here. Tiny bit of risk off, a little speck of selling. S&P's right now down about 20 bips, so all right, a little bit of a swing to the downside for sure. Russell bearing the brunt of it.
Get ready to
again,
squeeze.
As we've got about a little bit more of a quarter.
And this is where the breakout comes. Nope. Double bottom, Jimmy said.
It came back around, so it's a decent enough bond stock.
Okay. After I took this trade, I said we could come back down and do a double bottom. It's got to hold this support, so get your call ready. The same trade. Let's break out. Wrong position. And if it's got to hold this double bottom or we're out. this was the last time. I mean, it's got to break out here real soon. Yeah. Bring it. Did I say 122? Hello. James, this is Brendan. Did you see that smile on my face when I welcomed Donald Trump back to the White House? That's the biggest smile I've had in 4 years. I mean, did you see his smile? I mean, he's like he put a brand new set of teeth in. Back down to 110. Do. We're waiting for the breakout. I'm waiting for the takeout. Not working here. Okay, we're retesting the double. This is a true double bottom now. Let's see if we do break that right here. Should have sold at 122. But I think we can come up and break this and double top, hit the VWAP. Come on now. Jimmy might have to stop out. Give me 80 cents. Could add more here and it'll really bring that down. But I'm a little too risky of a trade, maybe. 918. IWM, what's it? AMD pulling back. Spot jumped up. Tesla down. Oh, Tesla hit my, I think that's my support level. Tesla hit my support level. I called in the video. Where's my call here? Oh shit. 93. Damn it. Okay. I gotta get out of this one here. Fuck me. Can't see nothing. Oh, that's the VWAP. I don't want that. I messed up my... Jesus. Can't see shit. I'm gonna add on here, I think. I didn't get out. I missed it. Come on, baby. $86. I missed that 81. Right now I'm down 220. Not sure when to add. If I want to. Kind of got stuck in this now. Come on, baby. I'll stop out if it gets any lower than that third line. $93. $97. Let's break it. I stuck with it. It's not easy sometimes when you're We're at 102 now. I'm in the green. Average at $1. God darn it. VWAP, baby. VWAP chop. This would be an exit idea if you're in the trade. Then I'll be saying, damn it. So you see the resistance, right? Off that trend line that I drew. Miss Haba, is there any way we can go out on a date tonight? Make sure you wear your bikini. I forgot why I put that on there now. I think it's... Breakout. It's either get out now at 112 because we retested double top, or just give it a few more minutes. Yesterday, SPX I sold way too soon. I could have made $3,000 on them two options. Plus what I already had made. But that ain't gonna happen with SPY, only on the SPX. Tesla gap fill. $317.93. I think that's what I mentioned, right? In the video. We're at 114. Break it. I don't know if we have enough power to break this or not. I know if I sell it, it'll pop. I'm liking this tape. $121. Should I sell SPY here? Magnificent. We broke VWAP. Be down 200 and now up 200. I'm in the SPY calls. I'm up a couple hundred, more than that, but I'm up 400. Rodney, I'll take it and watch it. I'm gonna sell this shit and it'll pop. Damn it. No, 400 altogether. 400 contract. You know what I'd do about that. If I got that lucky with 20 contracts at, woo, 400 a contract times 20. Okay, that's it.
The zoom in here.
Yeah,
this is helpful.
So orange, +2 channel right here, 301 or so. +3 channel, 336, 337, around those areas. Those are some points to watch here, but based on the old best close, right about where we are right now is where the bulls need to hold on.
What's this moving average?
You know, our green support area that we kind of talked about, 265 to 273 or so.
Yeah. Wow, it's a moment here that really matters a lot for Tesla. Actually, this is really good perspective because the gappiness, this is where it feels different than the Amazon chart. When you zoom in and see the gappiness along the way. Like this is a single candle here, okay, from what, 300 to 320. So like, I mean, this is what makes Tesla fun. This past $55, $58, you know, range is 4 days.
This was a big binary trade, you know.
Exactly.
It was either going to go great or, you know, who knows? We don't speculate here, but it seemed like it was very dependent on one of two outcomes.
Absolutely, 100%, absolutely. So is this binary event, now the question is if it's still that way trading like that or if it's gonna cool off, because we did see that sort of with the...
Guys, quit being so unprofessional. You got a $50, $100 breakout. You're going to consolidate. You're going to consolidate off news that Elon is going to be co-president to Trump. You be in the now.
Battle. Definitely gonna watch Tesla today closely at 320. I like that perspective, Rick. All right, NVIDIA, last one here ahead of next week. Seems pretty solid, but maybe getting a little stuck too.
Yeah, and I will say that we always discuss NVIDIA so heavily before its earnings. I think the same risk applies to what we saw last quarter. The risk is no movement as far as next Wednesday's price, but we are still expecting sales growth of 82%, earnings upside of 88% year over year. Maybe
killer.
One concern I've seen among analysts, overwhelmingly so, is that fourth quarter guide right now, we are already anticipating about 67% sales growth and 58% earnings growth, which would mark a deceleration in growth. And I feel as though the street is very hard on NVIDIA for any degree of deceleration. So they have to be able to put up big numbers and continue to see these big numbers to maintain, I think, these...
Oh, God. You're getting bad as CNBC. This morning I did a video here on Tesla, and it pulled right back and triggered my support level. I had 317.93. That I talked about the three white soldiers right here. And I said it needed to hold above them three white soldiers. It gained respect off that candle down on that soldier. This is an hour time frame. So this is a very important support level right here. I mean, very important. To start talking like them guys, it'd be a pretty good drop on down to $300. And that's where I would want to keep it above that 300 to keep it bullish. 359, somewhere in that area, above the 200 EMA. So yeah, these guys are a little bit. Everybody bashes Tesla anyway, but they were pumping Rivian yesterday. It's really a lot of people. I guess a lot of investors are in this thing. Look at the knife on it. Rivian's a piece of shit. Let's get that straight. They raised the price target to $12, Goldman Sachs. So they've got all the fat cats are invested in this stock, and they're going to pump it. You heard this guy talking just a little bit ago about Tesla. It's the same thing here. What's moving this stock? Because all the institutions are at the bottom, and they got Volkswagen involved, and was it some other company involved? Was it UPS or FedEx or I can't remember. Ford? $127, Jesus. I knew it. 129. Blanket. See, I'm out of the trade now. I wish I wasn't. $127. Been $120. Mara's pulling back to support. I talked about Bitcoin this morning. I said 80,000 maybe. Nvidia just hit resistance. 148.60. Thought I had COVID. Out most of the calls, good deal. And Jimmy's out. Don't really want to be, but I'm gonna go get my potato warmed up. Oh, could have had the noise on.
Group, because they're not all doing as good as Amazon. We were charting earlier, Diane. It's like it's a little bit more sparse. We were looking at the chart for Tesla, which was the big hot winner, and that's kind of like desperately trying to hold on to 320. It seems like there's a little bit of tension.
Desperately? Watch your wording.
Yeah, there definitely is a kind of a tightrope act that we're seeing today. But you know what seems to stand out to me as a continued winner with this kind of a post-election halo around it is the financials. When you look at them as a basket, they continue to move higher. For instance, XLF continuing to move higher today, not by as much as we saw, but they had that big move, those inflows that went into financials starting right after the election. You saw more than $1.5 billion move into that. You're seeing ongoing gains there. JP Morgan Chase moving.
I guarantee none of these guys seen this coming.
Bank of America, Wells Fargo, inching a little bit higher in terms of the gains there. So it seems to be, the clear beneficiaries in this President-elect Trump 2.0 world are continuing to reign over the financials, where you see growth with the expectation that friendlier regulatory environment will benefit that sector, especially when you think about, kind of the loosening of the reins for deal activity, M&A activity, and even IPO activity, because we've been talking about throughout the year green shoots in that space, and now, the environment seems more ripe for that, whether it's IPO or M&A activity.
That's, to me, going to be one of the most fun potential changes in the environment, but it does also give us that perspective on the calendar again, that some of that stuff could be pretty far away. I wonder if that's kind of what folks are thinking with some of these post-election trades, where you get excited, And all of it could be very real and true, but then it's like, oh, we got at least 2 months, at very least, like a bare minimum. I mean, some of this stuff will start to come to fruition as they talk plans and whatnot, given that the president-elect's already appointing people, but still, a long ways out for a lot of it. Mike, this morning, it looks like, to me, bonds are catching a bid because of the little move in risk off, but maybe they just got tired after inflation. Give me your treasury take real fast.
Yeah, I think the move in bonds, the move in yields to the downside is more a reaction function to the lack of PPI moving to where the whisper numbers were for PPI and CPI coming into this week. I think the reaction shows us that many global investors, macro investors, had expected a much more hawkish month-over-month and year-over-year number in both of those. Yesterday's move was a little surprising considering CPI was largely benign and lended towards the disinflationary theme, in my opinion, but today's numbers, I think, reinforce that idea, giving a little bit downward pressure on the 10 and 30-year yields. That said, largely benign CPI data lends support to another cut, in my opinion, in December, probably a pause in January, but this increases the likelihood of an already strong economy probably getting a little bit stronger as we move into the first part of the year. And the way that yields are going to move to the upside from here, they're right at a very critical long-term resistance level that connects on the 10-year, the 2023 and 2024 highs. The move is similar to the dollar. In order for it to break above that, you got to have a growth accelerate from here over 2.5%.
Something big. I hear you. Good stuff. I would love to talk more about the notion of the D's cut, but we got to jump. Appreciate you guys. Thanks, Diane. Thanks, Mike. Good close to the session there. Good look at the charts and some of the movers. Trading 360 with Nicole Penalties is coming up next. I'll see you this afternoon. Market on close. Have a great day. Good luck.
Good luck.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
There's my knife I wanted.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network.
Yeah.
Coffee. I'm Jenny Horn. Join us for next gen.
Jenny Horn.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And share our skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
know what to do, so I just sat around waiting for the rest of
Good morning. We're 9 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We'll have more on what's going on with inflation. We have a market that is back and forth, but down for the week, so a lot to discuss. Our 360 Spotlight, we'll discuss Spirit Airlines as the company is reportedly considering bankruptcy protection. More on that in a moment. Disruptor is MasterCard. This after Wells Fargo's latest price target implies new all-time highs for that credit card company stock. And our 360 round will dive into the earnings for Disney.
I just want to let you know, that's why I didn't want to be with anybody.
Let's take a look here at the markets. I was just looking at the week-to-date performance, and you have the S&P down about 0.25% right now. It's down 8 points at 59.77. The Nasdaq's down 0.5% this week, 20,992. The Dow also lower, though nearly unchanged line, 43,938. And the Russell down 1.5% this week. Oil and gold are mixed. Gold still continues its fall off 2,800 highs, which wasn't too long ago. It's down $10. Oil right now at 69.97. And so we are seeing oil there. 68.97. And that's just up today. And right now, 13.88 on the VIX, and the dollar continues this 106 handle. So showing some strength. But what's going on here with Bitcoin? 88,640. It was moments ago, it was above 90,000. It felt in the last 24 hours, but pulling back. So there you have it. That is the big picture. Let's continue to look at some names and stocks on the move.
I got Bitcoin going to 80,000.
Correspondent here on Schwab Network, taking a look at Tapestry and Capri. What's with that merger? The merger that is not the very latest.
Yeah, Nicole, I have to say I'm a little bit surprised because as we do come into this new administration from the White House, I have been reading that there's this thinking that we could see a lot of these failed mergers come through. We could see an easing regulatory environment. So I'm surprised that they are right now already somewhat throwing in the towel, but perhaps this is being perceived as good news because Capri is up around 4.7% here. And this was the name that really got hit by news of the initial blocking of the merger. We saw the shares cut basically in half in one single session, trading at over $40 a share and then closing out, yearly lows at right now $18.70 a share. So substantial repricing in Capri. Tapestry is the one though that's really making a nice move to the upside today at 12.4%. As these companies did mutually agree on terminating their merger agreement and said this was the best interest of both companies, as the required closing condition of receiving necessary U.S. regulatory approvals, they said was unlikely to be met by the merger agreement's outside date of February 10th of 2025. So the Capri chairman and CEO did say that with the termination of this agreement, they're
inverse head and shoulders
continuing to return to growth. He said he remains confident in their long-term growth potential for numerous reasons. They said they have an incredible portfolio of luxury houses. Those include Versace, Jimmy Choo, Michael Kors, and a strong brand desirability. Also, with over 1,200 now retail locations globally, combined with a robust digital platform, they feel confident in their ability to continue to serve their customers and execute on further growth here, and said that there's a lot of exciting product and omni-channel launches ahead with their strategies. They are right now catering to this luxury market that has remained fairly insulated. This name is traded on its own tandem on regards to this merger. But if you look at Tapestry, now we're up 56%, roughly 56.5% on the year. And both of these names, I do think, remain relatively more insulated from some of the
Hey, little sister, what is going on?
Capri's chart objectively looking much stronger, Tapestry than Capri. But I do think this seems like a collective sigh of relief because at least there won't be any more back and forth as far as this merger is concerned.
Oh?
Okay, thank you so much. It's good to see you, Jenny Horner.
It's good to see you too, Jay.
Tapestry and Capri. All right, let's get some insights on the news shaping the markets. For that, we welcome in Rebecca Walzer, President, Walzer Wealth Management is here. Thank you for being here.
Glad to be here, Nicole.
What a week we had.
Yes.
We were new high, everything was taking off, and it seems the last few days have been choppy. What do you think is happening here?
Well, obviously Trump's election, and I think the world said, oh, okay, we're going to have some bullish equity price movement and price action. So that's been great. But obviously CPI yesterday coming in at 2.6 versus the expected 2.4.
Right.
And PPI today coming in kind of in line with expectations, a little bit more, but 0.2 advanced for 2.4 year over year. So Nicole, what this is telling us is that even though Powell is now saying, look, I'm more concerned about the labor markets now as opposed to inflation, as the opposite story what he was telling us when he was raising rates. The truth is that we can see in the 10-year that bonds are already pricing in more risk, and that this is really hamstringing the Fed's policy decision.
When he started this shit,
their last cut in this past week, this 25 bips, we've already regained all of the cuts.
When he started this shit, the word was that they did want to see problems in the labor market to start cutting the rates. That's when they started saying it. That was the big deal. Put us in a recession. I am stressed. Oh. What was I saying? You got a message. Raise employment. That's what they were looking for, was a slowdown in the economy, not a breakout in the economy. And that's what we got. We got a breakout because we're in a very irrational market, something I'm not used to in my 20 years of trading. So I'm on high alert. I'm taking advantage of these knives. But that's what they were wanting. So don't act naive, woman.
To do that. So that's going to be a really interesting power play dynamic between these two people.
Right. And, I was reading, too, that, he said he can't fire me by law, right? Something like that. But I was also reading that Trump is likely to keep Jay Powell if he
bounced off the right shoulder.
Path of cutting or pausing. That it was okay until his retirement or end of this contract arises. So what do you do with the markets here? I mean, where do you make money between now and the end of the year or in the next 6 to 12 months?
So I know, Nicole, I'm going to be vindicated at some point. I am still expecting, based on the China situation that's happening and based on the Germany manufacturing collapse that's happening, between those two things, we're already seeing a forward price projection of global demand for oil, crude, coming substantially down. Right now we're at the 68. We're seeing some commodities experts price it in the $51 range. So if you see that kind of global demand slowdown, Nicole, then that is a bellwether tell that we are in global recession, and it will come to us. Trump there or not, it will come to us. We can't fight the entire world's slowdown.
You did say, I mean, you did say something like 30%.
I know.
You said a big sell-off. You said big sell-off. I mean, I don't know. What are you saying?
It's coming still. Even with
and
Trump,
how do you quantify big now?
I still think that we are looking at a 30% plus because people do not understand how overinflated our pricing is of these equities. I mean, that has been, since 2022.
Well, she is preaching my song. I can't argue with her here. I mean, I've been saying it too. This is very irrational. I was just saying it before she started yakking. Very, very, very irrational market. I think 20. She said 30. I don't know about that.
Pro cryptocurrencies, private cryptocurrencies, as opposed to the Biden administration. So that's a positive. You have everyone thinking Trump is going to be able to really stimulate economic engine and growth. That's all positive, but it does not change the global slowdown that we're seeing. And we can
It doesn't matter, honey.
So, and look, I've had oil people on who came and talked about a 5 handle, right?
Europe's been in a recession for over 20-some years. China is in a recession. Iran is in a recession. Russia's in a recession. And we're still booming along, baby. Because we're America.
You know, we've been big on commodities, and we've actually, with gold, we've outperformed the market, all three indexes up to the year to date. So we'll see how that goes now, because gold is obviously retrenching, so we know that's happening. But I would say, Nicole, that the buy-in time is when you see this actual economic. You're going to see an economic shift. I believe it's going to come before the end of the year, but it is going to come, I believe, before Trump is actually installed as the president. They will, of course, blame Trump already. They're already blaming Trump. Just like they said, oh, he's elected, thank him for the bullish run here we've had on equities. They'll blame him if, everything collapses. And so I do believe that we are going to be pretty on the sidelines of safety and commodities until we see the shift.
Yeah.
Yeah.
And the trivia question, which I only have a question, I don't have the answer, and you were talking about Bitcoin. I was reading this morning, they said Odell Beckham Jr., the NFL player, got paid in Bitcoin a couple of years ago.
Yes.
He wanted his salary in Bitcoin. How much is it worth today?
Yes.
All right, everybody Google that and find out the answer.
And make sure he held it over 12 months, so it's good, it's long-term.
Yeah, he definitely did incredibly well. Rebecca Walzer, it's always great to see you. Thank you so much. Rebecca Walzer, President of Walzer Wealth Management. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Joe DeGay will take us through the trades for Tesla, Amazon, Palantir. Now, these are some goodies. Trading 360, Schwab Network next.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live in New York City here at the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. He'll take us through the trades. Joe DeGay, portfolio manager of the Rational Equity Armor Fund. Good to see you, Joe. Rebecca Walzer is worried about a big sell-off. I mean, she's been talking about 30% sell-off since, I think, last month. She's worried. She's worried about China. She's worried about global demand. And so she sees some big sell-off. At the same time, I have so many guests who are risk on. Where do you stand?
Yeah,
I stand
the
right here.
risk-on trade is because there's
This is
a lot
where I
of
stand.
optimism, there's a lot of potential stimulus coming in next year. I think the market's really pricing all
Tesla
that.
cooked?
That does certainly pose a big risk, of course. The higher we go, the bigger the risks are. I don't really want to fight this trend so much, but I got three names here, which are stocks which I love for the long haul, which are just flying high right now. I've got some ideas on how to get into them. I don't necessarily want to buy them, jump into these levels right now if I'm initiating a trade. I maybe want to raise my stops if I'm being long some of them, but I got some ideas how to get into them, just because waiting for a pullback is really what I really would love to do. But at the same time, volatility is there. We could still see upside surprises in these names, even at these high valuations.
Okay. And I know you have a few of the Mag 7 here. Let's talk about Tesla first. Some of your thoughts on Tesla.
Yeah, well, so we're still seeing this explosion of growth in electric vehicles. The core business of their company still has a bull case for it, of course, but they have so many other things going for them now. Just the innovation and the vertical integration of all these things. We know about the AI. We know about the potential in the robotics, their automated technology. So yes. I think all of that is kind of like the bottom line, the baseline. Of course, people are anticipating a friendly relationship with the new administration could be beneficial too.
Yeah, understood. Okay, let's see what Rick Ducat has to say about the charts. Rick?
Well, in regard to risk on versus risk off, discussions, it's more fun to be a bull. And you can see here that we have just been blasting off through many important technical levels here. The question then is when is the party over, and are you going to be left holding the bag? So if we are thinking about some potential pullback levels, just a general comment: after a breakout above a significant level, a pullback is common, and it's retested and then it continues on in the prevailing trend. And I'm not saying that's going to happen or anything. Just a very common situation that happens. And you can see here that even after we had some very notable intraday highs near 358.64, today we have kind of pulled back to our previous best close, our green line near 321.22. The day is still relatively young, but it looks like we may be falling through this level here. And notice as well that momentum is starting to wane. Green trend line being breached. We are out of the overbought area as well. So those are signs of some degradation of the trend here. Let's zoom in a little bit and consider some support and resistance. If things do continue to go to the upside, +3 channel, +4 channel, linear regression, standard deviation channels, those are 3 and 4 standard deviations up from our yearly linear regression line of best fit, 337, 372. Those are some areas to watch to the upside. To the downside, like I said, key to hold around 320, 321. And the +2 channel comes in near about 301. So some important levels to watch going forward.
Understood. Okay. Look, there's been such a mixed bag as to the new administration that maybe less regulation will do a fast track for full self-driving and autonomous, but at the same time, maybe this administration wouldn't be as open to subsidies and such for Tesla and EVs and the like, and also the tariffs. Where does that fit in? So it seems like there is a little bit of a push and pull in the story, but there's still a lot of Tesla bulls out there. Final thought, Joe?
Yeah, pullback in subsidies for EVs, maybe that hurts some of the other car companies more than Tesla, given their competitive advantage where they already are.
Finally, somebody with some sense. Competitive advantage. Tesla has they're 3 or 4 years ahead of these other car companies. 3 or 4, they are the godfather of the EV market. Fat cats can't stand it. They got to have that General Motors being number one. Or some piece of crap company called Rivian. Don't get me mad.
Cloud dominance that Amazon has. Yes, you know, they own the retail business essentially in America. Everyone is buying everything off of Amazon, so that business is going great. But their really growing business is their AWS. It continues to grow. The more and more people start utilizing AI, more companies jumping on board. They're gonna have the AWS there. People are gonna need to be on clouds, you know, whether you know theirs or Microsoft's or another. So I'm fully on board for Amazon continuing their upward trajectory. As long as the economy stays strong, they're going to do fantastic, and that's just another way to get into the game without even worrying about, you know, are they going to be the AI winner? Are they going to have the right software? They don't need to have the right, you know, large language model that people like, but they do have the cloud, and they're going to win no matter what.
Yeah, the latest that they're really beefing up is telehealth and some low price hair loss drugs for men in particular, but an anti-aging product. And Amazon, no, it says the headlines today.
Yeah, Nicole, that was kind of crude.
There's nothing that Amazon doesn't do. It's amazing. Let's see here, Rick, at the chart, please.
Yeah, definitely you know, a strong chart here. And you know, like our last chart, Tesla was kind of a binary thing. It was a lot depended on the election seemingly here. This is just more of strong general performance, but also another big push to the upside after these election results have come in here. Once again, you can see that if we highlight these areas of repeated resistance here, right around here where we kept topping out near about 200 or so, an energetic breakout when we did eventually cross above that area here. You can see that the general shape.
So here's one, Nile. I mean, I've been around for a long time. And Nile, I might have already went through this once, but I'm going to go through it again. Let's trade Nile at $2. I called it to go to 20. This was a $2 stock. So we had this big run on Nile, and everybody, I mean, we run all the way up to $60. And I was telling people, I said, man, this thing's, I think I went through this yesterday. I keep getting flashbacks. I said, this thing's way overbought. And everybody was just pumping it. This is the #1 EV company. And I'm going, no, it ain't. Tesla is. No. People arguing with me. Nile was going to be #1. Outstanding. I kind of liked their presentation of Nile, but because they had a different kind of deal going on. They're going to have battery switch out, if I remember right. You run your battery down, you can go to a gas station and switch it out in 5 minutes, 10 minutes, and move on. But when I started being buried, I mean, we had $2 all the way to $60. And I'm telling people, this is nuts. I said, don't. And people said, oh, we're going to 100. I mean, everybody was arguing with me. So I got out of the trade, and it bounced up $1 and then dipped, and then had nothing but drama ever since. Nile's cheap. And if China ever does turn around, it's a easy, I mean, to go long in a trade and not have to worry about it for 2 or 3 years. And go in little bits at a time and trade it like a millionaire.
Going to be looking at this type of software now. We're going to be able to add more customers. At some point, they could take that cash and just do a crazy hiring spree where they're hiring more more people to grow their customers faster. So that's one of the reasons why I love it. Is you're just kind of waiting and biding their time. It's gonna be another explosive growth for me. It's because they have that cash on hand, they can hire those people. So that's very exciting. Now that said, being at $62, $63, that's a very high, very lofty. It shouldn't be so surprising if there is a pullback in the name. So that'd be another area where another thing I'd be looking at, maybe adding on a pullback.
All right, thank you for that. Final quick thought here. Adding on a pullback, so he's still into the wave of the momentum here.
It's about the only smart thing you said.
Run. We saw every single index at a new high too. Final thoughts here on Palantir, Rick Ducat.
Another big election winner, just an explosive move to the upside here beyond our ceiling. Kind of the same theme we keep talking about is repeated ceilings and then a big push to the upside here. So, just cruising upward here. Once again, you can see we have a retreat back to an old closing level, this old high that we established near about 58.40 or so. That's about where we bottomed out today. Looks like we're holding on here. So all these situations.
CV mentions 57, 58
type pattern here where you get the big push to the upside, then a period of either triangular consolidation or two parallel lines in a downward channel. Very common trading setup. Many people are on the lookout for just frequently here. But RSI, kind of a mess.
Expansion pattern.
There's not really any clear trend right now here, but we are in the overbought area. We are quite high. We're at 77. RSI only goes up to 100. So if we were to look more closely with the idea that momentum is favoring the bulls now, even after this drop off here, +3 channel, +3 standard deviation channel comes in near 68. +2 channel lines up roughly with our old high close near 58.40. Below that, another notable close near about 51. So I'm a big Lord of the Rings fan too, so I just like the name Palantir.
All right. Joe, final words.
Yeah, I love the name. It sounds a little sinister though, being a Lord of the Rings fan. Just it's something where you can see around and the user can be corrupted potentially by somebody. So that might be a little sinister, but it is cool. It is being a Lord of the Rings fan.
God, I can't stand you, guy.
Technology, able to utilize these new tools, which is really the amazing thing about Palantir, being able to have this massive amount of data, being able to utilize it really quickly, make actionable decisions. It's actually like an actual use case for AI, which makes people money, which we're finally seeing. So that's why it's exciting for me.
Yeah, without a doubt.
You didn't sound excited.
45% gains year to date, but yes, beware, at least in part. Okay, Joe Tugay, Rick Ducat, thank you both so very much.
Tesla bouncing up a little bit.
Where we saw Tesla, Amazon, and Palantir. All right, we're going to spotlight Spirit Airlines next. The company reportedly considering bankruptcy now. The failed Frontier deal, the failed JetBlue deal. And can they make it to the new administration? The last person I spoke to said no.
Yes.
We'll talk all about it next.
They will, I guarantee it. Jim says they'll make it. I said it. What do you think about that, Magnificent?
Greater minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Do-do-do-do-do-do. Do-do-do-do-do.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalini, live on the floor of the New York Stock Exchange. It's time to spotlight Spirit Airlines. Now, this airline company considering bankruptcy. Those are the reports that had failed merger, most recently with Frontier, also the failed merger with JetBlue. David Nelson, chief strategist at Bell Point Asset Management, is with us. And look, they got a line of credit that was to help them, but it looks like they will file for bankruptcy. We don't have any real confirmation that they're filing for bankruptcy yet, right?
I haven't seen an actual headline to that effect, but just look at the debt load. It's $7 billion in debt, $147 million market cap. I'm not sure how much there is to add here. This is a pretty old story, very, very difficult industry. And maybe the best thing for the industry, Nicole, is to let this one go. It'll make the industry a little bit more healthy. What's ironic here is Frontier and Spirit were supposed to get together in 2022, and I think, if I remember correctly, JetBlue stepped over the top, blocked by the administration, and I think everybody's just walking away at this point.
And, there was some talk whether or not we could see Spirit Airlines try and hold on to the Trump administration and maybe make one of these deals happen, right, versus not. Is there any hope of that?
It's a possibility, but the question is, at this point, I'm not sure anybody wants it. Let it go into bankruptcy. The equity will be wiped out, and the airline industry will get access to those assets because a lot of that's going to be up for sale. Certainly the planes will, the routes will, and the leases will if it's under lease. So it's an opportunity for the airlines. And one added fact is you're looking at about, last count, I think it's about 300 pilots that will be furloughed, and that could ease some of the burden for some of the other airlines that are being forced right now to pay very, very hefty bonuses. I know senior captains that have jumped ship to go from one airline to another, and in some cases they're getting a couple of $100,000.
God.
So at this point now, if we let this one go, we don't have discount airlines.
Times have changed.
The guest I was speaking with yesterday was talking about how Europe has discount airlines. There was also this deal where other countries' airlines could do domestic routes. We're not likely to have that happen here in the United States of America. So if folks want a no-frills airline, what are they to do? I mean, you still have airline fares quite costly. Demand is high, but capacity is low, so it's still pushing this price up.
I can only tell you anecdotally, I'm a commercial pilot. I fly a lot around the country. I fly to a lot of
Disney hit my support.
And there are dozens and dozens of smaller airlines and things like Wheels Up, etc. The airline industry is morphing into a different animal at this point. So I actually think, purge out the weak. I think it's actually healthy for the industry. And we'll get through this. I don't see propping up an airline that's on its last legs. If I was, United Airlines or American Airlines, I'd let it go. I wouldn't step in.
You would not step in, just let it go.
I would not step in,
would you
just
buy
let it go.
stock? Yeah, understood. Would you buy stock on any of the other airlines today? I mean, are they a good investment in your opinion now or for the long term?
Holiday season, baby.
I've learned a lot as an investor in the airlines. So if I had to go to one, it would likely be Delta. Maybe not the best performer this year, but it's certainly one of the best run. They always seem to really, get through the worst of times and the best of times. It's a very difficult business because you're always, you can't control fuel prices, you can't control geopolitical events, and it's why they trade at such depressed multiples. So
I've never really thought about it like that.
I don't know if I buy.
Well, I know about
because
the
they
fuel,
have quite
but
a move. Maybe look for
political risk.
an opportunity to get in.
I never did.
Yeah,
Well, I kind of
understood.
did.
I mean, do you like the other
But I never
areas
really-
of travel better, whether it's hotels or cruise lines or gaming or, I don't know what else?
Probably the cruise lines, but some of the same issues apply there as well. You can't control these things, so you have to size your positions accordingly. There's a reason why Buffett got out of the airlines. He's been burned a lot of times. I've been burned a lot of times. Eventually, something happens, and you wish you didn't.
And then, there's also the other part of it, like Booking.com, Expedia. There are a lot of folks who really like some of those names, and when the guests come on, they often pick Booking as their favorite.
Booking has been a great name. I've been in and out of the name over the last number of years. I guess I'm a bit concerned right now with the advent of AI. I think it's going to really change the industry. A lot of traditional business models like a Booking, like an Expedia, are going to be challenged by upstarts and the ability for consumers to find other sources and ways to book themselves, maybe in a more efficient manner and maybe even save money.
Right, understood. So what's the final takeaway here? If we had a different administration, Spirit could have had its merger, maybe?
Yes.
Is the administration to blame for the demise of Spirit?
Yes.
Or is it Spirit's problem?
It's Spirit's problem now, but this was a company that likely would have been saved, under a different administration. It's one thing when you have two behemoths getting together, but when you have I didn't understand the blockage of JetBlue and Spirit. It made no sense.
Made no sense.
This company likely would have been saved then, but not even JetBlue can step in now, even under a new administration. I'd be surprised if they did.
And by the way, the shareholders, I think it's down 90%. I mean, do you get out now with $1.50 or something, $1.39?
You hold it. Say, fuck it.
If you've lost that much money in it,
You hold it.
just let it ride out.
Yep.
And see what happens. You
Yep.
never know. Maybe a white knight is around the corner. I'm not looking for one.
I am, you dick.
Yeah, understood. David Nelson, Bell Point Asset Management. An interesting
He
conversation.
could be right.
Sad one here for Spirit thus far. Thank you very much.
There's another man that needs hair.
Coming up, the disruptors. George Sillis is standing by. I'll take a look at MasterCard. After Wells Fargo raising the price target there on the shares, the new target will be new all-time highs for that stock. George Sillis here.
Amazon has new high.
Call. He'll also make a trade for us, an example trade. We'll be right back.
Amazon will start selling cheap hair loss drugs. Woo!
cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. The Dow is up 10. We've been over the unchanged line too many times to count so far. It's not even noon. I'd like to bring in Diane King Hall, senior markets correspondent here on Schwab Network, taking a look at a name in the semiconductor space, ASML, reiterating its outlook for the long term. Here's Diane to give us some of the details.
And you're seeing shares of ASML move higher off the back of this. So they've reaffirmed their long-term outlook over the next 5 years, so over the next half a decade. And so the street is rewarding it with an advance today off the back of that, future path forward with regard to sales growth. They're projecting sales growth of between 8 to 14% over this next 5 years. And basically, when I say over the next 5 years, I mean through 2030. Now, you recall that they had released their earnings early, unexpectedly. They published a day early, and you saw the stock drop precipitously off the back of that.
Day early.
Double digits at the time. So it is recovering some ground from that. And so you're seeing a more bullish outlook when you think about the path forward for ASML. And we know that it's kind of looked at as a proxy for the overall chips making space because they have that machine that is used in kind of producing these very high processing chips in the GPU space. So you kind of see it as a bellwether for the space, if you will. So ASML saying that the outlook looks good and that the addressable market through the next 5 years, they're expecting that to be more than $1 trillion. They've obviously had strength when we think about the NVIDIAs of the world and the Gen AI growth. Where there has been weakness has been in chips production when we think about cars and mobile phones. So that has been where that has been one of the challenges that ASML has faced. They said, the CEO said, quote, a few weeks ago we had a bit of a conservative view for 2025. I guess kind of trying to pull back from some of that cold water that occurred at the time when they accidentally released earnings early. But again, the street giving them the benefit of the doubt when it comes to the long-term outlook, and you're seeing shares rise at the moment by more than 5%.
And so there is some optimism, around this name here and the likes of NVIDIA and artificial intelligence as an opportunity overall, right?
Yeah.
When I think about NVIDIA, I saw an article saying that NVIDIA tops the expectations for sales growth through 2026 out of S&P 500 names. So it looks like AI is not slowing, right?
Yes, that's not slowing. So obviously that's one of the, kind of the strength area for ASML because they're the ones who makes that special machine that produces in this capacity. And obviously we'll know more about NVIDIA when they release earnings on the 20th, one of the remaining of the Mag 7. And so we're projecting to see strength there. The challenge for ASML has been the decline in chips. When we think about cars, we know there's been some sluggish demand with vehicles and mobile phones, although we're starting to see some recovery when it comes to mobile phones.
All right. Thank you, Diane King Hall. Great to see you. Appreciate it. Good luck there at ASML and some of those semi-ideas, big picture. Coming up next, our 360 round, we'll take a look at Walt Disney reporting its earnings this morning. The stock's been hitting 6-month highs. In reaction, our panel will break down the numbers. We'll be right back.
Jimmy just called out the SPX on an inverse head and shoulders. A booyah, yeah.
Giving you even
Well, the SPX just pulled back to an inverse head and shoulders. Let me see here. The SPX just went back to an inverse head and shoulders, and it's running up. We hit the 200 SMA. Now we're pulling back on an inverted hammer. We just hit the 200 SMA. The fat cats are at lunch, and Jim's playing his guitar. We want the SPX to go a little far. I count to 1, 2, 3, then I ask for one more. It makes 4. It makes 4. Let's see if we reverse from here, or we pull down to that second shoulder line tier, and then we bounce and break out for the rest of the day. Don't forget to kiss your wife. Tell her how much you love her. And give her a little spice. Say, honey, I'm going to take you out. And we're going to take this trade right here on this shoulder. SPX, where are we? The 598 at 96 cents. Yep. 0.96. Now we pulled back to the right shoulder for the second time. I'm about to cross that finish line. Blake it. I'm in at 96. Now I'm going to run it up to the 63. EMA. I'm a white male that can do two things at once. I can trade and chew gum and play my guitar for lunch. We're at $1. Well, that really is a nice good luck. Let's break this resistance and go a little higher for Uncle Zimmy. Boom. Break it, break it. Where's my coffee? Still in it to win it.
in 130 countries. But these two things were really clear to me, and that is advertising, which grew 3% this year and is expected to grow more in 2024. That was certainly a goodie. Those kinds of metrics certainly seem optimistic, right, Tom?
Absolutely, Nicole. They were very specific to note that from their Disney Plus subscriber growth, there was the best gains in the lowest price tier, which includes advertising. And to Corey's point, this is all sort of coming together now, right? Because they built this sort of large Disney Plus audience on the cheap monthly fees from some years ago. Now they've lost some when the prices increased, but now they're coming back and they're just dealing with ads, which are okay from a corporate standpoint. So I think that the seeds that were planted are starting to grow and bear fruit, and I think this is a positive for the company as a whole.
I know neither of you, I don't believe, are real stock analysts. I think this is a buy now because the CFO is saying, I wouldn't change anything about our Disney portfolio, just the way it is. Tom, does it seem like a winner in the long term?
What the fuck have I done here?
Yes, it does, because now that Iger's to me, the biggest thing is Disney putting out compelling content and producing?
I'm doing the wrong thing.
And it seems like the answer is tilting back to yes.
I just now realized
and
it.
If you combine the rest of sort of the structure of the business, then I do think it's attractive. Obviously, when Iger leaves in 26, that's going to be a huge question mark, but we can worry about that.
I got in the SPY instead. What the heck?
Yeah, and Corey, same. I mean, do you think that
We're
Disney,
still good.
which did have a gap up here on the earnings, as they noted, up 7% today.
I was right.
And they talked about the streaming profits, shining, the film releases shining.
Well,
everybody
this one
knows,
hurt.
Wolverine, Deadpool, etc. So they really did well in a lot of fronts. Does it seem like it would be a winner going forward in the next year or two?
That's my take. Disney has been notoriously conservative as it pertains to its projections and, the estimates that it would provide into.
Hey, don't use the word conservative and Disney in the same sentence.
As well as really the glowingly optimistic outlook that they've laid out for the next 2 years. If the company is projecting that sort of optimism relative to their previously conservative posture, I think that that's a good sign, and I think that the market is responding.
This guy's fired.
When we think of the
there's nothing conservative about Disney.
And the Disney Plus growth outlook, Tom, Netflix always is on top with the number of streamers. Prime Video seems to be doing really well. Where do they stand in the growth potential? I mean, do you think they're a power player in the streaming? What's going to be the main revenue for Disney in the next few years? Is it the makeup of all of these things together in the different businesses?
I think that it's really going to be sort of the content and the entertainment.
I can't believe I got these two backwards.
I think the parks are facing a bit of a headwind. Number one, on a COVID hangover that's going to continue for a while. Number two, the parks are incredibly expensive.
I got these at 96.
The parks are very, very expensive.
And it's a SPY, not the SPX.
Well, not just expensive to go to, but expensive to maintain and expand. I think it's the content. I think the streaming is important. I think the ESPN app coming out in next year could really help, because ESPN has kind of been almost like a dead weight on this company for a while. It was so many years ago that they were a really strong contributor that if they can boost that, it can help the bottom line and really combine with all the other pieces working. I think that streaming and good content at the box office is the growth story behind Disney.
Yeah, and look, they have so much from Hulu. They did note that in the new M&A friendly administration coming in, the possibilities, but that in fact, in many respects, you know, Bob Iger saying on the call, we don't really need more assets right now. And I'm paraphrasing, we have basically what we need from a content perspective in this disruptive media world. Final thoughts here, Corey.
The infrastructure is in place. The reality is, and especially when you're talking about the streaming landscape, there are going to be winners and going to be losers. I think everything that Iger has done over the course of the last 2 years is to ensure that when there is consolidation, a lot of the streaming platforms that currently exist are going to go away, that Disney has positioned itself to be one of the winners. Their infrastructure, the diversity of their offerings across streaming, whether you talk about Hulu, the more family-friendly offerings at Disney Plus, the sports offerings, which will always continue to be important, Disney has certainly positioned itself to not only be one of the survivors, but to be a winner.
Right. It's great to see both Thomas A. and Corey Martin.
Hey, it's too big to fail, buddy. It's too big to fail. And I don't know, I believe probably half of what he's had to say. I really don't have much positive things to say about Disney. Plus, we're going into the winter time, and that doesn't help Disney. Well, it does with Disney Plus. Oliver!
As we explore the second derivative, Gamma On is a brand new limited series to take your trading skills to the next level.
Right now I'm down
Subscribe to Schwab
196,
Network YouTube channel now.
160.
Schwab Bank Investor Checking. The checking
So we got a
account
snake.
built for investors, named highest in client satisfaction by
We got a
JD
long-legged
Power for
doji,
6 years
inverted
in a row.
hammer,
With Investor
and a
Checking,
spinning
you get
top.
the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It wants to break.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street.
What the hell did I just do
Monday
here?
through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device.
What did I just do?
For free. Only on the Schwab Network.
What the heck happened here? Wow, that was strange. Boeing's a double bottom. Boeing, the double bottom.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including market discussions, and then we'll look at some option strategies. We're going to look at NVIDIA, which is up nearly 200% so far this year into their earnings next week, and Applied Materials, which has fallen about 27% since hitting those all-time highs that we saw in July. They report after the closing bell. And then Mike Fuller is going to break down consumer sentiment data in DraftKings. The online gambling stock is up about 17% so far this month post their earnings. Now let's take a look at the major indices, which are all in the red. The benchmark S&P 500 and Dow Jones both down about 0.2%. Same for the NASDAQ 100 and the Russell 2000 lagging to the downside.
Okay, get ready for a double bottom. I'm going to add on here.
Let me break down the market action. Let's bring in my co-host, and that's Kevin Hinks. Kevin, got more inflation data today that kind of reaffirmed the fact that, hey, inflation's not coming down anymore. It's just kind of firming up here.
Yeah, you're just never going to get the market reaction to PPI that you do from CPI.
Right.
It's just not the same animal. But there were some pretty solid 1-minute candles when the number came out. Why? Because they were pretty hot.
Yeah.
If you look at the year-over-year numbers, they were not
Okay, 72
what
cents.
the market was looking for. 2.2% on headline, up from 1.8. Ex-food and energy, 2.2 up from 2%.
Wait, headline was 2.4% year over year from 1.9, right? Was 1.8.
I have 2.2.
Yeah. Well, I think we'll probably have that on the full screen.
What the fuck am I doing, man?
2.4 on that. Anyway.
Yeah.
Ex-food and energy trade services, 3.5%. God,
I can't get my shit together.
These are warm to approaching hot numbers. Now, again, it's PPI. The reaction is not the same. How do I know that?
Man, I can't get my fucking head together.
They tried to move and couldn't on this number. Now, they've had a nice run, but the dollar continues to just rip. And when the dollar rips like this, the total
I just can't get it together today.
Gold and commodities and metals in general, pretty harsh.
Yep, you take a look at that.
Fuck am I
move in the
putting this on
dollar.
SPX?
Yeah. The highest level in a year, November. Not really causing any headwinds because maybe this is a Trump trade where they think the dollar's going to strengthen a little bit. I think he wants it a little bit weaker. Yeah, but at the same time, it's starting to create some headwinds for the extension of this rally at least.
Yeah, and with yields here and the dollar rising, what's happening? Rallies are kind of fizzling out. Here's what I told Oliver Rennick this morning. The market so much wanted to put inflation worries in the rearview mirror, and the market won't let it because it keeps firming up, and inflation is still going to be an issue going forward. And all that 4.3 print that we got a couple months ago in unemployment that made Jerome Powell move his attention towards unemployment, he's going to speak today at 3 o'clock Eastern, 2 o'clock Chicago, and he's got to address inflation.
He's got to address these numbers that came out over the last 2 days because
he has to.
They have firmed up. Now the expectations.
Just be honest with the American people. Oh man, what happened here?
About 85% going into the number now, but just below 80% at this point. But that's basically saying that they're going to cut in December also, according to the CME FedWatch tool. But let's expand this conversation, bring in Alex Coffey, senior equity contributor here on the network. Alex, give me your take here on just the market action, because I look at it this way. If you're going to have this rally that we've had, and people are saying that, hey, we're going to get the Santa Claus rally, it's going to extend into the end of the year, maybe these pauses, maybe these consolidations, maybe slight pullbacks like this are healthy.
And I would say normal, most importantly. This is typically how the market reacts. It makes big kind of one-directional moves from time to time, and then the majority of the time, it kind of just chops around and goes sideways day to day, and minute to minute, and hour to hour, and that's sort of what you see. In regards to what you guys are talking about and Jerome Powell and inflation, like it just comes down to, is the inflation going to be accompanied by growth? Because going from 2.4 to 2% really doesn't make that big of a difference. They just threw a number out there in the 90s and they've stuck with that 2%. The concern is if it's 9%, 10%, 11%, on its way to 20% inflation, then you have some sort of issue. And that's not to say that inflation is not an issue for consumers. I'm not saying that. But if 2.5%, 3% inflation is accompanied by stronger growth, that's a better story than stifling growth just to like stubbornly get this inflation metric on these arbitrary numbers down to 2%.
Right.
So it just comes down to it. I mean, still like half the basket of the core goods and services in yesterday's CPI, core CPI, were in outright, it was like 48% were in outright deflationary territory. So it's not to say that it's like this widespread inflationary wave. It's mainly owner's equivalent rent and used car prices that influence CPI, okay? Well, owner's equivalent rent, it's a huge piece, but that's literally surveying owners of homes. You know, you guys own homes. It's like if I called you up and said, hey, I know you don't rent your home, but if you did, how much would you rent it for? How would you even know what to say? So I think
I know what I'd say. It'd be higher than what it should
but here's the
be higher than my mortgage.
It's a metric that is just it doesn't even make sense. You'd be much better off looking at like Zillow or some company that actually rents homes and say, hey, is rent going up or down? That's going to be way more sensitive to the real market's number than owner's equivalent rent, which is just some. I don't want to be too harsh.
I'd love to have I'd love to have that conversation.
Well, I'm gonna go through it again.
How come we can do high frequency in so?
Prices don't go down. It's not that easy. Once they're up, it's hard to mark down prices unless you start having big sales. But I got 13-gallon trash bags that I buy. They're up $2 for 150 bags in 4 years. That's probably about a 35% increase. Just in one of my items. And that price, I'll never see that price at $5 again. I'll keep paying $7, $8. Cleaning supplies are always hit real hard during the when there's a Democrat in office. That's just one item. I mean, I can just go down a whole list of price increases. More than I've seen in my 20 years of buying the stuff. I need 86 cents. Break the 21. Get these all backwards. I thought I was buying the SPX. And I ended up buying SPY. Blanket. We got a 1, 2, 3 setup here. We're just getting ready to find out if we're going to break this squeeze or come back down and retouch the third time on the bottom of this triangle. I'm going to call it an ascending triangle breakout. It's a little bit less than, oh, there we go. Blake it. Ding, 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 ding. Do, 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 do. Oh, there it is. 83. Disney just can't stay out of the news today. Come on. Time for the breakout.
Parks, but it's also expensive, and so you're also going to have to get an economy that's ramping up for all members of it, not just those who are able to invest in the market and participate into the upside.
That was a big narrative from the summer. The price.
Yeah, the price, and that's why they saw flat growth as far as their parks goes. But the movie business picked up a little bit with a couple.
I think there's 3 good movies.
Inside Out 2, Deadpool, Wolverine. Yep, those were outperformers. So stocks getting a nice reprieve, nice little bounce here today. But on the flip side, we're seeing some weakness in Cisco, Cav, and it was a pretty decent report. They beat 91 cents on EPS versus 87 cents per expected. Revenue beat slightly through $13.84 billion. But this was the 4th straight quarter of declining revenues, despite topping estimates, and maybe that's why it's getting hit.
And the stock is up 20% in the last 6 months.
Yeah.
So again, high bar for this earnings quarter. So for them. So yeah, this is, we talked about the fact that the stock had made a pretty significant run. It is a long way from its 50-day and 200-day moving average, and it's not a very expensive stock. So at $57, this is a name that's had a pretty incredible run and put up numbers that were
damn it.
Yeah. So the stock backing off. It's perfectly.
We talked about this yesterday, Alex. In 2000, year 2000, the stock was at the same price.
Yes.
I mean, it's.
I don't have data going back that far, but I do have some stuff that I can go back to.
Okay, we're retesting now.
The last 10 years.
Got my squeeze, not the one I wanted. But we're pulling back. Oh. Come on. Might have to get out of this. If this thing don't pull up here. Man, I feel a lot better today. I'm still coughing, but I might have had pneumonia. I got something like this a year or so ago. Yeah, I'm gonna have to get out of this here. Damn it. $68. Oh God. How much more? I got 594.73 for what? Oh, double bottom. I'm still in. I'll stay in this until I hit below that support level. $594.73. Tesla, yep. Very good job, mannequin. Did you watch my video this morning? Boy, it did bounce up nice, didn't it? Yeah. SPY did not trigger my alert. I hit 494.73 and it didn't trigger it.
Major move for NVIDIA. We know in the latest quarter they'd also approved this $50 billion in buybacks. So you are seeing some price target hikes across the board. Wedbush has boosted their price target on NVIDIA to $160 a share.
Boeing didn't hold.
They had it at $138 a share. Raymond James boosted it to $170 a share. Susquehanna has boosted their price target to $180 a share. Oppenheimer boosted their price target to $175 a share. They previously had it at $150 a share. HSBC has also boosted their price target.
Might have to take a loss.
Is $200 a share now that they see it running to maintaining a buy rating on this one.
Hopper leading to the Blackwell this year, with Rubin waiting in the sidelines for the next one coming up. The forecast for revenue is about $32.5 billion. Here's the thing, Diane, is the Whisper, whatever they come up with, do they have to beat by $2 billion? And here's the other question: is Supermicro hurting? Is that instability actually hurting NVIDIA's abilities? Because 6 days from now, the whole market is going to move off NVIDIA's numbers.
It's true. Well, it seems like Supermicro is isolated, especially when you look at the price action today of Supermicro compared to NVIDIA. So you're not seeing that downdraft happening in Supermicro spilling over into NVIDIA. NVIDIA continuing to hold on to its strength there, and it's seen as the leader here. To your point, Kevin, it makes sense. The street has been looking for this continued beat and raise kind of environment when it comes. We're looking quickly at a chart of Supermicro down 10% at the moment. But again, when you go over to NVIDIA, you're seeing that stock continue to rise ahead of its earnings, and you're seeing these price target increase. Let me go into a little bit of Raymond James' thesis behind their price target hike. They said, quote, "We expect another strong quarter driven by healthy Hopper demand, as you mentioned, and early Blackwell ramps. Supply remains a wild card, which could limit near-term upside." So that has been one of the things that's kind of been holding back a little bit. Can they address the total addressable market? Because we know, when we've seen the projections for the total addressable market for this space to come in more than $1 trillion when we look 5 years out to, say, 2030 or a little beyond that. That's according to some research from Gartner. So can NVIDIA continue to meet the demand there? And that was, when we've seen some breakdown at times, it's been about, we don't have enough strength to meet the total addressable market when it comes to the GPU space and how much this space is set to grow, especially when you look at 2025, 2026, where the market is expected to double in that space, or the need is expected to double in that space.
Jensen Huang said it's insane, the demand for Blackwell chip at this point. The bar is high in this one. They don't beat by $2 billion on revenue estimates like they have in the past few quarters. There might be some pain there just because the stock's up so high. I think
it seems to be whatever the number is, you got to beat it by $2 billion.
Yes,
right. It's like elementary how crazy it is, but that seems like the whisper of the whisper.
Yep. We'll wait and see on that. Great breakdown for us. That's Diane King Hall, senior markets correspondent here, breaking down the news for us. Let's bring Alex back in here. Alex, when you look at this one, as Kevin mentioned, this is going to set the tone for the overall market, especially with the equity market stretched on valuation, 22 times forward-looking EPS for next year. With valuations high, the stock's really high, you better hit on every metric.
Yeah, no doubt. And, I'll leave it to the analysts to project, what may or may not happen. Individuals can have their opinions on it. From a trading standpoint, one thing's for sure, this is one of the most, if not the most actively traded individual company of any. It's really NVIDIA or Tesla, and then kind of a distant third now would probably be the Apples of the world. But you're talking about a company that every dollar is like $25 billion in market cap. It's just absurd how much this thing moves around. But it has a relatively heightened implied volatility going into this, despite the fact that although there has been a few outliers throughout the years, this isn't a stock that actually moves as much as you kind of think it does around earnings a lot of times. Like last quarter, it was down 6%. Well, the implied move is more than that. The implied move is like 7-8%. And so when you're looking at the particular reactions here in this stock, it's going to be very difficult.
Triple bottom on Tesla.
So over the top exciting that it moves it higher, but everybody thinks the numbers are going to be at least strong. And so is it enough to maintain the stock price, perhaps even give it a little bit of upside? That's sort of the example trade that I looked at. That's what it's looking for. It's an iron butterfly, Tom. The nice thing about this is it's very customizable. So wherever you select your short strike to be, that's going to be sort of your sweet spot on this risk profile. I chose the round number of 150. And so if you get a little bit of upside over the next week, it's done for a $10 credit on a $15 wide iron butterfly, though. So $15 wide wings, $10 credit means that you have a chance to make 1,000. Probably not realistic, but it is theoretically your max profit. And then your max loss is 500. But what I find interesting about this is actually the $10 wide window between 140 and 160, where theoretically at expiration, you can be profitable in some fashion. And so the more closely you're able to project and put that short strike where the stock ends up by the end of next week, that's going to increase the chance for you to make more money. But all you need to do is stay in that $20 wide window over the next week. Now, a couple of last things. Most traders, I think, would probably wait till closer to the event to put something like this on. But you're looking at a little bit of weakness in the overall market today. Perhaps volatility is starting to bubble up just a little bit. And maybe you think that this stock, will calm down into earnings and volatilities will come down. You really only put this on now if you think that this is a price that won't be there next week.
Right. Let's break this one down. 22nd weekly cycle, so you capture that earnings event on the 20th. And that's the key here because implied volatility levels elevated in that option series. Alex is buying one of the 135 puts, selling the 150 call, and selling the 150 put. And then on the upside, buying the 165 strike call, $15 wide short iron condor on the platform. We call this the short iron butterfly because of the same common strike that you're selling on the call and the put. On this one, $10 credit. That's what you can potentially make on it. But Alex mentioned those break evens, 140 on the downside, 160 on the upside. Kevin, when you look at this, the risk reward setup looks pretty good, but this is a neutral strategy where you need it to be between those break evens and let time decay or theta work in your favor.
Jim, you got big balls.
The level should come down post earnings.
Yeah, this is Alex Coffey taking the other side of everyone's thought, thinking this stock can move, and saying, "Show me that it can move." Right, and he's given himself a pretty wide range, $20, in $10 in each direction. And by the way, he's made a little bet. He didn't short the 147 straddle.
If I bought 200 more,
so that gives him a slight upside bias to this.
20.
But it's selling the straddle,
20 more.
buying the wings. You want to sell it for as big a price as possible, buy it in for as cheap as possible.
Yep, selling the straddle in 150 strike, buying the strangle in the 135, 165. Alex, when you look at this, I'll look at the platform and it says, hey, November 22nd weekly option series that you did this example trade.
Think about getting more here.
Volatility levels elevated about 83% on aggregate in that series. But then the potential move that the option market's pricing in over the next 8 days, about nearly $15 on this one. So it's almost like, you've got a good risk reward setup, but you need it to be range bound, right?
Yeah, there's always going to be a trade-off when you're using
Spy just triggered my other alert.
strategies. You're going to have to take more risk to get outside that expected move when selling the straddle. And if you just sold the straddle, you're going to theoretically be outside of it, but you're also going to be theoretically exposed to tremendous move, an outlier move. And so by
I guess I had an alert set.
wide wings, you're able to bring your credit down and lower your profitability window, but you're also protecting yourself from the 20% decline, the 20% rallies, which this stock has proven it can do.
Right.
And so you're making an implicit call saying it's going to underperform the expected move. Anytime you're selling premium, here's a secret. Anytime you're selling premium into an earnings event, you're hoping it's going to underperform the volatility. That's essentially what your trade is.
Right.
But what drew me to options when I first got into this world was that there actually is a neutral strategy.
Right.
And just stock trading, neutral means you're not in it. You're just waiting.
Yeah.
Where this allows you to express something and saying, I can actually still make money or lose money if I'm wrong if the stock does nothing. Only options allow you to do that.
Yeah, we always talk about that, Kevin. 3 directions, right? Bullish, bearish, neutral, right?
Strategy.
And this is a neutral strategy. But Kevin, real quick here before we wrap up, this is the type of trade that you're going to have with some assignment risk because you're short the call and put it on 150 strike no matter where it goes. Say the stock opens up at 149 and the price of this short iron butterfly opens up at $6 or $5. Do you take it off right there, or is it just based on what your assumption is going into the end of the week? Because you have a few days until expiration on this one.
Yeah,
2 days.
I think you've got to, if it opens up at $6, this stock's trading 149, you've got a nice winner on your hands. Reduce the risk because one side is going to be in the money.
I would
When you
even
sell
go
a
as
straight.
far as saying that's a home run for this.
Yes.
If it opens up at $9, you might be thinking about taking it off.
Right. Yeah. Based on what your risk is, and you've got a couple days until expiration on those options, so you got to keep that in mind also. So good. Look at the short iron butterfly there. Thanks to Alex Coffey, senior equity contributor here, helping us out. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data. And DraftKings, the online gambling stock's up 17% this month after they posted earnings last week that were beneficial. Stick around, we're coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
There it is, the knife.
Wow. Schwab.
Not what I wanted to see.
Wealth management.
Well, this might be a loss for me. And then we'll have the big breakout. Damn it.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show,
Okay,
Andy.
we'll see here.
Thank you.
Loaded
All right,
up
so
a
we're talking
bunch.
DraftKings. Had a nice pop here since earnings. They're still losing money, but what kind of data do you have on this one? Because I mean, you can't watch any program on TV or streaming without them talking about the odds on every single sport now. I mean, is that what your data's showing, that it just continues to grow?
Yeah, it's almost as if sporting events have become, a lot less about the teams and the fans and the wins and the losses, and more about being a conduit to betting. And I think that's largely true. It's been an effective strategy. We're seeing really strong engagement in these betting apps, especially from a younger generation. Increased legalization across the board. Those are the two main macro drivers that are helping these companies. If you look at app downloads here highlighted in red, you can see that sports betting wasn't much a few years ago, but it has overtaken almost every other category of sports app, including fantasy sports, which is a really big deal. But on the negative side, they say the house always wins. But that's only true once they get you into the house. And getting you into the house is an extremely expensive proposition, as DraftKings, FanDuel, and all of these companies are figuring out. They have to really go out of their way and spend a ton of money to get you in the door, to get you to download that app, to market to you, and to out-market their competition. And it even boils
Down
down
400
to,
now.
you know, they have to continue to spend money marketing to their existing customers because there's really not much of a moat that keeps people from jumping from one app to the other based on where am I getting the bonus, where am I getting the best odds, which one wants me more for this bet or this deposit. And so it's kind of like, you know, these companies are on a treadmill that is never going to stop moving. I don't know how they get to profitability until they can come to some sort of exclusivity, some sort of monopoly position. Just a very difficult business to be in, and will continue to be that way for a significantly long time.
Yeah, Andy, sports betting has never been more popular. There it is right now. I think
Yep.
fantasy football has taken, like what you mentioned, the home team almost out of the equation. You don't care about your home team as much as you care about your fantasy team. But here's the thing. Fourth quarter, hurt profits from unfavorable NFL outcomes. Second quarter, hurt profits from unfavorable Major League Baseball outcomes. Andy, are these guys just bad bookies? Is that what we're dealing with here? We're trying to work through this, and we got bad bookies. I'm trying to.
Yeah, you know, I think at some point, if you're a bookie, you have to think, and the CEO's talking about, you know, unfavorable outcomes, meaning that really popular teams are winning. And, you know, at some point, I think if you're a bookie, you have to acknowledge the fact that it doesn't matter what the spread is. More people are going to bet on the Yankees than a team from Toronto, and that's just the way it's going to be. So you have to adjust that line. But in any case, you know, they're always going to have,
They're gonna have 70 cents.
excuse of why they weren't profitable. But the truth of
I don't want to hear about your gambling crap. I never have traded any of them. I should be watching CNBC and see how they're tripping out. There's Josh.
Which is almost like a standard purchase.
Pumping forward.
Like that nobody really wants anyway. So I don't think this is a killer for Tesla stock. I'd be much more worried about it if I were long Rivian or Neo.
Well, I mean, look, Tesla's up, like 40% since election day for...
The liberals are freaking out on the tax credit news. Trump's transition team aims to kill electric vehicle tax credit with support from Tesla. These guys are tripping.
Maintenance, they're paying for the gas, they're paying for the insurance. One of the reasons why Waymo has been such a big drag is that the company has to pay for all of that. So they're charging the same fees as Uber drivers. So that economic, validation is not there yet. And that's going to take a while to get there.
All right, so let's do this. Let's take a quick break. When we come back, we'll follow these stocks.
I have no problem.
We're going to talk about this Bitcoin bonanza.
I have no problem with them taking off the tax credit. The rich can afford these cars. All you're doing is benefiting the rich. I have no problem with them cutting the tax credit on EV, all of them, period. Just, it's over. All subsidies are over. And you'll see the market run like you've never seen it before. I have no problem with them eliminating that tax credit. I'm about even here. I'm even. Let's see if we can get a spike off the 63. Now I'm at a resist. Every time, man, I get up into a resistance level. It's either I sell it. I mean, I got a lot of them. 40 contracts. God damn, what to do? I have no problem them getting rid of that tax credit. Government needs to stay out of this and just keep us safe. That's their only job they got to do.
Was looking into whether he engaged in sexual misconduct and illicit drug use. He has maintained his innocence. Chinese President Xi Jinping will unveil a megaport in Peru today. The $1.3 billion project is majority owned by Chinese shipping giant Costco and is expected to bring in more than $3 billion in investment and extend China's influence in the region. And Formula One.
China opens megaport in Peru.
Around the streets of Monaco until at least 2031 after signing a 6-year extension with the principality. As a part of the deal, Monaco will change the date of the iconic race from end of May to June, starting 2026, to avoid a scheduling conflict with the Indianapolis 500, Scott.
How can you not have the Monaco Grand Prix?
That's
I
right.
mean, hello.
Of course.
Thank you. Silvana, thanks. Silvana now. How about Bitcoin? Record high yesterday, 93,000. It's falling back a little bit today, 89. It's still up tremendously since the election. Steve Weiss, we said, as we teased it, has a couple of moves. What are they?
So I bought Bitcoin again. You know,
Okay.
I originally bought it 28, sold in the 60s, got out, was happy with the gain. And I also bought the Grayscale Bitcoin Trust. And the reason is I'm still not a believer in it as a currency, but it doesn't matter what I believe at this point, okay? It's what the administration believes.
Right.
And so that will keep the momentum going. And if they do put it in as a reserve currency, well, the scarcity will just drive it incurrently higher.
Why'd you buy the Grayscale Bitcoin Trust also? Just filing on it or what?
It was in a different account. So it was for
workspace, where everybody works together on an AI-powered canvas.
Okay.
So
Well,
teams stay on the same page from like
over a period of
Innovation
time.
belongs on the canvas.
Why you
Innovation belongs on
diversified
you.
it away from the coin itself, I guess. The big question, though, is what Wall Street's doing to meet this new booming demand. You already know about the ETF products that are out there. Maybe others are coming. Mackenzie Segalos is here at Post 9 following this boom
Han destruido,
that,
pues, se han
it's been
apropiado de una
financed.
parte del
I mean,
mar.
there's no other way to really characterize it. I want to know
pesquero ya no existe.
what's going to happen next
Porque
as
los
a
han
result of this.
encerrado.
I mean, even with Bitcoin down, you
And
saw
that we-
crypto's market cap hitting a record $3.2 trillion. As SEC Chair Gary Gensler gives what amounts to a farewell speech this morning. Now, he didn't say that he's resigning,
Ahí
but
llegaba la
already
cordina,
we're
la
seeing
chica,
signs that
todo
promise of
café pecado.
No, va a aumentar más el tráfico de personas, drogas, muchas cosas se va a producir, más malo que bueno, ¿no?
And shifting focus to Latin America, China is investment.
To the side of the Fashion Edition advantage throughout.
That's interesting.
Massachusetts residents. So if you lived in Boston, you couldn't participate in the Apple IPO. Part of me feels like there's an alternative universe where in 2020 and 2021, rather than fight so hard against banning these ETFs, somebody would have said, you know what, actually, this will probably make crypto safer, more institutional, more transparent, more liquid. Maybe ETFs will protect people more so than banning ETFs and having people be on all these insane exchanges doing business with God knows who from another continent. We didn't go that way. We went the way where we fought it. Finally, we got it, and now it's mainstream. And I think as you see the price cross 100,000, you're probably going to see a scramble. Anyone that was underweighted, against it, fought it, they're going to have an answer for their clients. You're either in business to serve clients or you're not. So this is the phase we're headed into. It's exciting. It's interesting. I'm here for it. I'm making popcorn.
Even, Mackenzie, if we can sit here and debate like Steve Weiss suggested, even as he buys it, still trying to figure out in his own mind, and many investors are out there thinking the same thing, the real use case is what?
The use case is this. I'm sorry to step on your toe. This is the use case. It's people putting money into it, pulling money out of it, using it to buy other coins. That's it.
I think that's being very liberal with the term use case. But there is no use case. It's a trading instrument. It's where you can make money. It's where you can lose money.
I mean, to that point, I mean, post-Trump, when there's a lot of enthusiasm around the idea that banks will now be able to both custody and collateralize Bitcoin, and suddenly Bitcoin as an asset class opens up to the $200 trillion in institutional funds that exist out there, could flow into crypto, and even a fractional allocation of 1% to Bitcoin because of its finite supply could really be a huge tailwind to price.
And that's the issue. The finite supply is always going to keep the volatility there, which will prevent it from being currency.
Mackenzie, thank you. Mackenzie Segals. Much more on this topic coming, I can guarantee you that. Mike Santoli's next.
Jeez. Boeing's about to hit my support. IWM new low. This can go a lot. Put the fibbies on it.
We are back with senior markets commentator Mike Santoli right here at Post 9 for his midday word. What's on your mind today?
It seems like everything's just retrace mode. You know, you can kind of apply some headlines to it, but it's interesting to me that bonds have a bid even after you could have interpreted PPI as being a little sticky, and stocks are down, and the stuff that was up the most is pulling back the most. So it feels like from the election on, it's kind of like the scripted first drive of the game resulted in a score, and now it's just a little bit more mixed and you have to kind of face some opposition. And just to extend the metaphor, so many charts look like a button hook pattern, vertical down the field, they're curling around like this. How much more do they come in? That's like Tesla, that's like Goldman Sachs, that's like the Russell 2000, which by the way is basically in the gap from the day after election day. So there's a ton of gaps out there. I think that's all we're doing is kind of gathering our feet back under us.
Sure, but if anybody is even the wee bit negative,
yeah,
to continue what you're suggesting, we're calling a timeout for a little bit.
Yes.
And we're sort of reassessing how to win the rest of the game.
I think
and there is still a lot of optimism that this game's going to be won by staying long this bull market.
That is definitely the prevailing view, and it's plausible, and I wouldn't fight it. But I also think it's just kind of people have decided we don't have to make hard decisions right now. And so I'm hearing a lot of people shout down valuation concerns and where positioning is. It's not super extreme yet, but I'm on alert.
The stat that's making the rounds about these pullbacks in the Russell, they didn't do so well in the first round of tariffs in 2018.
Sure.
The S&P was up 13% during the tariff period of March 18 through October 19. The Russell was negative 1%. Regional banks were down 13%. So that trade didn't work the first time. I don't know why people are in such a rush to put it on this.
And I also think there's some pull forward.
You don't know why? Because they think the market's going to rotate, Josh.
Is that that's what it was? We were, but I'm just saying, it's not like we were cheap and unloved going into the election.
No, agree.
All right, we're going to take a quick break. Mike, thanks. We'll see you on the closing bell. Up next, we're talking about popping and dropping. Is the dollar surge since Election Day an emerging risk for stocks outside the United States? We discuss next.
Here is, from Wales, Tom Jones, and he's magnificent. It's not unusual to be loved by anyone. It's not unusual to have fun with anyone. But when I see you hanging about with anyone, it's not unusual. It happens every day. No matter what you say.
Little Elvis there.
All the time, I never love to never do what you want to do.
Oh, come on.
It's not
Tom Jones.
That's according to this report. You said you saw Alphabet shares maybe a little lower on this. Somebody say that, but you know we're watching this. That's what this really would be. I mean, it's expected that Lena Khan's not going to be staying within the new administration. I think that's a fair bet.
I don't think that's a fair bet.
Yeah?
I don't know. J.D. Vance came
I
out.
know people are saying
But
that.
I think she's gone. I think she's gone from the administration, but I'm not so sure because of the populist message that it doesn't proceed to go after these large companies. Don't forget, that they've not been known to be on the Trump bandwagon, particularly Meta. So everything's fair game in the new administration.
I agree with you. Do you really think Elon wants the pressure off Mark Zuckerberg?
Not at all.
Does anyone think that? So it might be that.
Understand one thing. I've learned this about Democrats, especially the GOP's probably not even thinking like they think. They're thinking the way they always think. That's the way they do things. It's like that, what they say. One person always complains about something that is usually guilty of that. They did the same thing. Once Biden got elected, they went in there and they changed everything on the plate. And they caused a huge inflation. They caused wars. And they caused a division. And we're just trying to reverse it back to where it was a halfway peaceful country in the world. And the greed with Wall Street here, I mean, God, I've never seen anything like it. With the money that they've been gifted for the last 4 years. I mean, trillions. 13, 14 trillions left on the table that we have to pay for in 4 years. $2 trillion over budget, and then an extra 6, 7 trillion of bills that were presented to us. 8 trillion times 6 is $14 trillion printed money. And that's 4 trillion more than what Obama printed in 8 years.
With these antitrust inquiries, because of the way they bundle certain products, they got in trouble in Europe, for example, for bundling.
Well, it's really a lot more than that.
Product with other.
I think we're over budget by 1 trillion, and then we printed 5 during the Obama years. So, I mean, it's still a lot more during this, half the time during the Biden administration, and it all just went to the coffers. Nothing's improved. Nothing.
That you and I use every day, Scott. That means also letting customers, it seems the FTC wants to say, well, if you don't want to store everything in the Microsoft cloud, there should be some competitive pricing going on if you want to go to Amazon or Google or something like that. That seems to be the thesis here, Scott.
All right, I appreciate you, Steve. Thanks for helping us keep the ball in the air on this developing story. We watched the stock down. You got a last quick thought?
Last quick thought on defense. Look at defense stocks. They are getting crushed today. They're down 3 to 7% across the board. Okay. So something's brewing.
All right, what's your final trade? What's your final trade?
Bitcoin.
Defense stocks are down because we're going to put a stop to these wars. Okay? Defense stocks are down because we're going to put a stop to these wars.
Exchange. I'm Kelly Evans, and here's what's coming up this hour. Disney delivered. The stock is up 9% today. Linear was still a weak spot, but it's not going anywhere, says CFO Hugh Johnston. Ben Affleck also weighing in on the economics around the media business as they keep changing. We'll bring you all of that and what it means for the shares, which paired their gains. They're up about 7% right now. Plus, tech under Trump. We'll look at why the setup is bullish for Amazon potentially, whether Musk is more hindrance or help on China, and for rival tech CEOs navigating his influence in the White House, what impact will this have as well? They have 3 Trump trades to make. This group name belongs to those who did well under Trump 1.0, and DataTrek's Nick Colas says it's set up to do even better this time around. You are looking at his top pick in that group. It's our mystery chart today, as always. Tweet me if you know it. Let's start with today's markets, though. Dom Chu with the numbers, and kind of the fervor is breaking down.
We're losing some momentum, yes. So the fervor, the fever, the whatever you want to call it in this marketplace, that fever pitch that we saw post-election is taking a bit of a breather, and that's that story so far today. We are still not that far away from record highs, so nothing panicky. Just to put it in context, we are kind of moving towards the lower part of the day here. The Dow Industrials down about 130 points. It's good for about a 1/3 of 1% decline. The S&P 500 is at 59.65. It's down 20 points, or about 1/3 of 1% as well. We were actually slightly positive, up about 8 points at the highs of the session, down 33 points on the S&P at the lows. That is your trading range, so again, tilting more towards the negative side. And the NASDAQ composite is at 19,159. That's down about 70 points, roughly 1/3 of 1% decline as well. So it's pretty even. Fractional to the downside, nothing major, still near record highs. A couple of stocks, a few of them that are really making some waves here so far because of headline stuff. Super Microcomputer, the worst performing stock in the S&P 500 today, and it's been a laggard for quite some time. Remember, earlier over the past 12 months, it was a $122 stock, roughly, at the highs over the past year. We're at $18 and change. It's a 5-day losing streak as things stand right now. Remember, earlier this week, they delayed the filing of their quarterly report. They're still in search of an auditor after EY left their ranks. So Super Microcomputer, very much to the downside. And then the biggest gainer in the S&P 500 today is on a failed M&A deal. We're talking about Tapestry and Capri, the luxury houses, Kate Spade, Coach versus Michael Kors and Versace. Well, both stocks are up right now. They've scrapped their merger plans. We already know a judge blocked it, but Tapestry's up 12.5%. So keep an eye on the luxury names and, of course, Super Micro. Kelly, I'll send things back over to you guys.
All right, Dom, looking forward to it. Thank you very much, Dom Chu. Disney is one of the big movers today, having its best day since February, up 7% after solid fourth quarter results. The stock, get this, it's not just about this move today. It's on pace for its 8th straight positive day, and that's its longest streak since the summer of 2018. And we're up about 15% in that recent period of time. They saw some pretty big gains across entertainment and streaming and expect double-digit adjusted EPS growth in fiscal 2026 and 27. It's unusual to get guidance that far out. One weak spot continued to be traditional TV. Revenue down 6%, profit down 38%. But CFO Hugh Johnston told CNBC this morning, despite the weakness, linear remains an important part of the portfolio.
I like where the portfolio sits because I like the integration of the two. And linear, by the way, does have a very separate demographic, as you guys well know. It tends to be a little bit older, and we want to make sure we don't lose that demographic. So I'd rather keep it as a part of the portfolio.
Still adjusting to seeing him not at Pepsi. Anyway, he reiterated his commitment to linear and keeping it as a complimentary service. Gives advertisers, he says, a deeper offering. For more here, let's bring in Mark Douglas. He's the CEO of ad tech firm Mountain, and our very own Julia Borston on set with me. Perfect day.
Also did highlight the fact that their balance sheet leverage is
American Airlines upgraded.
Room to improve, and they believe the carrier will renegotiate co-brand card agreements again in 2025. They see this name is likely to gain back some of its lost share gain as a result of the more favorable now commercial conditions. But there's been a lot of, I'd say, those that have been disappointed in American because it's really felt like it's emerged as a two-horse race between Delta and United, at least as far as a performance standpoint. Although this recovery has now brought American Airlines back into positive territory on the year.
Yeah, and it's funny too because of how indebted this company is from like an enterprise value standpoint. This is like the biggest of the airlines by far, but they're so levered relative to their peers. So from a stock performance standpoint, they're very disappointing. Less than $10 billion in terms of market cap. and pretty heavily shorted actually, with 10% of the outstanding shares being shorted. Let's talk some Wynn. This is kind of a high-end casino company, but also a lot of exposure overseas, particularly in the Macau region. So not surprised to see a chart that mimics a lot of the kind of Chinese listed ADRs that we see. You saw a big pop when some of those stimulus measures were announced, and then we've seen sort of the shine wear off as time's gone on and eased back. But big move today.
Big move today. Actually, was at one point, before we pull back a bit, we were pacing for our best day here in Wynn shares since October of 2022. We saw this nice spike today after Tillman Fertitta did report a near 10% passive stake in the casino operator. They reported owning around 10.9 million shares, according to a 13 G&A filing. Well, while the stake right now, though, is seen as passive, there is the thinking it could turn into a 13D filing or an activist position at some point. This is fairly speculative at this point, though. We did see they first reported that stake back in the fall of 2022, purchasing a 6% stake in the company, which did prompt speculation at the time that they could actually be making a bid for the company. That has obviously not played out, but this is enough
I'm up on,
some interest. This company did report
finally up on SPY.
earnings at the beginning of this month. That was a miss. We are seeing a 3% gain on the year, but gosh, I mean, if that's what we're
hanging
on to, this has not exactly been a favorable market for Wynn, as well as some of the other casino operators.
No, it really hasn't, especially the ones that have that exposure to the China region through Macau and others in Singapore as well. But it is a good optimistic update today, obviously seeing that stake. Big move higher, but for the most part, this is another one of those names that, you know, you look at it over the years, it really has been a little bit more range bound, a little bit more of a neutral performer. It's actually perfectly flat on a 3-year time horizon. It's down 0.1%. So despite the fact that it is up about 7% over the last 12 months, not a lot to show for it on a longer time horizon. Next one on the list, not far away from Wynn in terms of some of the similar exposures. Let's talk Alibaba. Alibaba has earnings, kind of in, you know, I don't know if it's considered post-market or pre-market, Jenny, but it's going to be China time at some point overnight before the open tomorrow. This is a name that is desperate for some good news.
It is desperate for some good news, and I have to say that I don't think that so far what we heard from one of its closely linked peers, JD.com, who reported third quarter results this morning, down about 4%, so we're not tanking by any means, but not seeing a whole lot of optimism from one of Alibaba's closest, I'd say, reads as far as like earnings previews are concerned. So that's not great. We are lower in Alibaba shares today as well. This name is still attempting to cling on to a year-to-date gain, but obviously anyone that knows this story knows it's been more of a long-term story of pain. So hopefully we reverse that trend as we're expecting right now earnings to come in about 5.6% above what we saw last year. We also are expecting sales to rise about 8.6%. I will say estimates as far as earnings were concerned have moved north by about 8% over the last month or so. So the street has actually gained more upside conviction in this name, which is significant. And a bit of a mixed picture when you look back at their earnings history. Their average surprise is just a mere 3.1% to the upside. And we saw last quarter they were able to beat on earnings, but we're still seeing misses in 3 of the 4 trailing quarters. So that's a bit of a concern. Not exactly a great track record. Many highlight the fact that their digital commerce group has continued to see this robust momentum, and we're seeing a revival. Singles Day was earlier this week, and that's a major, of course, Chinese shopping holiday. But we talk about this, and if you look at Alibaba, and we talk about the recovery and the way they're restructuring costs and they're getting Chinese stimulus, it just never seems to be enough.
Yeah, the China story has been one of disappointment, continues to be that. This is a name that, you know, pretty closely mimics Amazon in terms of how they're, you know, stepping into different areas. They're not just an e-commerce company, but 3 of the last 4 quarters have been met with selling in response to earnings. And even the last quarter, which is the lone green one, was only a 0.5% rally higher. So if, you know, history over the last year is any guide, downside risk, you know, 6% move lower, 5.8% move lower, 9.1, 9.2% lower, and then just that 0.5% rally, despite the fact that they actually beat 2 of the 4 times too. So, you know, looking at that one, there's going to be a lot of eyes on it. It's one of the bigger names that's left on the calendar still to report. Obviously, we get NVIDIA next week, but Alibaba will be a fun one. Next one on the list is Hims. I believe it's Hims and Hers, though, is the parent company's name.
Yep.
This is a name that had seen benefits from kind of the tremendous demand.
Oh, look.
GLP-1.
Pulled back my support.
This, kind of, I guess, time
Within
frame
3
where
cents.
they did some generic stuff for a little bit.
Jeez.
Into that, but
I
this-
probably got an alert on it.
Yeah,
Didn't
I
know
feel
it.
like we've seen this secondhand or secondary market emerge for the GLP-1 drugs because, as we know, the behemoths are still offering their flagship drugs, but I do feel like there's been so many now off-brand competition that has emerged, and it's been a bit of a mixed picture for them. So in response to the FDA's shortage decision, Hims & Hers is launching their own GLP-1 tracker to allow patients to self-identify, provide their location, and say which brand of GLP-1 that they are not able to find, which is what the company said is going to help a lot of the overall orders and really help provide proof to the FDA that the shortages have not actually ended, in their opinion. They said that north of 80,000 people were on their platform that were not able to access these medicines. I also think, because we're seeing obviously a substantial sell-off today, that a huge threat for the stock emerged today, and that's Amazon's latest launch into the healthcare industry, which they announced this morning, which is considerable, I'd say, right now to compete with the Hims & Hers. Amazon's prices appear lower than, of course, that's being offered on Hims & Hers and are available to all the various areas that Hims & Hers offers. So, for example, like various hair treatments, weight loss treatments, Amazon's basically copying that and offering cheaper prices. I mean, this is like a disaster as far as a small company like Hims & Hers is concerned.
Yeah, swole measly $4.5 billion market cap. So it's you definitely compared to Amazon, a very, very small company. Monstrous, though, performance over the years. Tremendous how well this company has fared, despite it seeming to be relatively niche in terms of what it was doing. One that you might encounter on podcast ads, kind of took that path of the new media for getting itself out there. Big beneficiary of the GLP-1s, like we said, but 20% short interest. So it's another one of these names that has its fair share of doubters, and those doubters looking smart today with the stock down $6 full here, Jenny.
Yeah, and it's so funny you say that. I also feel like I see ads for this like all over social media. That's how I even first knew about the name before the stock went public. So yeah, good advertising, I guess, but it hasn't translated at least into any momentum as of late, although the name is still up 200% over the last 12 months to give them their fair credit. But we'll be looking more at the technicals of actually more of our Chinese exposed stocks. We'll be diving into Win, as well as Alibaba ahead of its earnings. Stick around, Next Gen Investing. We'll be right back.
Which Bubba's earnings? Oh shit, November 15.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage.
So we got earnings coming out on Baba tomorrow. And I'm scheduled to report second quarter results November 15th. Pre-market or after? Consensus probably after. They got an 8% increase in revenue. Zach consensus estimates earnings to be pinned at 2.26 per share, indicating a 5.61% increase in the quarters. 8.1 over the 30 days. What? The figure has moved north by 8.1% over the past. That ain't going to do me no good. Alibaba's earnings history has reported that the company delivered their earnings surprise of Beats Zach's consensus. Whisper has a strong buy, hold. 3 holds. 1 buy. 1, 2, 3. We got a strong buy and hold. Over the best stock reported in here. Baba's has earnings estimated.
A little bit of divergence near the top, near the peaks here. RSI did not really make much progress even as price made new closing highs. Then we trended downward here. You can see we broke down through that 70 threshold, connected here and broke through the 50 midline. But now, after a very brief dip into that oversold area, we have invalidated that downward sloping red trend line. We are back in bullish territory as we are kind of debatably breaking above the intersection of these two lines that kind of formed a wedge type shape here. It's looking like we're breaking through to the upside.
Yeah, so that's encouraging, again, especially because the fundamental picture that they illustrated on their earnings call was not exactly super promising, especially for a company that needed that next maybe catalyst of growth. So when we look at price activity going forward, I will say it's performing better than some of its peers at least, but what are we watching at least for the near term and when?
There's a lot going on in some notable areas here. I had highlighted before between like 95 to 99. Well, that happens to be the volume profile point of control on a yearly basis. This is a 1 year, 1 day chart, but we're zoomed in here. So this is the area with the most trading. We have stopped short of this area so far here. It also includes our +1 standard deviation channel, which is +1 standard deviations from our blue linear regression line. So a lot of weight going on in that area here. But you'll note today we're taking out our moving averages. This cluster of our moving averages near like 91 or so, an important support area because it also lines up with our green supportive line from back earlier in the year here. So, 95 to 99 to the upside, and then, 91 to maybe 89 or so to the downside here to give us some downside perspective here.
Yeah, and I think that's a good really glimpse at what we've seen for Win as of late. Today, obviously up 9.5%. All this considered, it hasn't been a strong performer on the year. I think the recovery has been one we were placing a lot of hope on. It just hasn't seemed like it's been enough to blaze the street. So all that in mind, walk us through how one would think about trading this name for example purposes.
Yeah, one way to do that when you want to maybe be a bullish lean, but you're still kind of not so sure, is to use something that's neutral to bullish. And so we looked at a neutral to bullish strategy. Short put vertical below the market, going out to the December monthly cycle. It's the 90.87.5. So another thing you can do too, if your confidence is shaky, is to just reduce the size of the trade. You can do that by doing less contracts if you use multiple contracts, or of course even just making the spread narrower. So in this case, it's a $2.50 wide spread, looking for a 75-cent credit or thereabouts.
And that creates a risk reward of risk 175 with a chance to make 75. Break even of 89.25, of course, is below the current share price by a little bit of a margin. That gives you that added cushion to potentially be profitable, even if the stock goes sideways or perhaps even slightly lower on this one. Elongated Z risk profile, anything above 90 through that expiration, you simply keep that credit and you move on. If it falls through 87.5, that's where the risk really kicks in and maxes out. 175 is that max loss. So risk defined, neutral to bullish, relatively high probability of success with that break even below the current share price.
Yeah, and I think a good way to look at here, Win obviously jumping on the session, but now we're going to look at Alibaba ahead of its earnings out tomorrow morning. And Alibaba has been also a story of some recent pain. I know there was so much enthusiasm tied to stimulus, but gosh, it's given back a lot of that rally, Rick. So walk us through this chart.
Yeah, really interesting example of a concept we talk about very frequently is that after a breakout, when you have some kind of notable level of resistance, or if it were, support to the downside, but here, these old highs kind of matches up with this this high that we hit then a big breakout to the upside. That's why we keep an eye on these old price levels, because when you do breach them, it can activate a cascade of orders and create a runaway price situation like this. We eventually did top out just shy of 118, but then as you can see, the move is pretty much evaporated. Today, we have filled the gap. We're right back where we kind of started before things really took off here. So, the fortunes can change very quickly in this game here. You got to kind of be aware of the potential for things like this to happen and try to plan accordingly here. No one wants a big drop off after such an extreme rally. It's quite a rug pull to experience here, but unfortunately, this is where we are right now. The trend is deteriorating. We broke through our purple trend line. We broke through our 2 moving averages, yellow 21 day.
Oops, wrong one.
3-day. We broke through some other technical levels too, but we'll discuss that more. But note the very, very heavy volume during the upswing. We are not matching the heavy volume during the downswing here. So maybe some rough moves for a lot of people there.
Yeah, and it just felt like that very much, even just like reporting on
Where the hell did I
this
put that
company, where
earnings
it's just
at?
like they have 1 step forward, it feels like 2 steps back. I mean, unfortunately, just for shareholders as well, for more of a long-term story. But when we look at momentum, are we seeing any signs of recovery, or is it matching also the somewhat downward pressure we're seeing in price?
Mostly matching up with what we're seeing in price here. And when we backtrack a little bit, we can see that we had the green trend line here that was developing along the lows here. Was actually looking like perhaps we were building up some steam in the name. We were kind of making a series of higher lows for a while here.
What was I gonna do?
Rocketing into the overbought area as we made those significant highs here, but it was kind of not to be. We eventually did breach our trend line and the 50 midline. Failed to recapture it, sticking to the trend line, trending lower here. And really, if you look at the shape, this is another shape I mention often, kind of the bull trap type shape here. Big, significant rally, eventually tops out, big drawdown, and then another subsequent peak that falls short of the original peak, then kind of the collapse is what happens. Bull trap type shape, repeats often in trading. Not a certain thing is going to happen every time, but just a common thing to look out for.
Yeah, and I think that's a good point as well. And obviously, we're down about 1.5% today here with the overall weakness we're seeing in these other Chinese e-commerce names. Fortunately, JD didn't exactly have the report that was able to lift shares. So, I mean, I was expecting similar results, although obviously with this downward pressure today, maybe we could see some of this maybe pessimism priced in. But as far as levels we're watching, what are you seeing?
Well, one thing I noticed when we kind of add some other information to our charts, we're adding volume profile, which shows us kind of where the trading took place, the relevant price levels. We're also adding standard deviation channels, which gives us first the linear regression line, an idea of fair value, and then relatively extreme points from that. So that tells us a lot of things here. First, look at the relatively small volume that we've seen all throughout this rally here, kind of to be expected, but really down here, all the way down here is the important area near like 75. That's the major trading area here, which would concern me, because that means there's kind of a lot of room to fall. We have very thin trading in this area here, and not a lot until we get all the way down to that area here, which comes in near the -2 standard deviation channel. So if we do kind of break lower below the 90 level, the next stop could be around here. We've got our purple 250 2-day EMA, an old series of low and high points there, and our -1 channel between like 82 to 86. So that's another area that you have to look out for. To the other side here, we've got our moving averages once again, a high point and then a range low point at our red line. So around 97, and then once again a ceiling here near about 102.
Yeah, and I think a great breakdown on two names that have been unfortunately underperformers due to their exposure to an economy that has not recovered at the speed in which the street was hoping. So appreciate it as always, Rick Ducat, our chart master.
Bob's had a good pullback.
Alex, and I think that there could be expected moves in Alibaba. We know earnings have been somewhat of catalyst for them. Also, unfortunately, they've been somewhat of their demise as well.
Oh,
so
yeah.
sort of a mixed picture here, but
I think we're very ready for Baba.
Example trade.
There's a lot of similarities, ironically, with Win in the Baba chart in terms of recent jump, a little bit of fall, but it didn't participate
give it a
in the
shot.
upside today because it didn't have that kind of a story impacting it. But similar stock prices as well. Of course, there's an earnings event to contend
I can't
with
do
here for
tomorrow,
Alibaba,
so it'd have
but
to
I
be
looked at a
next
neutral
week.
to bearish strategy. Looking at selling a call vertical above the market and going out of that same December monthly expiration. So not necessarily looking at this as a truly binary earnings trade, although it will likely be impacted by the results of the earnings as volatility comes down across the option chains. And of course, there's going to be a price move reaction that could influence it too. December 20th, 95, 97.5 call vertical, looking for about a 70, 75 cent credit. The analysis here will look at a 70-cent credit, so max profit will be a $70, and then max loss would be 180. Break even 95.70. Simply add that credit to the short strike, you get to 95.70. So almost like a mirror image of what we looked at in Win here, Jenny. Looking for a neutral to bearish reaction in the stock, so can go up small, but really looking for this stock to either stay unchanged or perhaps even move lower in response to earnings.
Yeah, and we'll have to see if this
Move
can be
lower.
a reprieve, because so far it has not been that catalyst, at least historically. But gosh, I mean, we are still at least up 17% on the year, which is something. I mean, not to be too critical of Alibaba because they've been trying to recover. But we'll leave it there for this segment. Now, coming up next, it's time to discuss the, of course, failed merger between Tapestry as well as Capri. Both companies are seemingly accepting this fate, and we'll dive more into that story and why we're seeing Tapestry take off as a result.
$89. Solid support. I like Baba.
Empower your portfolio with the Schwab Network.
So Wall Street was been trying to pump Baba for years. And they finally got their pump a month ago. So they got their pump. I mean, they run it up, and people messaging me saying, hold Baba, it's going to run, going to keep it up, just hold it. It's China. It's communist. There's going to be some risk, especially with the Biden administration. Personally, I think this could be good little pivot point. I mean, we can drop down and hit the 200 and be a very 86. So I've got this on high alert. I'm putting 89.04 alert on it. And I'm going to be watching it tomorrow morning. I got to write this down because I don't want to forget it. Baba will be a trade for me tomorrow, if not tonight. Baba earnings on the 15. Got to remember that. So you got the $95 strike at 1.5. This is for November the 22nd. December the 20th. He mentioned the 95. Definitely be better to trade that. That'll probably be what we'll look at tomorrow. There's Bobby. LLY. God darn. Jim's got pneumonia. Jimmy's got pneumonia.
Welcome to Sapphire Lounge by the Club. With craft cocktails, locally inspired menus, and plenty of space to relax. It's what an airport lounge is supposed to be. Chase Sapphire Reserve. Make more of what's yours.
Walking down this rocky road, wondering where my life is leading, rolling on to the bitter end, finding out along the way what it takes to keep living. You should know how it feels, my friend. Just to stay
some land from Ukraine to Russia, but these kinetic events that are taking place, us funding and the United States funding, as well as maybe some of the other countries out there actually funding this conflict, could reduce the amount of spending for arms for Ukraine. And so that's going to be one thing to just be mindful of. And then also we have the Israel Iran conflict. We also have the conflict in Lebanon and Hamas and things of that nature. So I think right now the market's really kind of pricing in the fact that we might see an end or maybe even a ceasefire for some of these issues, and that could actually weaken demand when it comes to these defense companies. But one thing to also kind of note,
that's strange.
The Trump administration and the campaign, as well as President Trump himself, kind of signified that he's looking at more defensive capabilities, right? Creating a potential Iron Dome here in the United States. So companies like RTX, or formerly Raytheon, could actually benefit because they actually do provide the missiles for the Iron Dome for Israel. So there is definitely going to be some winners and losers here. I think the market's really just trying to figure out what that's going to look like. And then also for just spending in general, with Elon Musk and Vivek Ramaswamy, are they going to also suggest potential military funding and cutting funding, which could obviously impact a lot of these companies?
As I look back to the old, the former Trump administration, while it was a time of broadly peace in the world, that was one of the things that many supporters of the former president, now current president-elect, really drew to from a geopolitical standpoint. But there was sort of this idea of peace through strength, if I recall, and they'd actually spent a lot on defense as they kind of got things up and ready, but it was more of a calmer period. Is it possible, too, that we might enter a time, kind of to your point, where there might actually still be a lot of spending, but maybe it's just less actual geopolitical risk if things kind of go to plan? We also know that a lot of things were sort of given in the Ukraine conflict from stockpiles, perhaps even just spending to get those things kind of boosted back up. Is that plausible?
Yeah, and that's already happening right now, so I don't think that that's going to make any type of adjustments in the future. When we're talking about defense spending, we also have to be mindful, too. Those approvals really go through the Congress, so it could take a fair amount of time for those deals to be had. And then also, when that funding is given to a lot of these defense companies, they really can't realize that revenue until they actually deliver the product. So you have companies like RTX or even a Lockheed Martin, if they have any type of design challenges or production issues. We can take Boeing, for example, if they were having issues when it came to some of the defense products that they offer. If they're not able to deliver them, then these companies are really not going to be able to realize that revenue. So, it's kind of you spend for defense, and it's not something that you really see realized next year. It's something that takes 8, 10, 15 years to really come to fruition and to see the results of that. I believe that probably is going to be the case, and we will continue to see a ramp up in spend. But once again, looking at defensive measures rather than offensive capabilities seems like the direction that they want to go. And some of these players may not be the direct beneficiaries of that. If we actually talk about maybe Boeing, they could be one that does have a little bit of issues. But if you have a company that actually has exposure to space capabilities, they could actually be seeing some tailwinds here. So it kind of depends on the industry, depends on the capability that they're looking for here. And I think that's why the market's kind of gyrating here when you're looking at the defensive stocks.
Yeah, and Kevin, we did talk a lot about these space stocks yesterday. I don't know what else to coin them, but I mean, like Rocket Labs, Intuitive Machine, like these names that we don't honestly discuss a lot, but they were just ripping on this session. And these names, I got to just diving into them. I mean, they have high valuations now into this new year. So, I mean, is there then that risk that there's, like a lot of expectation on like space exploration? I mean, to me, that just doesn't seem like the most lucrative part of defense, but one that has been kind of interesting as far as volatility as of late.
It is definitely the next frontier when you're looking at defense, and obviously we already have capabilities within space. Other countries do too. I think now the market is really kind of realizing that it's actually ramping up a little bit. I think the optimism when you're looking at those space stocks, not only because they're getting close to generating really healthy revenue and potentially a profit in the long term here, but the other side of that is if Boeing actually does sell off its space and defense, its space business, which there's rumors that could be the case.
I'm going to add these defense stocks.
Also pricing in the fact that maybe there could be some mergers.
In fact, this is something I preach to a lot of people that are new to trading. You want to create a watch list. Now, I've done many seminars on how important a watch list is. So create a watch list. Type in what kind of watch list it is. This one's going to be defense, DEFENSE. And I'm going to type in the tickers, LMT. And I'm going to create a watch list. And then I'm going to show you how to trade a watch list. Now, as I keep working on my watch list that I have right here right now, as each day progresses and I'm reading the news or I'm paying attention to this sector, I might find other tickers that could qualify to fall into this watch list. So I want to keep adding them on, and I don't want to make it too big. 10 tickers maybe, 20 at the most, but 10, and then I watch them every day. I'll come in and I'll look at the volume, and I'll see which ones are running and which ones are up and which ones are down. I mean, these are down. We got a down 20 bucks. They're all down the same, 23, 20, 25 bucks. So they're down pretty good. So as I look into the highest volume one, RTX, I'm going to pull up a 3-year chart. I mean, it's clear to see that it's had one hell of a run. 100% run in a year. So the pivot point is right about in here. Actually, I'm going to put it right to this last previous high, and I'm going to set an alert right there. Right now, if we hold the 21, we can move back up, but this is up so damn much. I want to wait for a pullback. Lockheed Martin. Through 28, up almost 100%. We can drop down to the 63 and land on these things right here. So I'm going to take the wick on a weekly candlestick, and I'm going to set an alert right there off that wick. I should have cleaned it up. Here, let me clean this up first. Yeah, I like that spot a lot. I like that a lot. Bounce off the 63 and hold. So I like this one a lot. LMT. And then what's that? What's that one? Gunpowder. Was it POWW? Am I right on that? POWW. Ammo and Company, yes. I'm going to put POWW on this watch list. So we got GD here. Got a gap fill right here, so I'm going to put the alert right at that gap. You see the gap right here? And this is on GD. And then on NOC, we got support level right here. This is the weekly, so we're definitely hit that support level. That's a strong little spot right there. $492.65. Don't set alert off the 63. I think we can come down and hit this shoulder line. So every week, every day, if I'm watching this, I know the sector's down big today. Pretty good sell-off, real hard sell-off. So I want to come in tomorrow morning and see this watch list and see how it's doing. Now, if I got like 4 greens and 1 red, I want to look at that red one and see which one it is, see why it ain't moving. Or if I got all red and one of them's down big and one's not, I want to look at the volume. That loves the favorite volume. I'm going to keep up on the news, and I've got my alerts in already, so. Defense.
Now seems to be the fuel that will be utilized most in the current environment we're in. Prices have been depressed because supplies are relatively abundant. So, I still see that as a potential catalyst for, producing more electricity as we have availability right now. The problem with building, electricity facilities is that there's a lot of regulatory scrutiny that needs to be accommodated.
Oh God, 20-day looks good right here.
Nuclear also adds another safety and waste depository risk and even national security risk. So these are regulatory hurdles that this industry, that we want to talk about the nuclear industry, particularly the small modular deployable reactors, will face. So, maybe the Trump administration provides some, regulatory reprieve for these companies to accelerate the development of their products. But nonetheless, you have to consider that this company is still burning cash, not generating sales. Last year lost about a $510 million market cap right now, around $3 billion, short interest 22%. So we'll see what they say, but just keep in mind that this is a very volatile name, and they haven't generated any sales yet.
Yeah, it's fun to watch this utility space become a growth potential driver for the market, so we'll see how things shape up. Great breakdown, as always, George Tillis, Senior Markets Correspondent for the Schwab Network. We leave you with the market making a run at the lows. S&P's down 30 and some change. Thanks, as always, for tuning in to Next Gen Investing. Coming up next is the Watch List, Nicole Petalides.
Join me, Oliver Rennick, alongside Schwab Network's options experts. We explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift your perspective into full gear. Real time.
Damn, what'd I just do?
A full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market.
Oh,
weekdays at noon.
duh.
On the Schwab Network.
Fast Market, ready for you, ready to go. 12 p.m. Eastern on the Schwab Network.
Yeah.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go to with Take and Swim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange. Glad you're with us. Right now, the Dow is down 210 points after a lot of back and forth action throughout this day. A lot to talk about, and we're waiting to hear a little bit from Jay Powell, our Fed head, within about the next hour or so from Dallas, Texas. We'll have that for you as well. On today's show, we'll be joined by the CFO of Kava. Kava's earnings, incredible. The shares touching new all-time highs in reaction. Have since pulled back 17% from that high, but it has been an incredible run since the IPO that happened right here at the New York Stock Exchange. We'll also dive into the Bitcoin rally. Michael Turpin of Transform Ventures
Nicole
has a new book.
That's a bad one. I don't like it.
Since pulled back, but there are folks who think it's above 100,000, and
They're growing too fast, Nicole. It's going to get them. It's going to catch up to them. Just like Chipotle.
the Dow Jones Industrial Average right now is down 191 points. The S&P 500 is down about 0.5%. We're also seeing the Russell here down 1.1%, and there is the NASDAQ down about 0.5%. That is the big picture. We're also seeing oil and gold mixed, with gold down about $10, while oil sitting at $68.59 the barrel. There you have it. And Kevin Hanks is with us, host of Fast Market, Schwab Network. We're going to have you covered throughout this hour, all the different pieces of news. And one of the latest breaking pieces of news is about Microsoft and the regulators looking closely at Microsoft. Kevin Hanks has the details. Kevin?
Yeah, Microsoft, hi Nicole. Microsoft up 0.4% as we get to the 2 o'clock hour, despite the FTC planning to investigate Microsoft's cloud computing business. The FTC is planning to launch a probe into Microsoft's cloud computing business and will examine allegations that Microsoft is abusing its market power in productivity software and imposing punitive licensing terms to prevent customers from moving their data from its Azure cloud service to a competitor's platform. So more regulation, more regulatory investigations into Microsoft. That being said, the stock's still up 0.4%, Nicole.
All right, and obviously it should be noted right now there's no monetary value on this, what it could mean in the cost, right, or fines that could be imposed. But when we look at the Mag 7, it's so common when we start to hear the regulators investigating this and investigating that. So until we get some more detail, we'll have to wait and see. In fact, the stock is up about 0.5%, didn't turn into the red. How about, but a story, an important one to follow. How about Boeing in the news?
Boeing started the day up on the day, but now lower on reports that they will begin issuing layoff notices to workers starting this week. Boeing has started issuing layoff notices this week to workers impacted by its plan to cut up to 17,000 jobs, or 10% of its global workforce. Reuters' David Shepardson and Allison Lempert report staff receiving notices this week will stay on Boeing's payroll until January to comply with the federal requirements that give workers 60 days notice. So layoffs coming at Boeing as the new CEO is intent on making this a smaller, more lean company. I would watch also for getting out of some kinds of businesses or spinning them off. This CEO is intent on making Boeing a leaner and more profitable business, focusing on airplane manufacturing. Nicole?
All right, thank you for that. We appreciate it. Obviously, Boeing has been a tough one, but there you have it. Okay, thank you, Kevin Hanks. Let's take a look at the bigger picture. Jeffrey Kleintop's here, Chief Global Investment Strategist with Charles Schwab. Jeffrey, good to see you. Look, we had an incredible run after the election, and we're going into the election, just new high, and now some volatility. Take a breather. The Dow's down 200 points. What do you think is going on here?
Well, this is a fairly typical start to a transition period to a new administration. If you look in the past, when we go from election day to inauguration day, stocks are usually up, but not always in a straight line. In fact, over the past 50 years, unless we were already in a recessionary bear market, as we were in 2000, 2001 when transitioning to the Bush administration, and 08 and 2009 when the Obama administration was transitioning in, those were the two negative periods for this period from election day to inauguration day. Those are the only two negative periods. So we were already in a bear market during those two periods. All the others were positive, although experienced some volatility. And now we expect continued economic growth going into 2025, similar to all those other past transition periods that featured overall gains for stocks.
Yeah, I know you have sort of a list, the impacts of the election, from the election. Could you break that down for us?
Sure. So if you think about what the impact of tariffs was, looking at past, Trump 1.0, let's say, looking those trade tariffs, all those announcements really didn't have a dramatic impact on the markets. I mean, some people might be wondering, why are stocks up at all with the prospect for such dramatic tariffs and the downside risks to the economy and earnings growth, as well as upside risks to inflation? But if you look back to the tariff announcements during Trump's first term, on average, stocks were unchanged in the day tariffs were announced, and they were up about 0.4% 5 days later. So
I rest my case.
Broad global growth really didn't, as long as we had broad global.
I rest my case. I don't think politicians know how to negotiate. He just got through saying when they proposed the tariffs that actually the market went up right after that. These guys have been preaching differently for about 2 years about these damn tariffs. They just won't shut up about them. It's not a big deal.
Level of tariffs implemented.
Yeah, and it's pretty amazing how you were noting that the stock market didn't really react terribly on the last round. In fact, stocks crept higher after the announcements. You know, what do you think the tariffs' purpose is? Does it serve economic growth here in the U.S.? Does it serve global growth in any way?
Well, there are winners and losers. I think, you know, one interesting thing to take a look at is that tariffs can, big tariffs can actually not be permanent and be removed fairly quickly. There's an interesting thing going on right now in Europe as an example of what might happen in the U.S. So the European Union put 45% tariffs on Chinese electric vehicles being sold in Europe. They just did that on October.
I'm trying to remember if it was Obama that put a tariff on a high tax on luxury items here in the States. And it stopped sales on a lot of stuff. A lot of yachts weren't getting bought. A lot of luxury homes were not getting bought. Luxury stuff, you know, like for the fat cats. And that's they stopped that tariff, right? I mean, they put that to ease after about a year. I don't know if it was Bush or Obama. I keep thinking Obama. But they were wanting to tax the shit out of the rich, and it didn't work. It caused layoffs. It hurt the middle class. It hurt the poor because they weren't building boats. Same thing as airplanes.
Chinese consumer in a downturn, really in a recession from a spending standpoint, that really has weighed on the sales of a lot of great U.S. brands and global brands. Should we see that begin to improve? And there are potentially some signs of improvement. Singles Day sales showed a little bit of an upturn there, a little bit more optimism from the Chinese consumer on these stimulus announcements that have been made. Remember, this is about domestic growth in China because, as you pointed out, you know, global demand is fairly soft and now facing more tariffs and maybe quota restrictions on exports. It really is about getting the Chinese consumer back on track. There are early signs of this, but they're still just early, and there's still need for follow-through on policy announcements. I think China's probably holding some dry powder once they begin negotiations with Trump to try and juice their own economy, but markets are getting impatient with that, and that's why Chinese stocks have sold back off after their initial rally back in October.
Yeah, you were talking about the MSCI World Index and Trump's first, presidential campaign in his first term. What else am I missing from the big picture of global performance or what we need to know?
Well, there are definitely whipsaws here. So, one of the things I'm excited about is, how this eventually moves into currency moves, right? So you've got, for example, in Europe, you've got the big automakers, which are down anywhere between 7 and 9%. Volkswagen, BMW, Mercedes-Benz, on fears that they were in the crosshairs of Trump tariffs on restricting sales or putting big tariffs on some of these autos being sold in the U.S. But in fact, the dollar's already moved to up 5% or so, essentially giving you a discount on those autos. So we're already seeing some of these movements that are negating some potential tariff impact down the road, which might mean that some of these sell-offs in some of these shares are overdone. So I'm interested in some of these reversals of some of these Trump trades. We've already seen some of them in global shippers like Maersk, which fell 9% on Wednesday right after the election, and then rebounded the entire amount the next day. There's the potential for a number of these whipsaws in some of these global trades. So I'm looking for those opportunities.
So wait, it dropped 11% initially, and then what happened?
It regained it all the very next day on Thursday. So, Maersk is a big global shipping company, so fears of global trade being hit by tariffs really weighed on that stock. It fell almost 10%, rebounded the entire amount the very next day on a reevaluation of that situation. And again, I'm seeing this with German automakers and others where there's some potential opportunities here for reversal of those sell-offs.
So maybe the base case here is not so dramatic, and it would be nice to see some less volatility and some evenness. We'll see how it goes. Jeffrey Kleintop, I'll see you soon. Charles Schwab, thank you. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity from the day and how investors are looking to trade on recent news of Wynn Resort, Newmont, Starbucks. Look at that Wynn move, 9%. All right, Tom White, Options Corner, next.
With the Schwab Network. Available anytime, anywhere, on any device, for free. Schwab Network.
Trading
1:15
every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. For that, we welcome in Tom White, host of Fast Market, here to take a look at three names for us and the unusual options trades that you're finding, real trades. The first up was Wynn Resorts, which we saw a big move for Wynn
right
today
back.
in the stock, and you found a trade that's notable to speak about here. Tell us more.
Yeah, stock's popping about 10% today, Nicole, and this is on the back of a big stake that Tillman Fertitta took in the company, 9.9% stake that he reported. It's a passive stake. He's the casino and restaurant mogul. He owns the Houston Rockets basketball team in the NBA. So yeah, he's got a net worth of about $10 billion, and he's looking at Wynn Resorts with the stock underperforming recently as maybe an opportunity here. And if you look at their last earnings report, weakness in their Las Vegas properties was the culprit to the slide that we saw in the shares. They saw a decrease of about 1.6% as far as revenue and revenue goes there in Las Vegas. Now, Macau properties are still doing pretty well. Boston, their Encore property, still doing pretty well. But Tillman Fertitta basically came out and said that the casino operators' performance and share price in Wynn is not doing they're not doing an adequate job of communicating performance to investors. Thinks there's big opportunities to expand the Wynn brand also. So passive 9.9% stake is giving this stock a pop. And we saw some unusual option activity, not surprising, to the upside in here. And this was out in the December monthly cycle. So about just about 5 weeks until expiration on this one. Trader bought over 3,000 of the December 95 strike calls. Paid an average debit of about $2.30 on those. So the break even where this trader starts to make money is about $97.30 to the upside on those. That's only about 3% above the current share price in there, with call volume about 5 times normal daily average volume. So we're seeing a lot of call flows in there today. Not surprising when you see a big move of this magnitude, but the stock had been beating up. It did fill its downside gap that we saw post earnings today on this big pop.
All right. I mean, it's amazing, and it really shows the conviction that Tillman Fertitta has increasing the stake here and giving it the boost. It shows that shareholders believe in this move, at least at some point, right, and hope for a turnaround. So thank you for that look there at Wynn overall and the trade, too. How about we move on to Newmont? A thought there.
Well, you got gold down to 2-month lows earlier today, so that's not a good omen for a lot of the mining stocks. Newmont being one of the leading gold miners out there. Stocks off about 30% from highs that we saw in 2024. You see that on the right side of this chart, just the precipitous slide that we saw, parabolic move to the downside here, down about 10% so far in the month of November. And I think it's not only the weakness that we've seen in gold recently, with the dollar rising at this point, it was their last earnings quarter. They missed on EPS by about 5 cents. It came in at 81 cents versus a consensus of 86. Then they also missed slightly on revenue, which came in at just above $4.6 billion. They did deliver 2.1 million ounces during the quarter. They did have some decent cash flow, but this definitely disappointed the streets, and now you're seeing that pullback in gold. So it's almost like a snowball effect with the shares here. And post earnings on Newmont Mining did get a downgrade out of UBS. They cut the price target to $54 from 67, and they said it's basically a management execution problem at this point, because with gold still up about 25% so far this year, Nicole, for them to be underperforming in this way, pretty surprising. But we did see maybe some dip buyers here in the option market today. Saw some unusual option activity out in the March cycle, so giving themselves plenty of duration on this one. 127 days. Trader bought 6,000 of the 45 strike calls, paid an average debit of about $1.80 on those, so that break even of 46.80 basically over the next 4 months or so. That's about 15% above the current share price. So when you get big slides like this, I mentioned that 30% drop from those highs that we saw in 2024. This trader thinks that we're going to see a resurgence in the shares, but I think the key with this unusual option activity trade is the fact that they've given themselves plenty of duration out to the March option expiration.
Such a push and pull, because there are some who think that the sell-off in the stock is overdone to the point of making a bullish trade. At the same time, costs have been on the rise, and while Newmont is a top global producer at about 6 million ounces annually, they are predicting lower gold production heading into 2025, coupled with a strong dollar, which is just weighing on metals and emerging markets. And so it's sort of like you have two stories going on here. All right, so thank you for that. Last but not least, Starbucks, please.
Yeah, the stock's underperformed so far this year, even with the new hire of Brian Niccol away from Chipotle. It got a pop on that, but the stock's still flat today, still up only 4% so far in 2024. So hasn't performed well. Why is that? Because they've had 3 straight quarters, Nicole, of declining year-over-year revenue. They saw a 7% dip in sales last quarter alone. And one of the keys is foot traffic is really slowing down at this point. They dropped 10% in the U.S. in the fourth quarter. In China, which typically sees a key part of their growth story, that traffic dropped about 6%. So we're starting to pile up these quarter after quarter declines as far as sales and foot traffic. That's not a positive. Now, Brian Niccol's coming in, is prioritizing, simplifying the menu, boosting speed of the service, expanding their mobile application, which already does a pretty good job. But he's got a big task ahead of him moving forward. Just got downgraded earlier this week out of Redburn, put the price target down to 77 from $84. So yeah, the bad news keeps piling up for this one. But can it turn around? Well, options traders think maybe they will, because I saw some unusual options.
Oh, Home Depot.
On the January monthly cycle, so just about 2 months until expiration. Trader bought
No.
3,000. The 105 strike calls, these out of the money calls, they paid an average debit of just under $2.
Okay, Tesla went below 311.
$1.93. So that break even of 106.93 over the next 64 days. That's about 7% above the current share price in there. Earnings comes after this, so maybe this trader's looking for a run up into earnings, maybe for some profitability on this, but need a decent 7% move. And if you look at the Disney and Starbucks, you almost can kind of compare those a little bit. They're at a little bit of a turnaround happening in Disney. That stock pop post earnings. I think these traders are starting to set up that, hey, Brian Nickel is going to, bring the heat like he did at Chipotle and Taco Bell before that, moving forward.
Yeah, understood. Look, the turnaround plan, people are excited, and at least part of it actually means going back to basics, but how much does it cost? That is the question. All right, good to see you. Tom White, thank you for Options Corner today and every day here on the watch list. Real options trades that he takes a look at. Wayne Newman in Starbucks today. Thank you, Tom. We'll turn our focus over to the fast casual restaurant space even more so, because coming up next, we're looking at Cava. Now, Cava's killing it. The CFO will join us next to discuss the latest impressive quarter. I mean, this has been a real winner since the IPO and continues to hit new highs. What's the magic of Cava? We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free.
ENPH is flying.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
Sure enough.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab.
It's a solar stock, right?
Management, advice, invest on my own, and trade on thinkorswim.
You know, Carl is
Hempson announced the harbor agreement with IGS to expand deployment
Have a choice
of microconverters.
Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have our eyes on Cava, fast casual Mediterranean restaurant chain that went public June 15, 2023, right here at the New York Stock Exchange. It has more than tripled in share price since going public, impressing investors with its growing traffic and earnings. Shares are now trading just below the all-time highs that just recently hit following the third quarter earnings report. Let's find out what's going right for Cava and the outlook. Tricia Tolliver is back with us, CFO at Cava, joining us now. Nice to see you again. Congratulations on another incredible quarter. People love Cava. They love Mediterranean food, it seems. But there's something special brewing, and they keep coming back for more. Tell us a little bit about the quarter.
Yeah, thanks, Nicole. It's good to see you again. Certainly in the quarter, delivered tremendous results, as you said. 18% same restaurant sales, driven by 12.9% in traffic. And that's really a function of Cava and its authenticity. And I kind of compare it to a Cava bowl. It's the combination of a lot of different things that just make it truly incredible. So if you look at our authenticity at Cava, our culinary innovation, the brand awareness that continues to grow up 8% since we went public back in June, as you mentioned. Our new restaurants are opening very strong and entering the comp base in a very meaningful way. The social media impact, the buzz that we're getting, the organic post, it's really just all coming together with the tremendous support of our teams, both in the support center and our restaurants, to deliver outstanding earnings and results.
And as we look at this, I mean, we see profit too, restaurant level profit growth of 42% over the prior year. You know, it's you're keeping, I guess, the costs in check. You are the CFO, so congratulations at looking at that so closely. How are you doing that?
Yeah.
Yeah, so when you look at our restaurant level profits, they're definitely up, but also our restaurant level margins. So restaurant level margins at 25.6%, truly outstanding in the restaurant space itself. And that's driven by the power of our economic model that we have here at Cava. So the restaurant level margins really take the benefit of this labor model that is very, very powerful. It's like the Henry Ford production line. We're able to bring more guests through the restaurants in a very meaningful way, and then allow us to invest in our quality food and really providing a very authentic, differentiated food that people enjoy and want to come back more and more. So the combination of those things, as AUVs grow in the restaurants to $2.8 million, drive very profitable returns and really propel us into the future.
Do you have to be careful
God.
not to open
Too many
restaurants?
exactly.
I saw November 12, 2024, 56 to 58 restaurant openings. Do you to not be, saturated too much, to have over presence, to get it just right?
Yeah, we spent a lot of time working on our real estate strategy, and we have a great team behind that on our real estate design and construction teams. And what we do is we look at our pipeline of restaurants, and we make sure that we've got a very strong balance of openings, both in existing markets as well as in new markets. But the bulk of our restaurants are in what we call our growth and emerging markets. And that allows us to provide the proper pace and placement of our restaurants to minimize the cannibalization impact. So we see very minimal cannibalization as a result of this strategy that we've been executing very successfully thus far, and really intend to do that in the future. What we want to balance, as you pointed out, Nicole, is the strength of our new restaurants that are opening. They're opening very, very strong, which gives us even further confidence in our ability to take this brand to many more states across the country. But we don't want to overheat the engine and disrupt operations and impact the business. So we feel the balance that we've struck in 24 and our expectation for the restaurants in 25 at a growth rate of at least 17% gives us that balance so that we can be successful and continue to deliver great financial results, but also an incredible guest experience to keep our guests coming back more and more.
Yeah, and it's my understanding that the Hunger of Steak was incredible. And as you talk about innovation, I'm wondering, is there something coming now in the next 6 to 12 months that is going to be a thing?
I mean, I ate salads like this all summer.
So what's going to be the thing that gets people into Cava?
So, I can appreciate
Instagram and all that.
Yeah, well, right.
I can appreciate a good salad, that's for sure. You see me picture after picture of all the salads that I made, almost every one of them. I made different kinds. So I don't like chipotle, but man, these look good. And they got hummus. I mean, who serves hummus? Not too many people. Yeah, I mean, I'd probably go in there and eat. Hell, if they're that big, I'd definitely go in there and eat. But probably have to split that in half. 810 calories for that. That just seems a little low. Oh well, let's see. She's still yakking.
Typically have significant.
Spy just hit the 200.
And I think that's what allows consumers to indulge in some of those things that they might not otherwise have. When you look at our top decile of restaurants, we're finding strength in all income categories, and that top decile of restaurants has every income strata represented, and so it really gives us the confidence around our value proposition and how we're translating with our guests.
Yeah. And how would you say, obviously we think about the restaurant environment and some people would say Cava may be similar to Chipotle. I will not say that because while it's protein and vegetables or whatever, I mean, it's a different vibe for Cava. And I met, obviously Brett Schulman. I met the guys, the Greek guys who were making the tzatziki and such. And what's interesting is a real Mediterranean flair. I had real salmon. I mean, it's something different. How about the products that are in the stores? When I go to, for example, Whole Foods, and I buy the Cava tzatziki, easy for me to say. And so, how's that going? And do you expect to have more products in the Whole Foods stores and other stores?
Yes, so the CPG part of our business is actually how we started. So our founders that you met started in a full-service restaurant, and then Whole Foods in their market was interested in the tzatziki and hummus that they served, and so they started making it in the kitchen and bringing it into the restaurants for consumption for other consumers. What they found is they really wanted some help with that CPG business. They were restaurant guys, but didn't know a lot about CPG, and that's when Brett Schulman came on into the team, and they loved working together and decided, hey, why don't we make this a foursome? And Brett said would love to, but also I think there's an opportunity to bring this concept, not just CPG, in the fast casual environment, to be able to share our food and welcome more people to our table. So CPG is about 1% of our business today. It is growing. We are excited about it, and certainly highlights the way that we are able to leverage our vertical integration and our manufacturing environments where we make all of our dips and spreads, and that tzatziki is made with fresh cucumber, fresh dill, and it's crafted in such a way that others wouldn't be able to replicate it. You can't find at this scale.
Honey, don't be saying that.
Fresh ingredients, and we've been able to do that and then bring it to the restaurants as well as to CPG. So more excitement coming there that we'll share going forward. There's some dressings in the restaurants as well, in the Whole Foods locations that you can try, and a new Greek green goddess dressing that you can
We got one in Lee Summit.
All right. Well, good luck with those products too. Good to see you, Trisha Tolliver, CFO at Cava. Thank you for joining us on the show. Right now, 1 year change, 333%. Thank you.
A bunch in California.
Thanks, Nicole.
Colorado.
Still ahead, I'm joined by the author of the new book,
What's this here?
Bitcoin
Florida.
Supercycle.
A lot in Florida.
Think there's a Bitcoin supercycle? We hit new
Georgia.
highs. The crypto calendar can make you rich, they say.
Maryland.
Get an explanation of that. We'll be right back.
One in Missouri. Do. It's now 1:36. Do. Pita chips are delicious. So you've ate there before. I'd probably go in there and eat. I know I would now after looking at that food. I made some great salads this year. I think my favorite one was the beet egg salad.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available
Without resistance.
On any device for free.
On Spy.
Morning Trade live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. Have you been watching Bitcoin? In fact, it surged to over 90,000 this week, making new all-time highs, getting crypto investors super excited. And here to discuss his new book all about crypto, I'm joined by Michael Turpin, CEO of Transform Ventures and the author of Bitcoin Super Cycle, and that's coming out on the 19th, so people can hear and see more about the book.
He looks trippy.
Tell us a little bit about the book. Why now? Certainly seems like the right time.
It is the right time. Nicole, glad to be here. And I actually timed it for the start of this bull market. What many investors don't realize, and what's kept them away from cryptocurrency and Bitcoin in the past, is that there are very predictable cycles. There are 4-year cycles, not the 10-year cycles that you find common in the stock market, or the 7 to 14-year cycles that you find in real estate. And there's 4 seasons within each cycle. Bitcoin spring is when the halving starts. Bitcoin summer is what we entered on election day, when we hit the old all-time high, and we just go up like a rocket ship until the peak, and then we start falling for Bitcoin fall, and then you have a long Bitcoin winter and start all over again.
So we had to spike.
Because we often say Bitcoin winter.
So what you're
right
saying?
About the seasons. I mean, it's a pretty common term here on Wall Street when Bitcoin is pulling back, but it has
New high on SPY.
An incredible year to date, up over 100%. And I've heard, for example, Tom Lee from Fund Strategies, JP Morgan, said 150,000 by the end of the year.
God.
What's driving Bitcoin higher other than the cycle that you're talking about? Because I had another guest on that said Bitcoin is not like a stock. It doesn't have earnings and revenue and dividends, and I know it has store value, but people don't necessarily look to it as something they can count on.
It will be in the future. It's best to compare it to something like gold and silver, which also does not have dividends, but it has been used for millennia as a store of value. And Bitcoin now is just recently, the value of the Bitcoin ETFs have passed in less than 1 year the value of the gold ETFs. The millennials and younger are not looking to gold for store of value, for long-term savings, for fighting inflation, for having a hedge against the dollars, money printing. They're looking at Bitcoin.
Yeah, understood. How high can Bitcoin go? I mean, I guess theoretically in the next 1 year, 2 years, 5 years.
Well, I have a quote in the book, I believe it's by Patrick Byrne from Overstock, who said it's not how high Bitcoin can go, it's how low the dollar can go in comparison. And, when Bitcoin first went into the news cycle in early 2013, which is around when I got involved, and it was, wow, it hit $100, then it hit $1,000. How crazy is that? There was speculation it could one day hit $1 million. I think that's now written in. I think it's not if, but when. And we will hit $1 million within the next 2 to 3 cycles. That's, I think, unquestionable.
That was going to be my question, the $1 million. So in the next 2 to 3 cycles, so that means in the next 8 or 12 years. Is that right? Is that what you mean?
That's correct. And the super cycle phenomenon is when we speed up the normal cycles, because we have 2 different phenomena going at the same time. We have had diminishing returns each cycle as it gets larger and larger in numbers. But then we also have this technology adoption life cycle that's been written about in Crossing the Chasm and around other technologies, cell phones, color TVs. When you get to a certain percentage, around maybe 8 to 10% of the population, it takes a long time to get there past the early adopters. You then have an explosion in a decade. It all of a sudden goes to 80 or 90%. This certainly happened with automobiles. There's a famous picture of Times Square in 1903 with all horses and 1913 with all cars. That will happen with Bitcoin in the next decade or so.
All right. Look, I mean, it's amazing. And does that go, I'm sure you did so much research to put this book together. What about Ethereum, Solana, Dogecoin, etc., Coinbase, other things that have exposure to Bitcoin? Do those all go up too?
In general, they go up during the bull markets. Certainly Coinbase and MicroStrategies and ETFs that will give you 2 times the exposure have done extremely well in the last couple of weeks. But Bitcoin's a mothership. Bitcoin is, if you're first getting your exposure, that's the safest one to get into. But certainly Ethereum and Solana, Dogecoin, the top 5 to 10 coins will do quite well. And then if you want to go and really do a lot of research, it's just like
Dogecoin.
If you're a casual stock market,
He just said Dogecoin would do well.
You go in, do the S&P, or you pick NVIDIA, Microsoft, and Facebook, and Google, and set it and forget it, and that's been fine. You can set and forget Bitcoin for years.
Learned that one
a
yesterday.
5-year period where you were down. I also explain in the book how you can go and actually make a much higher return by buying once a cycle near the bottom and selling once a cycle near the top.
All right, so the winter would be when to sell and, when to buy in the winter and you sell it maybe at the tops in the summers when it's booming and making new highs. You have one real hurdle that I understand to be true, and that is the concern about the U.S. dollar, because you said it's not really how high it goes, and you're quoting the guy Byrne from Overstock. You said it's more about how low the dollar goes, and the U.S. government does not want the dollar to go lower, and will keep regulation just right in the right place. It's nice to have clarity on regulation, and that's one of the reasons why Bitcoin people wanted Donald Trump to come in again, because he was providing some, sort of field tunnel vision of what could happen and some regulation. So they liked that, but they're not going to let Bitcoin overtake the dollar. I mean, stablecoin could be traded in dollars, and that would be the reserve for that. But it's not going to, that you understand what I'm saying? They got to protect the U.S. dollar as the world's reserve currency.
Yep.
Sure, and it's not Bitcoin that is the threat to the U.S. dollar being the reserve currency. It's the RMB, it's the BRICS consortiums. Donald Trump, rightly, as our first Bitcoin president, sees that stablecoins are not a threat. He actually said this at Bitcoin 2024 in Nashville, that Tether and other stablecoins are actually great because they buy T-bills, some of the biggest buyers of T-bills, and then they export the dollar around the world. And in most of the world right now, people do want dollars, and they're getting it with Tether, but they're getting exposure to that and getting their growth asset. Because again, Tether will just keep the dollar at its rate, and a lot of people in the global south will be looking at Bitcoin as their way of climbing out of poverty. It certainly helped them, those who got in the past. And then to spend, they then transfer it into Tether, which you can do instantly.
It's interesting that you called President-elect Donald Trump, who has been president once, the first Bitcoin president. It's interesting how you referred him as that. Thank you. I know Bitcoin folks are pretty excited. Thank you. Great to see you. Michael Turbin and his book, Bitcoin Supercycle. Appreciate it, CEO of Transform Ventures. Thank you. Still ahead, our panel will discuss Cisco Systems and the earnings, state of AI, and what trades could be done there. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the Watch List. I'm Nicole Petalides. We're watching Cisco Systems. The company right now is down about 2.2% after reporting its earnings last night. But it was relatively good news, upbeat fiscal first quarter earnings, orders accelerated, at least in the AI era, the outlook moved higher too. So let's see what our panel has to say about this. Keith Snyder, equity analyst at CFRA Research, and William Kerwin, equity analyst at Morningstar. Keith, what had stood out to you and your rating right now, neutral?
Yeah, so it is a neutral right now. I mean, generally speaking, the results were pretty solid. Guidance, I would have liked to see a little bit better, but overall the commentary from management on the call was upbeat. And, as you were saying before, that AI spend, $300 million in orders signed. They're targeting about $1 billion for this fiscal year. That's a very achievable goal. Really, the only weakness came from the public sector, and that, is kind of to be expected. I mean, that spending can be fairly lumpy, and management seemed very confident that the deals were simply delayed but not lost. And so, eventually that spend will come in. But, overall, they performed very well in what we see as a very tough environment right now.
So they did say customers are investing, and their customers are investing in infrastructure, preparing for an AI era overall, but there were parts that did see some weakness. So, for example, we did see that first quarter revenue was down, product revenue fell, but services revenue increased. Within the products, networking revenue fell 23%, but security revenue doubled. So I just feel like, it wasn't a blanket win. There are parts that are good news and parts that are maybe something that we could talk about more. William?
Yeah, thanks, Nicole. We liked the earnings, and I think you have to unpack that year-over-year decline on the line a little bit. This comes after 2 years of really choppy results for Cisco. There are 4 quarters of over-ordering at customers that then got followed by subsequent digestion and under-ordering. So the quarter ago, last October quarter, reflected some of that over-ordering. So we don't see that year-over-year decline as overly worrisome. And actually, we're looking at the sequential growth, which grew nicely from the fiscal fourth quarter, as positive. So we think we're in a normalized demand environment, a healthy demand environment for networking and Cisco's core markets.
And to that point, Keith, do you see customers actually now planning to make new equipment orders? They've implemented some of the past equipment that they've gotten. Do you expect a lot of new orders to come in, Keith?
Yeah, I mean, while we did see the product revenue declining, it was exactly right that they're coming up against very tough comps. And so that decline was very much to be expected. The bright spot from our perspective was that product order growth, and while 20% with acquisitions, about 9% organically, that's incredibly strong, at least from our point of view. And given that product order growth, the outlook on the company is quite healthy, and enterprises are continuing to order product. We're starting to see service providers pick up orders again, following a long period of excess inventory levels at those customers. And so the future actually looks fairly bright for the networking industry as a whole. And then just getting into AI, we're at the tip of the iceberg right now. $300 million doesn't sound like a lot, but that's going to ramp very, very quickly, especially as we get into new deployments and the very large scale deployments. We're still very much in the test phase for these networks. And so we have a very bright outlook on that area as well.
Yeah, understood. I mean, the Splunk acquisition is done, integrated. That, I think, helped, according to what I read. William, you do have a $50 fair value. It is currently at $57.88, so you don't see upside here. But the outlook moving higher,
there's so many mixed messages.
Are you worried about?
We don't necessarily worry about fundamental headwinds to Cisco's sales, but we think that there are lofty growth expectations priced into the stock. We still see Cisco as doing the best and having the most exposure in lower growth markets like campus networking, on-premises data centers. Management will talk a lot about the efforts to build this AI order pipeline, and we see that positively, but we think it ultimately pales in comparison to the larger other exposures that Cisco has. So we don't see it, creating growth larger than low single digits going forward. And we think the stock is implying that this AI pipeline goes to a level that we really see as unsupported by the momentum that we're seeing right now.
Look, Morgan Stanley has a $62 target, so they see a bit of upside here. When you think about the competitive landscape,
someone says 72, Nicole.
Cisco hold its own in the next 5 years?
I mean, that's kind of the million-dollar question there. You have companies like Arista who are making huge inroads into the market and capturing market share. It's going to be very interesting to see what happens with Juniper once the HP acquisition actually closes, and where HP's new business goes. The market is fairly dynamic right now. You still have Chinese competitors like Huawei trying to make inroads in the U.S. Obviously, that's being more or less blocked by the U.S. government. But there's a lot of large companies who are playing for market share, and sadly for Cisco, is as the market share leader, they're probably the ones most likely to suffer from this fierce competition. And so, while we hope Cisco can hold on to the market share, we're expecting them to, kind of decline in market share over the next few years.
Yeah. Look, and these are fast-growing companies, newer companies, unlike, Cisco, which is the old reliable for many investors. Final thoughts here, William. I mean, do you like some of the names that we just mentioned there, Arista, Juniper, etc.?
Well, I think, thinking about Cisco and Arista, we see these two as the largest titans in this space, but you have to pick apart the networking market a little bit. Again, we see Cisco really excelling in slower speeds, campus environments. We see Arista as the high-speed, high-performance leader, better position in AI, but ultimately both look overvalued to us right now. So it comes down to a little bit too much AI hype priced into these stocks. We love them as companies, but shares look rich today.
Yeah. Great to see you both. Keith Snyder of CFRA, William Kerwin of Morningstar. Thank you so much. Appreciate it. Good luck there at Cisco.
Yeah, good luck.
I'm Nicole Petalides. Thanks for being with me here on the watch list on Schwab Network. The Dow right now
4 more
78
minutes.
points. Keep it right here and download the free Schwab Network app. It's available in the Apple App Store 24/7. SchwabNetwork.com. Market on Close with Oliver Rennick next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Little SPY pull back to the 200 here. Tesla I'll be watching close tomorrow.
Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices.
I'm still thinking Wall Street was a little surprised with this bounce. I really do. Because I've been listening to these guys for, well, especially CNBC. They had nothing good to say about Trump ever. Ever. For 2 or 3 years. CNBC used to host Trump every week. They loved him. They really, they just get real happy. He'd be on there and they'd be talking smack, and now they can't stand him. Nothing's changed about him. He's said the same thing he said 20, 30 years ago. He wants to stay out of wars. SPY just had a big knife here. Oh, pow pow. That's what it is. Damn, I forgot. Okay, watch SPY. $15. The 596 strike. Damn, I forgot about it. I don't think it would have mattered. Now I know, so. You got a triple bottom? Just wait for that triple bottom. Jimmy wants a triple bottom on the SPY.
lose their gravy train of government funding and just obviously the staffing role that they play. So big sell-off there. Again, another example here. You can see how that shifted around the election. The market is still taking this new information, processing it, coming up with narratives on these things that are still quite powerful in the short term, even if on the index level it's petered off a little bit. Also, look at bonds. Something that maybe will be worth revisiting by the end of the week if we do not get through 445 to the upside. Bond bulls are trying to hold. There's a bit of a battle
There it
happening
is.
in
Okay.
the bond market here over the last couple of days. And it's all basically happening
Alerting.
around the high for the yield
95, the
that goes with the election,
596.
which is right there in the center right of your screen, that big spike to 445. We got just a hair above it earlier today and then came back down in yield, up in price. And we
Okay,
also
get ready.
got Powell speaking too. So there's a bit of a balancing act. The trend still looks up and to the right for yields, but similar to how we're monitoring if the upside in stocks is plateauing, we're also monitoring potentially the upside in yields, maybe ebbing a tiny bit here as well. So nothing suggests change of trend from these main themes, but a little bit of a two-sided trade emerging the last couple of days. I got Kevin Hinks here with me in the studio, host of Fast Market. There's kind of a two-way Fed speak too, Kevin. I'm not sure if
596.
we're all on the same page, which we kind of already knew, but after the last few inflation prints, it seems even more so.
Jerome Powell's starting to allude to a stronger U.S. economy in his prepared comments.
That's why yields just ticked
right
up.
now, exactly right, because he basically said, Jerome Powell said Thursday, the strong U.S. economic growth will allow policymakers to take their time in deciding how far and how fast to lower rates. The economy is not sending any signals that we need to be in a hurry to lower rates. So there's that. It's a soft pivot, Oliver, but it's still a pivot to a different tone than we are in a rate lowering mode. So he said we are, and he says, the central bank leader, by far the best of any major economy in the world, talking about the U.S. economy. Specifically,
Because we can print money.
Well, despite disappointing job growth in September, largely that he attributed to storm damage in the southeast and labor markets. Non-farm payrolls increased by just 12,000. So he's alluded. He basically said the labor market's stronger than we think from that number because of the disruptions that we talked about in this network that might be happening. He said the overall U.S. economy is the strongest of the other economies in the world. Pretty solid statement. And like I said, a little bit of softening of the stance that we're in a rate reduction mode.
So no.
Okay. You know, the rate reduction mode we're in, but the pace at which we do it, the size, obviously we already went from 50 to 25, so they already had to dial it back after taking such a big first step. The December odds still looking pretty high, but the bond market is adjusting a little bit now. When he talks strong economy, that does get you thinking maybe we don't have to do that December cut. That's my view. I'm projecting a little bit. The market doesn't agree with me yet, but I think it's going to get there.
Here's this quote: inflation is running much closer to our 2% longer run goal, but it is not there yet. We are committed to finishing the job.
Yeah. All right, finishing the job. That sounds a little hawkish. Done? All right.
He wants to keep.
When he's just finishing the job, he's talking about killing inflation, right?
Let's go, baby.
He wants inflation down to the target. There's not going to be any 2.5 or 3, and mission accomplished thing. I think he is interested. Remember, I've always said this is a legacy event for him. If he doesn't get it done, his legacy is shot. I think he's focused on doing that, but he has lowered by 75 basis points. Maybe you lower and then pause and see if these numbers. Remember, Oliver, these numbers, whether we want to admit it or not, they're going in the wrong direction in terms of inflation. He's got to at least, bare minimum, address them.
Okay. I'm with you. It sounds a little bit on the margin, a little bit more inflation focused than some of the other stuff. Confidence in the economy, confidence that the aberrations in the data were hurricane and abnormal related things. That's it's moving bonds.
I think the labor market from 2 months ago caught his attention at 4.3% unemployment. Now it seems like he's shifting back towards a little bit of attention on inflation.
Yeah. No need to hurry the rate cuts. All right, here we go. Where are we at now? 72? Get that down. Get that number down.
E-minis have sold off about 1/8% since we came on the air.
Yeah, Russell not liking it, particularly Russell pulling back now. All right, good stuff. Nice, thanks for the chat there on the Fed stuff. I think that's pretty much the read. Nice job, Kev, looking at the language from Powell, connecting it also to the other Fed speakers we heard that were pretty open-minded to maybe a more balanced approach. Let's talk about imbalance for a moment, though.
How come I got 80? I should have got it cheaper.
Before we talk volatility with Jem Carson, Jenny's in the newsroom looking at Super Micro. When does it stop, Jenny? This is like, I understand that they've got their own specific issues, but like, this went from somebody messed up our taxes to like, what is this, Enron? Like, this thing's disappearing before our eyes.
I know, I feel like the viability of the company has been so quickly questioned on what was initially like maybe a tax mishap, and it is not looking like that at all. I totally agree with.
I'm the one, when everybody was pumping SMCI, I was the one that was saying, this is nuts. No one else would say it, but I did. It was up what, 2,000%? 3,000%? I'm gonna, if we don't hold this support, I'm gonna get out of this thing. I was the first one to short it.
Overblown, and there is still a major place in this AI market for this name. Has contracts with NVIDIA, AMD. That's one way to look at it. But I think that this is now an added risk because there could be 100% truth to this, or there could not be. And I just don't like the chances of either of those, outcomes. So, there's a time to be greedy while others are fearful, and there's a time to look at this and say, are we just seeing like a slow goodbye here? I hope not. I hope that this delisting fears are all that they are, but now there's just major volatility risks, and a name that's moving down 12% on the session on not really any financial or fundamental.
Delisting fears, where do you see that?
That's what I'm saying, pure free fall. It's like, what does the market know that hasn't come out yet? It's just to go from a hero. It's like, look, stocks blow up all the time, but to go from a hero to zero, and effectively, the speed that Supermicro has, while still in the midst of a secular trend that we've been told is purportedly strong.
I'm still here to say that this AI run is way overblown. Way overblown. Okay, I'm about ready to get out of SPY at 87. I need more. Come on, give me a little more. Break. This is a hard resistance to break. If it breaks it, it's an easy shot to the rest of the day up, to the upside. We got price divergence on our favor right now. Oh, here's this guy again. I kind of like this guy.
Hard. The market was overbought. A very quick move. Natural for it to go sideways and digest, even get a pullback like we just saw here.
those are going to continue to be buying
Opportunities.
Importantly, not only are they buying opportunities, the trend, which is likely to be slow at first, right, more of a grind higher during this period, will reemphasize vol compression during this time. And vol compression during this time at the S&P 500 level, ironically, should make the constituents, the actual stocks in the S&P 500, move away from each other more. I know that's very counterintuitive.
Dispersion. Even as vol's coming out. By the way, VIX
He's talking with his hands.
When you say vol getting compressed more, are you saying on the stock specific, index specific?
He's got Anthony doing it now.
Fixed strike at the index level, right? Vol is so well supplied that dealers are long gamma. And so every time the market moves, the market goes down, there's buying pressure. The market goes up, there's selling pressure. And that continues to reinforce lower and lower vol. And the dealers are stuck long. So then they try and sell it, which just pushes it lower and lower and lower. We saw this in 2017. That's the best historic example. We saw it again this summer when I called for the summer of George, right? You get this vol compression over periods which can last many months, clearly. That is an unnatural pinning that will eventually break. And when it breaks, it can break just like it did in August. It'd be pretty ugly. I would target something in Jan or February for it breaking. We don't have to worry about that now. For now, vol compression. Now, how do you play that other than just be short vol now? Well, maybe you want to be short vol now, long it later on down the road, so a calendar effect. Another way to play it is dispersion.
Okay.
And what does that mean? If the index is well supplied like it was in 2017, what happens is you get historic correlation breakdown. Why? Because by arbitrage constraints, the index can't move. But the single lists still have idiosyncratic risk.
There we go.
Things come out. Tesla moves 30%, right? There's an election. Certain stocks move. By definition, the index is pinned. Things have to move the other way. You can't have everything move in one direction, right? So you get correlation breakdown. Things start moving.
We have had, though, buddy.
They tend to be periods of strong rotation. We're likely
93.
to get very strong rotation in the next 2 to 3 months.
And are you viewing that then as more a function where the vol pinning is the cause? The vol
Old MacDonald had a farm, E-I-E-I-O. We're at 97 right now.
Have such power picking and choosing who rotates where.
Take a little profit.
The other, they are both.
Take a little profit, take a little profit, take a little profit off the table. Take a little profit, take a little profit, take a little profit off the table. Take a little profit, take a little profit, take a little profit off the table. 85 to 102. Randy? I did it again. How did I so? I did it again. I hope my love is not getting old. I'm gonna know. Da da. Get ready to sell it all. Ta-da! Out at 97. Whoops. What am I frickin' doing? Think. Gosh, I hope I'm not dying or something. I'm losing my mind. Shit, I didn't post that.
What's going to work, what's not going to happen, etc. Love it. Jim, good angle. Appreciate it.
Always a pleasure. Thanks for having me, bud.
Thanks, fun. All right, figuring out how the option flows fit into the mania of the, what did you say, pumper in chief? I won't use the term, but, well, because there's a sinker in chief too, and he tweets the negative way as well. Thanks, Jim Carson. When we come back, let's get into details on some stocks. Speaking of dispersion and equity-specific stories, we're going to go to earnings, taking a look at Upwork and how they fit into the labor market right now. We've got the CFO joining us after the report. Stock's been on a pretty nice run here the last couple months.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Shares of employment platform Upwork have almost doubled since the last earnings. We had another report in the last 2 weeks. Stock got up to 17 bucks plus after a low closer to 8 in the previous quarter. Joining us is Chief Financial Officer Erica Gessert is with us from Upwork, ticker UPWK. Erica, thanks for being here on the Schwab Network.
Thanks for having me, Oliver. Great to be here.
I think a lot of people generally know what you guys do, but set the stage for us, because there's one thing it seems clear you guys want to be distinct from is the notion of the gig economy. Tell me why that's not how you guys describe yourselves. How do you describe it?
Well, Upwork is the world's work marketplace. So we connect businesses with independent talent all over the world. We operate in 180 countries. We're enabling businesses of all sizes with over 10,000 skill types to get work done. And as you saw in our most recent earnings report, we had a ton of momentum and really think we're executing on all fronts.
How right now do you fit into some of the major employment trends where we've seen continuing claims rise on the jobless reports, but we've also seen that generally the backbone of employment has been strong. There's a lot of government jobs being added, but now there's this question about what's going to get removed. Like, how do you read the labor landscape right now?
Yeah, job openings are still, while there's been an uptick in the last couple months, they're still at, near a three-year low in a lot of job categories. And we actually see the macroeconomic environment being a pretty strong headwind for our customers and businesses across the board. It's a tough operating environment out there. Actually, if you dug into the exit polls last week, 76% of people said that inflation has negatively impacted their households.
Well, hell yeah.
And, we see the persistent ongoing high interest rates as really
if you don't have everything paid for and you don't have a lot of money in the bank, you didn't feel it. But if you have a family and you're struggling and you felt it. I did. I didn't, but I did because I have to go buy supplies all the fucking time. My supplies, I had a profit margin of 70% when I first started this business. Now it's down to 25%. 20 years ago, that's how bad it got. Obama about killed my business. Then we got Biden, he about destroyed it. I didn't get no layoffs during the Biden, but inflation of 35% killed me. My accountant, 100 to 150 in a year. That's just one bill. I just go down the list.
And so we're super excited about that. We plan to deploy it over the next couple of quarters. This is really a capital allocation strategy that we've been deploying over multiple quarters to invest in a focused set of growth initiatives on our platform, do smart, accretive M&A to enable our AI strategies and return money to shareholders. So we feel like we're doing all three and really executing across every area of our business.
Top line growth has been double digit for a while. Analysts are expecting some contraction over the next 2 quarters. Are they wrong on that, or why is that? Is there a seasonal element?
No, I think that, like I said, we're really proud of our execution in what's been a really tough macro environment for our customers. And really been able to outpace the rest of the staffing industry. If you look at the trajectory of the staffing industry, the first half of 2024, staffing was down 8% year over year. Our business was up 17%. So, while we continue to execute in the face of these headwinds and, there may be, some ongoing pressures, we think we've got a great long-term growth trajectory and we'll continue to outperform the rest of the industry.
You're impacted by a company called Objective. You mentioned M&A. You're doing the buyback, which is roughly, I guess, is it 100 plus 100 or 200? So it's almost like 10% of your market cap that you're buying back, firstly, just to make sure.
I think my accountant fees are up $600 this year. That's just one bill. $600. Up. Not.
quite a bit more.
Absolutely right, and I appreciate you noticing, Oliver, all the execution we're doing. You're absolutely right. We're growing our
Bloomberg in
business.
front of me. I'm cheating.
We're growing our business. We're buying these smart.
I went 18 years without an increase. Then all of a sudden, well, not 18. I mean, it was about 80 bucks when I first started 20 years ago. Now it's 150 a month. I can't figure out. I mean, this is too much stuff to try to do your own accounting. You got to have a professional go over it.
Building the most AI-enabled work platform in the world. Our strategy is to create the preeminent destination for AI talent and work, and we're doing that. The AI category on our platform was up 36% year over year. It's the fastest growing job category.
I don't even know what this cup does.
AI as a huge tailwind for our business and for our freelancers' livelihoods. To answer your question with regards to how we kind of make money on the platform, we charge a take rate to our clients and freelancers as they execute work on the platform, and so everyone kind of wins.
Got it. So then I guess the last question, full circle, is if there are a bunch of paper pushers from the government who get laid off, are their skills going to translate? I mean, I know it's kind of a speculative question to ask you, but.
I mean, look, we have 125 job categories on our platform. Everything from legal, accounting, consulting, over to the AI job category, design and creative. So, there's really something for everyone. We have absolutely every type of skill out there to enable businesses. So, I'm sure we can enable the skill sets of federal workers as they come into the market.
Okay, I'll be curious to see how some of that plays out. Thanks for your time, Erica. Appreciate it.
Yeah, great to talk to you, Oliver. Thanks.
Interesting, a lot going on from the financial side for Upwork. Trading $15. We'll pull back today after the ramp post earnings. When we come back, let's look at some options levels, continue our conversation. Started by Jim Carson, looking at some of the levels. The pin at 6,000, that is stretching a little bit here, but not too far in the S&P.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin. Tuesdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
S&P 500 down about 0.5% right now. We're getting a little bit dislodged from that 6K. Kevin Green joining me. It was so sweet, that 6-handle KG. Did we lose it already? Taste the fruit and it was taken away.
Well, we did fade here a little bit, Oliver, and we still have 30 minutes left to go in the session, so there could be some more downside action to take place here. Earlier this morning, we did see the 5940s kind of catching a little bit of a bid. I think they're the number 3 top traded contract on the day last time that I checked here, so that's something to kind of be mindful of. But we are holding this 5950 area for the most part right now. We have seen some buyers really kind of step in. But one thing to kind of note for today's session, you started seeing a little bit more erratic behavior when it came to price action. If you kind of notice the candles on an intraday basis, we started seeing some 8-point, 9-point swings or 10-point swings to really kind of engage within the session. And when we're looking at open interest, we're not too bad yet. We did get back into that, confirmed now we're back into that range we've been kind of talking about here, and we're testing the upper end of that 59.45 level. That's that negative gamma area. We want to see buyers really kind of stepping here. In here, we don't really want to break down too much more, because then that could also kind of accelerate some of the selling. As we can see, it's not only just the mega cap names that are out there, but also small caps, mid caps, and some of the other companies that are out there here. So a little bit of a pullback. One thing to also kind of note here from a technical standpoint, we brought up this chart a couple of days ago, Oliver, when we're looking at the candle structure. The reason why it's kind of a big deal is because it's the second election gap. We had that first gap to the upside on election night, or the day after the election, and then
magic singing. I love singing. I love la, you're so sweet with your honey meat. Next to magic singing, I love singing. I love you're so sweet with your honey meat. I want to lick your feet.
I want to lick your feet. What?
A little bit. I think it's bonds. Obviously, Powell's commentary today didn't help either, right? That's where we kind of see another flush to the downside. But you're getting, and I hate bringing it back to the politics and the news cycle, but the news cycle is also driving this. Defensives are selling off, when you're looking at defense stocks, right? The Lockheed Martins, the RTXs, they're selling off aggressively here today. You saw healthcare this morning selling off aggressively here today. So I think it's also kind of just this realignment. What's going to be next? A little bit of profit taking place here, but it's just the news flow, and that's what those intraday candles actually signify to me. Lack of liquidity kind of creeping back into the market, and then also this uncertainty, this gyration. Everybody's looking at the news flow, trying to see what the next headline is going to be, and unfortunately that does create a little bit more of an environment where we could have a pullback. Going into the close, once again, 59.50 we want to be able to hold. If we do not, 59.40, that's the kind of the line in the sand for me, Oliver, if we're going to continue to flush to the downside. And then obviously when you're looking at the resistance level, 59.80, you want to be able to try to retest that. It's going to be very difficult because of the selling pressure that we had for today. But who knows, if we get a really aggressive market on close order that shows aggressive buying taking place, we might have some short covering happening. Maybe some of those puts get closed out, and maybe that could also kind of spark a rally. It doesn't seem like it's going to happen right now, but that could also take place in the next 10 to 15 minutes.
Okay. All right, nice. So we're trying to hold that 59.50 basically, or else maybe we kind of break down one of those guardrails and we start veering a little bit, at which point it could accelerate, which kind of brings me back to our gem conversation earlier, which is we kind of look at these gamma things for potential levels of acceleration once we get through them. We haven't gotten through it yet.
No, we haven't. I missed that interview, but I'm sure he might have brought up volatility risk too, right? Vol is actually fairly low right now. It's actually relatively cheap. If you are, we kind of talked about it yesterday. If you're concerned about your portfolio, now is kind of the time to get into volatility. Even if we have the sell-off here today, the VIX last time I checked was only sitting at around 14 and a half. So vol is actually fairly low, but we know that it's a exponential type of indicator, if you will. So you could actually see it ratchet up fairly quickly. That can actually increase premiums. Increasing premiums can also lower the amount of trading that we see on the option side. And you have wider spreads, and it's a whole kind of catalyst thing. I'm not too concerned about it right now. We have some profit taking happening right now. If we keep at bottom end of that wedge, I think that's also constructive. So don't run for the hills yet, but we did see a nice little pullback and some breakdown when it comes to the technicals.
All right. Good stuff, like the specific candle work on the charts for the technicals, and of course also thinking vol. The last point is Jim is really focused on the year-end calendar, the kind of nature of rebalancing being a positive force and mostly vol compression. Do you think that there's epic power in the calendar, KG?
Yeah, definitely. I mean, you already see it when it comes to the VIX term structure. I mean, we've been eyeballing it for the last 2 to 3 months. That December is really cheap. You're also going to be in an environment where we have low liquidity as well. Low liquidity,
hopefully, I'll get this lung thing took care of.
Really aggressive to the upside or downside. And so, yeah, it gives you that environment to actually have a melt up. You have a rebalancing, maybe some tax loss harvesting in certain areas of the market. I'm always of the mind, though, if everybody's on one side of the boat, you gotta watch your back on the other side, right? And so what could actually happen that could disrupt that end-of-year rally, I think is something that everybody needs to probably put on the radar. And I go back to the notion that vol's still cheap. So if you are concerned, you can still have some upside potential, but maybe protect some of the downside risk in the event that we do have some form of a quasi.
Well, the Bears are in a little bit of control, but
now and the end of the year.
We'll just have to see tomorrow.
Nice work. Thanks, Kevin Green. Good perspective. Great stuff. Tying it together for us from multiple angles there.
Just think, we just had a beautiful week last week, and I think a lot of these guys didn't expect that run or that breakout. If Trump was elected, everybody was thrown off with this election, but me, and I was too. I said I couldn't decide. I did say that. I couldn't decide. First presidential election I couldn't predict. And I've been right on every single one of them. But I was definitely backing Trump. Now they're trying to steal Pennsylvania. I think is what they said. Meta fined $843 million over marketplace ads. That ain't gonna mean nothing to Meta. They're worth what, $20 billion?
So, what are you gonna ask the wizard for, Pixel?
Well, I'm not sure he's such a.
Oh, I want him to.
那个专门差距了啊，咱首先开始，1、2、3、4、5、
1、2、3、4。
左脚上步，然后侧点，前点，侧点，反过来，右脚上步，侧点，前点，侧点，然后向前迈2步，1、2，慢摇，开始蹲块啊，开始1、2、3、4，就正常摇就行。
1, 2, 3, 4.
然后转身看，平衡转180度看，1、
2, 3, 4. Ain't that hard?
反身还是平衡，别转多了。反身转过来，1、2、3、4，就这么平行转，要不你转过油了就不分方向了。然后到背上还是1、2、3、4、5、6、7、8，上步侧前侧，上步侧前侧，两脚顿住之后，1、2、3、4。1、2、3转，1、2、3转，千万别转过头，就是平衡转，180度平行转，然后还是正面这个30步，1、2、3、4、5、6、7、8、9、10、11、12、13、14、15、16、17、18、19、20、21、22、23、24、25、26、27、28、29、30，一定记住转圈，从地上那叫什么指，那个两脚指的太远，横着上去，再横着转回来，要不你转过头，前后你就晕了，就懵了。啊，一定要掌握创耳音乐来，
Done. Can you imagine that? Oh, God. These next 4 years are really gonna. Oh, it's gonna be fun. It's gonna be fun. Oh, it's gonna be fun. I didn't even think about that, you know. I have not been the happiest person in the past 4 years. Because I've always been the kind of a guy that says, if you fuck with my money, I don't want nothing to do with you. And so Biden gets elected, and my money was messed with. I'm glad Trump's elected because I didn't want to have to pay higher taxes. That's my big deal. These people on Wall Street should be very excited about that, but they're not. But that's kind of interesting here about Kennedy. Meta broke out. Eight more minutes. Up.
Part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. all so you can trade brilliantly.
All right, let's talk some big picture. Colin Martin here for the Bond Take, Director and Fixed Income Strategist. Mike Townsend joins us as we also continue our policy discussion. Afternoon, guys. This is a tough one today because it's like Powell kind of stole the story a little bit, but it's still kind of been like the Trump story. Get us going on the Powell stuff first, Colin. Did you hear anything notable today that maybe sounded more open to pausing?
Yeah, he certainly sounded more open to pausing. I think we'll still have to see how the data comes in over the next month or so, but the commentary that Powell provided was that it is going to be a bumpy road, and it's in line, I think, with other commentary we got from officials about what the path will eventually look like. But he seemed open to a gradual approach here, and that's the key term. And the markets really went with that, where we saw 2-year Treasury yields jump by 5 basis points or so, and we saw the implied probability of a cut next month fall from almost 80% down to just above 60%. So it's still more than above 50% right now, but it is a noticeable drop based on what Powell said. So as we look ahead for the next month or so, I think if we were to get a hotter than expected PCE print, which is possible based on this morning's inflation data, and then if we were to get a really strong jobs print for November, I think that could tilt the Fed to a pause in December, but again, it depends on the incoming data.
Okay. The pause and the patient approach kind of seems like we always knew that was going to be the case, but then when they actually talk about maybe pausing or being more patient, it seems the market kind of wakes up a little bit. I mean, bonds are a little changed, but they did flip. We're only 10 bips down, but we were getting a nice rally earlier, Colin, so like it's pretty notable reversal?
No, it's a notable reversal, but the way we're looking at it in the, let's say, weeks and months ahead is what does the upside look like? We saw this big jump over the past few months, or I guess just 2 months really, based on stronger than expected economic data, and then we got the additional jump after the election based on expected policies that should be inflationary. But a key point, and this is something Powell made in his speech today, is that we don't know what the impact will be of those policies. We don't even know what those policies actually will be, and the Fed can't worry about that right now. So if we look at what the upside for Treasury yields is, I mean, maybe it's a little higher. Maybe we can see things flirt with 5%. But in the here and now, we're seeing inflation that's sticky but not reaccelerating. And we're seeing a labor market that's softening but not necessarily weakening sharply. So I think that makes the case for just range-bound yields in the near term.
Okay. All right. Mike, as the managing director of legislative and regulatory affairs, you think you're going to be more on the regulatory side? Because where's the legislation? It seems like we're just letting Elon Musk kind of run by proxy right now. What's going on?
That's right, Oliver. I feel like I'm drinking from a fire hose right now. There's so much news coming every couple hours. Someone new gets named to a position. So it's quite a time right now. But, I really want to pick up on something Colin said, because I think that it's really important for investors to realize how long some of this stuff is going to take. I mean, companies want answers that they're just not going to get around things like tariffs, around deportations and immigration policy, around taxes. Tax policy is going to take months and months to sort out, from plan into actual legislation that can pass Congress. So, companies are going to...
They won't have a problem. Hey, guy, who controls Congress? Who controls the Senate? Who controls the presidency? He can get about anything he wants to go through. Period.
From the investing side, I mean, there's some big moves happening to the downside, to the upside, that the market feels very convinced about. What will be the timeline that would some of these pieces need to fall into place?
Nice breakout on my call in Meta.
Lasting or not, Mike? Like, how much does a traditional election cycle and inauguration cycle work here?
Yeah, you're in this kind of odd space, right? You've got about 10 weeks until Inauguration Day, and typically markets do well in that period between Election Day and Inauguration Day. I think some of that is just driven by the fact that the election is over and this big element of uncertainty that's been hanging over the markets for the last few months is done. we had a situation this time where there was an anticipation that it would take a long time to sort out, that there would be legal challenges. We just didn't have that, and I think we saw that certainly last week in the equities market, that kind of reaction.
Why did we not have it?
Now we're in a period where
landslide
there's plans being laid, and I do think the Trump transition team is much better than it was the first time around in terms of moving things quickly, laying out plans, getting things ready for day one. But day one is 10 weeks away. And then when you're talking about taxes and you're talking about some of these other
balling
things,
wedge on SPX into close, but I ain't messing with it.
Nothing happens fast. So you're talking, probably second quarter before you really know on where
too late.
These things are going. So I think it's going to be a while. Washington's a slow place by nature, even when people want to move it fast.
All right. Well, they are trying to cut a bunch of people along the way to maybe eliminate.
All right. I love debating these guys. I'm glad if I had CNBC on, they're going through over everything. I mean, everything that's coming up, they're going over it. There's an old term that I used to share, and that's called history repeats itself. History repeats itself. You can learn a lot from history. I was going to, if Kamala won, I was just going to keep my mouth shut for the rest of the time about anything about politics. And I was going to take the bureaucrat room out of here and everything. And just not even speak politics for a whole year. But I don't think that would have worked out too well. That's going to be an interesting pick right there. He wants to fire half of the squad. All that money saved of government waste. We got a message today. I've cleaned the IRS here. Government employees are some of the frickin' pickiest people you've ever seen in your entire life. I've not seen anything like it. So the men's restroom, the water's coming down a little bit too fast for the guy's hands. So I got to go in there and turn down the water pressure. It's been running like that for 13 frickin' years. So yeah, I'm going to get on out of here. Might take off half a day tomorrow. I got a couple things I got to do and I got to get them done, so I'll be sitting on my desk working business. I'll probably take off at noon. Have me a little longer weekend. So we'll catch y'all later.